एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल देखो, ये क्रूड ऑयल नेचुरल गैस न्यूट्रल बने हुए हैं। कल का ही लेवल है, कोई चेंज नहीं हुआ है। मैं एक बार फिर से लेवल बना देता हूँ दोबारा। कल यहाँ पर क्लोज हुआ था मार्केट, आज वहीं पर ओपन हुआ था। नेचुरल गैस में पूरा साइडवेज ही चल रहा है। अभी तक मोमेंटम आ जाना चाहिए था, नहीं आता है तो देखते हैं ब्रेक डाउन करता है तो। बाकी क्रूड ऑयल भी उसी सपोर्ट एरिया पे ओपन हुआ था, सपोर्ट लेके जा रहा है ऊपर को। बाइंग में हो तो होल्ड कर सकते हो। 12:30 लंदन सेशन ओपन है, 5:30 न्यूयॉर्क सेशन की ओपनिंग होगी। बाकी कोई डेटा नहीं है आज 7 PM पे यूएस मार्केट की ओपनिंग। ठीक है, एक बार लेवल को फिर से रिफ्रेश करके बना देता हूँ। एक सेकेंड, एक बार देखें आज वॉल्यूम है या फिर नहीं है फ्यूचर में क्रूड ऑयल के, क्योंकि कल हमने जो चार्ट यूज़ किया था वो करंट मंथ का ही था। नेक्स्ट मंथ में वॉल्यूम बहुत कम आ रहा था। लेट्स सी। नहीं, यहाँ पर भी नहीं है अभी भी। करंट मंथ का ही फ्यूचर लगा रखा है मैंने। नेक्स्ट मंथ का अब कल ही से लगाएंगे, कल मतलब मंडे से ही लगाएंगे अब। वैसे ये वॉलेटाइल ज़्यादा हो सकता है तो चेंज कर लेते हैं। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम। फिर में तो दोनों में ही वॉल्यूम नहीं है, ना अक्टूबर मंथ में है ना सितंबर मंथ में है। तो करंट मंथ का ही फ्यूचर लगाते हैं। नेक्स्ट मंथ में भी कुछ खास वॉल्यूम दिख नहीं रहा है, इवन दो एक्सपायरी हो गई है ऑप्शन की, बट स्टिल वी आर गोइंग टू यूज सेम मंथ फ्यूचर चार्ट। मैं एक बार रिफ्रेश कर देता हूँ लेवल को। ठीक है, तो करंट मंथ का ही लगाया है, दूसरे मंथ का नहीं है, एज द वॉल्यूम इज नॉट गुड। बाइंग करके बैठा हुआ है तो अपना एसएल जरूर ट्रेल कर लेना क्रूड में। ऊपर रेजिस्टेंस बहुत पास में ही है। ठीक है, वो कल वाला ही लेवल है, वही चल रहा है अभी। और टारगेट भी छोटा सा ही है इसमें, लगभग इतना ही रहेगा, इससे ज़्यादा नहीं। ठीक है, कल का ही लेवल है, याद रखना। कुछ चेंज नहीं हुआ है अभी क्रूड ऑयल में, लेवल्स में। इस तरह से कैंडल्स हो रही हैं तो वॉल्यूम कमी है, वेरी लो। लोगों ने बाई किया, अपना एसएल कॉस्ट पर रख लेना। दोबारा मत सेल बाई करना उस लेवल से। जाना है तो एक बार में चला जाना चाहिए, नहीं तो फिर, क्योंकि कल काफ़ी देर से यहाँ से ऑलरेडी बाइंग काफ़ी आ चुकी है। आई डोंट थिंक सो इट विल होल्ड अगेन। डीप लेवल से बाइंग करके गया है अभी अर्ली मॉर्निंग पे, ओपनिंग के बाद। यहाँ से वापस सेलिंग ही आनी है इसमें, फ्रॉम पर्टिकुलर दिस लेवल। लास्ट ट्रेडिंग सेशन है तो ज़्यादा रिस्क भी मत लेना, उतना ही लेना जितना ले सकते हो। करंट मंथ ही है। कल एक क्रूड ऑयल में ऊपर का लेवल था, वहाँ एग्जैक्टली आया ही नहीं, याद होगा। पीछे से रिटर्न कर गया प्राइस। वो लेवल अभी भी पेंडिंग है, वहाँ पर भी आना पेंडिंग है। इस लेवल के ऊपर ना एक कल एक मेजर रेजिस्टेंस लगाया था, वहाँ भी अभी तक प्राइस पहुँचा नहीं है। पहुँचा नहीं है क्या, कल आते आते रह गया कह सकते हैं। इस एरिया के आसपास प्राइस आया ही नहीं था, तो देखते हैं वहाँ भी अगर आ जाता है एक बार। दैट लेवल इज ऑल्सो वेरी स्ट्रॉन्ग रेजिस्टेंस जोन। मेजर रेजिस्टेंस है 5747 के अराउंड। बाकी क्रूड ऑयल अगर इस लेवल के नीचे सस्टेन करता है, ब्रेकडाउन में अगर आ जाता है प्रॉपरली, नीचे फिर लेवल थोड़ा डाउन साइड पे रहेगा अप्रोक्सीमेटली 5467 के अराउंड। ये भी लेवल सपोर्ट स्ट्रॉन्ग है नीचे। लेवल होल्ड नहीं करता है तो फिर प्राइस को यहाँ तक गिरना चाहिए लॉजिकली। नेचुरल गैस का भी ध्यान रखना, 23rd को इसकी भी एक्सपायरी है। प्रीमियम डीके बहुत ज़्यादा हो रहा होगा वैसे भी अभी। एंट्री नेगेटिव आई थी, थोड़ा बहुत गिरा था नीचे, एग्जिट बीच वाला सपोर्ट ब्रेक कर दिया था, लोअर एंड वाले सपोर्ट पे होल्ड कर गया था प्राइस। यहाँ पर इस सपोर्ट में, सपोर्ट एरिया के अराउंड ही है नेचुरल गैस भी, यहाँ से एक बाइंग इसमें भी प्लान है। एक सेकेंड, अच्छा सपोर्ट है, कल वाला ही सपोर्ट अभी भी ठीक ही है इसमें। इसमें भी एक बाइंग का प्लान है यहाँ पर। एक बार आई है बाइंग इसमें, सिर्फ एक बार ही कहेंगे इसको। काफ़ी है, बड़ा हाई है, कल से उसी सपोर्ट पे रुका हुआ है। लॉजिकली तो बाइंग इसमें भी आई जानी चाहिए थी, इसको बना ही लेते हैं। एक सेकेंड, ये कल वाले सपोर्ट पे रुका हुआ है। यहाँ से एक बाइंग कैंडल ओपन इक्वल टू हाई बन गई है। लास्ट कैंडल ठीक थी, न्यूयॉर्क सेशन, लंदन सेशन की कैंडल इज गुड, नॉट दैट मच बेरिश। ओपन इक्वल टू हाई भी नहीं थी, नॉर्मल कैंडल ही थी। तो एक बाइंग यहाँ से प्लान करते हैं, इसमें और कुछ तो कर नहीं सकते अभी, देखेंगे ब्रेकडाउन होगा तो। टारगेट भी देख लेते हैं पहले एक बार। ये सपोर्ट पर ही है, कल से रुका हुआ है, ये कल ही आ गया था आई थिंक। ये क्रूड ऑयल का तो आज आया था, ये कल ही आ गया था क्लोज होने से पहले। आज अर्ली मॉर्निंग भी वहीं पर था, ओपन इक्वल टू हाई बनाई, वहीं पर रुका हुआ है ऑलमोस्ट। मॉर्निंग से कह सकते हो 3 घंटे से तो वहीं रुका हुआ है। सो इट इज़ ऑन सपोर्ट एज वेल, ये भी सपोर्ट पर ही है। थोड़ा एसएल का ध्यान रखना, नॉर्मली तो मोमेंटम आ जाना चाहिए था जैसे क्रूड ऑयल में आया है। एक बार बाइंग आ चुकी है, दूसरी बार ही है बाइंग यहाँ पर, ये दिस इज सेकेंड टाइम। जितने बायर बचे हैं इस बार में आ जानी चाहिए एक बार में ही। फंसता हुआ लग रहा है नेचुरल गैस यहाँ पर। थोड़ा सा रिस्की ट्रेड है ये नेचुरल गैस वाला, तो ध्यान रखना इसमें। जिस तरह से कंसोलिडेशन हुआ है, नॉट गुड। तो थोड़ा सा रिस्क नहीं ले सकते हो, मत लेना इस ट्रेड को मेरे अकॉर्डिंग तो। ये थोड़ा सा ना बहुत बहुत ही टाइट रेंज के अंदर है, प्रॉब्लम क्रिएट कर देगा। तो एटलीस्ट 260 के ऊपर क्लोजिंग आती है प्रॉपरली, तब एक पॉसिबिलिटी है डे हाई के ऊपर। नहीं तो हो सकता है साइडवे चला जाए, फिर ब्रेक डाउन ही करे। तो थोड़ा सा कंसोलिडेशन में ठीक ही है इस वजह से। थोड़ा सा रिस्की ट्रेड है, जो लोग लेंगे थोड़ा ही अपना एसएल का ध्यान रखना, क्वांटिटी कम ही रखना। फिलहाल रिस्की लग रहा है, सपोर्ट है, ब्रेक नहीं हुआ है जब तक, तो मानना ही पड़ेगा सपोर्ट, या तो फिर थोड़ा वेट कर लो। इसके नीचे हाँ, इसके नीचे एक और सपोर्ट है, वहां पर लें तो। एक सेकेंड। यहाँ पर भी आया, यहाँ पर मत लो, इसको मत ही लो, नेचुरल गैस को छोड़ दो। इसके नीचे एक और सपोर्ट है ना, वहाँ चले जाते हैं। वो थोड़ा सेफ लग रहा है मुझे, इवन तो अभी ये सपोर्ट ब्रेक नहीं हुआ है, बट यहाँ पर जिस तरह से कंसोलिडेशन हो रहा है, ऐसा हो सकता है कि ये थोड़ा सा एक और बम दे दे डाउन साइड की ओर, और फिर पुल बैक करे, उसमें अननेसरी एसएल चला जाएगा, तो थोड़ा सा और नीचे का ही वेट कर लेते हैं, यहाँ लेना। इवन हो सकता है यहीं से रिवर्स करे, बट यहाँ मत लेना मेरे अकॉर्डिंग। यहाँ रिवर्स करेगा तो फिर हम वेट करेंगे कि प्राइस पहले 260 के ऊपर कहीं क्लोजिंग दे दे, और फिर नीचे आए, फिर बेस्ट के सिनेरियो तो कि नीचे ही आ जाए डायरेक्टली। ठीक है, ये नीचे वाले लेवल से लेना, ये नॉर्मल रहेगा। यहाँ पर भी प्राइस, क्योंकि दो दो सपोर्ट साथ में बने हैं, एंड ये सपोर्ट पे भी प्राइस एक ही बार आया है, एंड एक्सटेंडेड गेन होना पेंडिंग है यहाँ पर अभी भी, जितना मुझे दिख रहा है। बाकी यहाँ पर एक सेलिंग भी बन सकती है, बट वही है कि उसमें इतने छोटे टारगेट के, छोटे टारगेट के लिए जाना सही रहेगा भी नहीं। सो इस ट्रेड को प्लान करना ये नॉर्मल है। क्योंकि यहाँ से अगर बम्प करता है प्राइस, तो कोशिश कर सकता है एक पहला जो सपोर्ट है उसका ऐसा हिट कर दे, नीचे से बाइंग आए और फिर ऊपर की ओर जाए, तो यहाँ जो ये रेजिस्टेंस पे सेलर बैठे हुए हैं, इनका ऐसा हिट करके थोड़ा ऊपर की ओर बम्प चला जाए, क्योंकि ऐसा भी नहीं है कि डायरेक्टली यहाँ पर बाइंग में सीधा चला ही जाएगा ऊपर, अनटिल अनलेस प्राइस क्लोजिंग नहीं देता। चला जाना चाहिए था, क्या पता गया हो फॉरेक्स में, वी डोंट नो। एमसीएक्स में तो नहीं गया है। ठीक है, तो मैं इस लेवल को रिमूव कर दे रहा हूँ। इस लेवल पे भी तीसरी बार आ रहा है प्राइस, और लास्ट टाइम लोअर हाई बना है। लेट्स सी, थोड़ी बहुत तो बाइंग जरूर है। ऊपर अगर ये 260 के ऊपर सस्टेन कर गया ब्रेकआउट करने के वक्त, तो फिर थोड़ा बड़ा टारगेट रखेंगे। प्रॉब्लम आती है ना तहाँ पर जहाँ पर प्राइस सपोर्ट रेजिस्टेंस बहुत नज़दीक नज़दीक क्रिएट कर देता है, वेरी, तब ऐसा लगता है कि सपोर्ट से बाई करें या रेजिस्टेंस से सेल करें। क्रूड का भी वही सिनेरियो है। इसके सिनेरियो रहता है कि थोड़ा सपोर्ट रेजिस्टेंस दूर दूर बने, सो दैट स्पेस हो हमारे पास। साथ भी वही हो रहा है, क्रूड भी नीचे सपोर्ट है, वहां से बाइंग जरूर आई है, ऊपर रेजिस्टेंस है तो प्रेशर कंटिन्यू बिल्डअप है ऊपर से, अनटिल अनलेस कोई बड़ी फोर्स प्राइस को पुश नहीं करती। वो मोमेंटम देखोगे, इवन दो लुक एट द 15 मिनट कैंडल, ये 15 मिनट का चार्ट है, 15 मिनट में ही कैंडल गैप अप गैप डाउन है। अगर मैं 1 मिनट का चार्ट में कन्वर्ट करूंगा तो यू कैन सी कैंडल ही नहीं बन रही है, देख रहे हो, डॉट 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 डॉट, मतलब वॉल्यूम ही नहीं है। बहुत ही मिनिमम ट्रेडर्स आर ट्रेडिंग राइट नाउ। ट्रेडर्स मतलब मैं बड़े प्लेयर्स की बात कर रहा हूँ जो मार्केट को मूव करा सकते हैं। एक्सपेक्ट है 12:30 हो गया है तो वॉल्यूम थोड़ा सा क्रिएट करें, आ जाएं लंदन सेशन वाले ट्रेडर्स, नहीं तो फिर शाम को न्यूयॉर्क सेशन के बाद ही मूव करेगा प्राइस 5:30। इसमें क्या करने के मूड में है? यहाँ से नीचे आता है तो एक और रेजिस्टेंस क्रिएट हो जाएगा। सिचुएशन बन रही है, यहाँ से अगर थोड़ा सा और नीचे आता है नेचुरल गैस तो हो सकता है एक नया रेजिस्टेंस ही क्रिएट कर दे, बट दे वांट टू डू नाउ। इतना नहीं है गाइस लाइक करने में, लाइक भी करते रहो सभी लोग, कम ऑन।
Paid all the time now. Well, every 2 weeks.
Or Molly, who just went from freelance to full-time, just for you.
I just really believed in the vision and the dental.
Your latest hire, Tomas, who works from home in Chile.
Hello.
And Max, who's always late.
I am not always late.
We do your human resources right, so you can do right by your people.
Hey, thanks for coming.
Just works for your people.
Moderate long-term yields. Surely it has to start ringing alarm bells for bondholders.
This is tricky because if you ask Jerome Powell what the mandate is, he tells you it's dual, it's inflation, and it's the labour market. So this new interpretation of a different sort of yield curve focused mandate, I think, is something that people are finding difficult to wrap their heads around. Just look at the Bank of England this week. They're implicitly doing exactly the same thing. There's no reason for them to be slowing the pace of QT from a monetary policy standpoint. Inflation is high and, like the US, is headed higher. And so we know implicitly the bond market has been quite happy to see a central bank which is on its side helping to smooth some of that volatility at the long end of the curve. The more explicit you try and make that, the more worried you become about a central bank which really is being threatened in terms of its independence, and that therefore becomes bad news for the long end, even if that really is the target.
Yeah, for the BOE, it was the QT part that was the actual exciting part yesterday, not the rate decision itself. I know that they're saying that there's a high bar to make a change like this again, but does it mean in future that every September, when they come up to review this strategy, it becomes a massive risk event again?
I think that's the challenge. And let's be clear, the job of the central bank is to control inflation, in the case of the Bank of England. For the long end of the curve, it's fiscal policy that needs to be in a stable enough position to not see the gilt market overreacting. Because I think if you take a step back, we're in a world where the bond market is the only disciplining force on government spending. Just look at France recently as another example where the government can't decide how to deal with the deficit. The electorate hasn't given them a message as to how to deal with the deficit. A new prime minister facing exactly the same problem as the last one, and therefore where do you turn? OATs to tell you what the government can and can't get away with.
But the discipline isn't working, Hugh. This morning we've got these figures from the UK saying, you know, the budget deficit overshooting the OBR forecast yet again. In both the UK case and the France case, what's it going to take to kick these governments into line?
I think what this all leads to is more repeated bouts of bond volatility. And ultimately, there's going to be a kind of shift in the spotlight. I think, as you say, France is the current focus for the bond market. It could well be the UK as we move closer to the November budget. But for bond investors, this is a really interesting environment because it means that you will see these periods where yields widen out quite quickly and you're going to have to be very nimble to handle what that means from a duration perspective. But then again, opportunities to lean back in when the bond market wins, because we think ultimately the bond market will win. Just ask Liz Truss. The UK government saw that very clearly with the move that happened in gilt yields. Again, April Treasuries is the same story everywhere.
Tech's not telling me the bond market's going to win right now. It's exploding. Yesterday's moves, you saw them. Tech is not telling me that long-duration assets are going to be a problem. Tech's telling me we are off to the races here. 30% on Oracle, Intel's up 20%. Is it starting to feel irrational? Do the two things, the tech moves and your concerns about what is happening with deficits in the long end of the bond market, they don't fit together, or do they?
But I think the way that you can tie them together is the earnings story.
Okay.
If you're looking at tech and saying we should be liking long-duration assets because yields are coming down and therefore we can see valuations expand in the kind of old-fashioned style, that no longer works. To be buying tech at these levels, you have to be utterly confident on the earning profile of these companies ahead. I also think when you're kind of questioning how do you diversify against some of these tech moves, if you are getting worried about lofty valuations, what has changed really clearly this year is the ability to shift from the mega caps in the US to the broader S&P 500, because tech spending itself is holding up the economy here. You look at the contribution that it's making to GDP. We've got new charts going into the Guide to the Markets in a couple of weeks' time looking at industrial production. It's all tech. So if that falters and tech spend falters, the rest of the economy falters.
Is this tech spending going to deliver? Is it going to deliver a rate of return commensurate with the kind of scale and the requirements that we're talking about? Is there a moment coming when you go, actually, I don't think my ROR on this is going to be high enough, and I certainly can't bolt on a margin to it?
We don't know, I think, is the true answer.
Wow,
I don't know who knows the answer to that question about really, in 5 years' time, whether we're looking at game-changing productivity from these tech names that can justify the current valuation. Well, let me put that in a slightly different way. What we're seeing in the interim with companies trying to work out how to use this technology is that they need to spend now to understand the implications to their businesses. That's what's different about the AI boom here, that you're seeing spending pick up across all other parts of the economy, not because businesses are utterly confident that this is going to work, but because they need to be spending to find out the answer to that question. And so that's why I think you're hearing from Microsoft and Meta, we're still going, not because anything's changed in the past few months to say we now can answer this question of really, is AI a game changer or not, but because in order to answer that question, spending's booming across the economy.
Hugh, I'm going to have to stop you before you scare Guy anymore. Spend and see what happens. The message from Hugh Gimber, global market strategist at JP Morgan Asset Management. Always a pleasure, especially on a Friday, Hugh. Thank you so much. Well, in the spirit of the weekend, next up we're going to be talking football, women's football, scoring some of its biggest wins. We're going to be joined by Mercury 13's Victoire Reynal to talk about their latest deal next. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We're 46 minutes into today's cash equity session here in Europe, and it's looking like a fairly positive one. We're going to end the week on a strong note. European equities have outperformed their U.S. peers this week. The outperformance, at least today, across Europe happens to be in the CAC 40 France. The index there up 0.6%, led by some upgrades from Goldman Sachs when it comes to Airbus. Also some strength in the French banking sector this morning.
I know what I'm doing this weekend. London Fashion Week.
Are you dressing up for it, Guy? What's your outfit?
I'm not sure you do outfits for fashion.
I don't know why you're mocking it. It's serious business.
I know, of course it is. I'm laughing because I'm the least fashionable person known to humanity, so I'm just kind of, that's the joke, really. The Great River Race is on. I think it's Ketchers. We were trying to debate what kind of boats they are. It seems like there's a multitude of boats going to be in this race. The Berlin Marathon is on. Oktoberfest begins as well. I know it's still September, but we begin early. It's good to get these things underway. And the Women's Rugby World Cup semi-final is taking place. I think it's the Kiwis and the Canadians
playing today.
France versus England. Women's Rugby World Cup final. It's been a slow burn, but actually it's getting really good now.
Should we talk about another shaped ball? The football.
Is there any other shaped ball? As a rugby fan, I'm not entirely sure. We can talk about football if you want.
To the round ones now. Women's football booming. Investors taking notice. Mercury 13, a group co-founded by Victoire Reynal, has acquired a majority stake in Bristol City Women's Football Club after earlier buying FC Como Women in Italy. Now, the group says that the owners need to invest in performance and infrastructure to unlock the commercial viability of women's football. And I'm pleased to say we're now joined by Victoire Reynal, co-founder and co-CEO of Mercury 13, hot off the deal. So congratulations on it. This is serious business when it comes to football, women's football in particular. What's your goal with this deal?
So we launched this company 2 years ago with a very big, ambitious goal of building a portfolio of women's professional football clubs starting across Europe. We did a deal in March of 24 with Como Women, took a majority stake there, and our priority market had always been the UK. We've mapped the entire 3 tiers of football here and found Bristol City Women as the perfect target for our group.
Well, the big question now is how women's football is going to make money. What's your plan? How are you going to raise revenues at Bristol City Women?
It's an incredibly important moment for women's football for that same reason. We are very focused on making sure that there's a path to financial sustainability to ensure that these clubs don't depend on whether it's a men's team or a government or a federation or any type of subsidies, and that happens through commercial growth. We want to attract more sponsors, we want to grow audiences, we want to fill stadiums, and that's our plan for Bristol.
When it comes to evaluating other teams you might want to purchase, what is really, I guess, the key asset you go for? Is it a fan base? Is it a key player on the team? Or is it perhaps connections to a men's team and an awareness about a brand? What is really the thing that stands out for you in probably your next acquisition?
It's always about the commercial potential. So is there something that we can work with on the ground that can help this club grow into a much bigger stake, essentially? We also look at the academies and the infrastructure around grassroots. We look at the location. We look at the league as well. That matters quite a lot, right? Here in the WSL, we have a fearless leader in Nikki Doucette, and that gives us a lot of comfort knowing that as the club grows, then the league around it grows as well.
So I've read that most women's teams are either mostly owned or significantly reliant on men's club. Is the dream of women's football in your mind one that is separate from the men's game when it comes to the commercial stake?
Absolutely. It's a different product, it's a different audience, and it needs dedicated resources.
Why did you go for Bristol? Why not go for a bigger team?
Bristol is a huge
I'm a big fan of Bristol, but kind of what is it about Bristol that made you want to go for that team? What is it that ticked all the boxes rather than going for one of the more, to Val's point, one of the teams more associated with the men's game, therefore has that kind of cachet that goes with that? What was it about Bristol that turned your attention down to the West Country?
It truly ticked every single one of our boxes. Firstly, we had a great partner in the Lansdowne family. They were open to understanding and building a deal that has no precedent in the UK. It is the first time that we're giving operational and commercial control to the women's team separated from the men's team. And so we had that. We have incredible infrastructure over there. So Ashton Gate Stadium, 27,000-seater stadium that has just had a 50 million refurbish into it. The Robbins High Performance Center, which is the training grounds of Bristol City, are also incredible, and our players will continue and remain playing there. They have a top-tier academy.
So do you have to put money in? Like, it sounds like all the kit's already there. Do you have to, how much do you have to invest over what kind of a time frame? Or is actually all the infrastructure you need to make this work already in place?
Well, the way that we work at Mercury 13 is that we come as a majority owner, so any expenses that go through the team are our responsibility, but also any revenue that's generated is our responsibility.
But so how much do you think you're going to have to put in?
To get promoted.
Yeah, that's a good point, yeah.
That's a great point. So as of this season, the regulations have changed, and 3 teams will be promoted into the WSL. It has been 1 only historically. Bristol City had stayed in the WSL for over 10 years, so it's a team that belongs in the top tier of English professional football, and that's very much our goal here. So in the next season, we've already brought in a very strong team. We have the ex-captain of Barcelona, Vicky Losada, on the squad, and we're gunning for that promotion.
But we want to know the numbers, how much you're putting in, and if you can't tell us that, what's the time frame? When does this investment become profitable?
Well, we are a long-term investor. We're here understanding that the sustainability of the game is one that may take time, but we're accelerating every possible part that we can. We've already done it with Como Women in the last year. We've done quite a lot there.
Yeah, so if we look at Como, how much has Mercury 13 increased the revenue there?
By a lot. By a lot. I can't share the numbers, unfortunately, but it's a team that was virtually unknown and now has the most famous women's footballer playing on it.
Can I ask about fashion? Guy's favourite subject. No, only because...
No, actually, I was looking, funnily enough, I was looking at the Cuomo website, and
did they stand out to you?
Selling gear is obviously a big part of this story.
It's Milano. Look, I have to ask, because your background is fashion, what have you taken from fashion business that you're applying to football business?
I think the fashion industry has always understood how to sell products to women, and this is what we're trying to unlock here with football. We believe that women are going to be the next consumer of the sport, and we need to speak in their language in ways that they understand it, that they feel identified. And that's what we did with Como Women. We built a brand that was built for women, by women, and obviously we leaned a lot quite into the luxury and the fashion aspects of it.
All right, thanks for joining us. That was Victoire Reynal, the co-founder and co-CEO at Mercury 13, walking us why she's bullish on women's sports. Well, let's look ahead to what could possibly keep us chained to our desks later this afternoon, and that's this Trump she call taking place at 2 p.m. London time later today. Are we going to get any incremental information about how these 2 massive economies are going to be
How
working
does Trump
together?
spin this, I think, is my key question. Because he's got a number of different competing audiences that he's got to be thinking about, one of which is definitely Congress. Does he walk away from a deal if he doesn't think he's going to get this through Congress in terms of allowing the algorithm, the TikTok algorithm, to be controlled by America? Because that's what the legislation talks about.
Look, I think in my mind, maybe we're not going to hear it very much today, because if they end up agreeing on something instrumental, surely that's something they want to meet face to face and then announce in big fanfare.
This has got to be the precursor. You've got to...
Yes.
You get this out of the way, you can talk about the other stuff, but I think you need something, progress, to get you to that meeting that's going to take place in October.
So basically TikTok unlocks trade.
Yeah.
Nvidia.
Precisely. Positive momentum takes you into that more difficult conversation, which maybe comes further down the road.
Look, the other thing I want to bring up is that Stephen Myron, the new Fed governor, Trump's pick as the new Fed governor, will be speaking to media later today. It'll be very interesting, as he does speak to the media quite often, but this is the first time he is speaking to media as a Fed governor. Will he tell us any juicy gossip about how that meeting went down?
It's Waller and Bowman I want to hear from.
Yeah, I would agree with that, actually.
Yeah. I know what
Myron's
Myron
quite
thinks.
straightforward.
Yeah.
Isn't it quite straightforward? Yeah, I want 50, I want to see rate cuts. My boss has told me that I need to do that, so that's what I'm going to do. Is he independent? I think that would be the first question I would ask him. Did you have any instructions? Did you have any messaging coming from the White House?
Why didn't you go for a bigger?
No, but maybe, hearing from him on whether he was able to persuade Bowman and Waller, and what maybe the roadblocks that he was pushed back against on.
Isn't the story that they didn't, that they went with the consensus?
Well, yeah, but maybe there was a reason behind that.
You think in terms of the coordination between them, or?
Well, we haven't heard from Waller in quite a while, as you mentioned, but we've had, a back and forth when it comes to jobless claims, both issues being with fraud, but still looking like the jobless claims are holding in well, and also a strong retail sales. Perhaps that's what changed his mind on this decision, and maybe Mir give us some color on that.
Well, has he given up on the job and he doesn't feel the need to bow to pressure?
I'm ready for the weekend. I'm pretty much done. It's felt like a long week. There's been a lot of kind of information that has come through this week. The Trump visits, that's been like Lizzie's kind of frowning. Definitely roiled out. It's been a big week on that front. Anyway, there's been central banks, there's been massive tech moves. We're going to pull it all together though for the weekend. The Bloomberg Weekend newsletter will be with you. Collection of interviews, ideas, stories to explore, some thinky pieces basically for your weekend. Have a great weekend, folks. We'll see you Monday. This is Bloomberg.
In the last few months, there has been a lot of uncertainty, both on the geopolitical and obviously for the economy with the tariff. There's been a silver lining, especially in this region, around these events. Currency and bonds have been attracting a lot of attention in terms of performance. In general, it's been a pretty good performance for equities. And going forward, I will definitely remain positive around the Asian assets.
Connecting the dot between what's at stake and what is possible.
Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it, on Daybreak Europe. What does it mean if you're an entry-level coder? How much trouble do you think you're in?
Everyone in the age of AI really have to relearn which tool to use when. And if you are technical, you know how the coding works, you're actually more productive with Lovable. Anyone can learn how to be productive talking to the AI, but there's an advantage for technical people.
Don't miss Daybreak Europe live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Used to be one would say, what's that got to do with the price of tea in China? When they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
TikTok's fate and trade tensions loom as Presidents Trump and Xi prepare to speak later. This as Trump expands his war on the US media. A record-breaking global stock rally cools after the Bank of Japan's decision to start selling its massive ETF holdings. Rates are left on hold after a split decision at the BOJ. Plus, gilts and the pound fall after UK government borrowing comes in significantly higher than forecast in a new blow for the UK Chancellor. So we focus in on the cross-asset moves, of course, after a head-spinning rally for US equity markets yesterday. All four major indexes, including the Russell 2000, hitting fresh record highs yesterday. That's the first time we've seen that since November of 2021. Today, a little bit more muted, looking for the next catalyst, maybe just digesting the gains that have come through following that 25 basis point cut from the Federal Reserve. S&P futures, S&P evenings currently pointing lower by 0.1%. The US 10-year at 4.12, a move higher in yields of 2 basis points. A little bit of selling coming through from Treasuries. We had jobless claims data coming in slightly stronger than expected yesterday. Japanese yen in focus, of course, the BOJ standing pat, but it's the ETF unwind that has really grabbed the market's attention. 147 closing on 148 right now for the Japanese yen, and the pound at 134, close to 135 on that budget blowout. Over the last 5 months, coming in higher than expected, about £11 billion higher than the OBR had forecast. The pound then down 0.5%. Let's see how the equity story is filtering across the region then. Again, after gains of around 0.8% by the end of the close on the European session yesterday, the UK, the FTSE 100, is up 0.1% today. So there are some modest gains coming through here in the UK. It's a stronger session over in France. CAC current is up 0.7. Over in Spain, gains of 0.6% on the IBEX, and the DAX in Germany up 0.3%. On the upside across your sectors, near the top of the list is autos, near the bottom is media. That is the regional move. Let's get the details now, get the analysis, get to these interviews across the show. The poll starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning. Happy Friday. Welcome to The Pulse. I'm Tom McKenzie in London. US President Donald Trump could ease trade tensions with his Chinese counterpart Xi Jinping today while determining the fate of TikTok. A framework agreement would shift control of the social media's app's US operations from its Chinese parent ByteDance to a consortium of American investors. They're due to speak, the two presidents, at 2 p.m. UK time after more than a year of negotiations. Bloomberg's senior Chinese economy and government reporter James Mager joins us now. What are we expecting? What are you and the team looking for, James?
I mean, obviously, as you said, TikTok is apparently going to be the primary focus of the talks that are going to happen in I guess, 5 hours from now. And hopefully, I guess, for TikTok or for ByteDance, the owner of TikTok, there will be a deal of some kind which will give it some surety and clarity in how it's going to continue to go forward with its business in America. There may also be other topics of conversation, though. Obviously, Nvidia has been in the news recently, with the Chinese both putting an investigation on to their what they claim to be anti-market activities, blocking their exports of chips. There's also the question of soybean exports. The US hasn't sold any soybeans to China, even though the soybean marketing season has now started. There's also the perennial question of tariffs. Will tariffs stay the same? Will they be lowered? What's going to happen on fentanyl tariffs? So, I mean, yes, TikTok is obviously going to be the primary focus, I think, of people as they're listening to all what's happening on the call. But there is so much other things, so many other issues and points of tension between China and the US right now.
OK, Bloomberg's James Mager joining us, of course, on the ground for us in China with what to think about ahead of this call between the two presidents. TikTok just one element, of course, in terms of the source of tensions between those two nations. Now, Intel shares, technology is certainly a question mark as well in terms of US-China trade relations. And Intel shares soaring yesterday after Nvidia agrees to invest $5 billion in the chip maker. Nvidia's CEO, Jensen Huang, says the deal presents an opportunity that could be worth $50 billion a year for both companies.
We thought it was going to be such an incredible investment. This is a big partnership, and we think it's going to be fantastic for Intel. It's going to be fantastic for us. And we're building revolutionary products that's going to address some $50 billion annual market. And so how could we, on the one hand, be excited about the products and how revolutionary they are, on the other hand, not be excited about the opportunities ahead? And so we're delighted to be a shareholder. We're delighted to have invested in Intel. And the return on that investment is going to be fantastic.
Let's bring in Bloomberg Intelligence senior analyst Rob Lee joining us for the context around this story. Rob, was this a political investment from Nvidia or a business decision?
Okay, well, I like the way that Jensen sold it to us, because don't forget, he's a great CEO, you know, a fantastic engineer and a superlative salesman. So I think the share price reaction says it all, really. Nvidia's stock was only up 3.5%. So it did rise, but the reaction on Intel was much greater. So this move certainly helps to shore up Intel's finances. Don't forget as well, I think the US government put in $5.7 billion US recently. We saw another $2 billion come in from SoftBank. So at least that helps stabilize the business financially. But the major question here is about their growth outlook and, you know, what strategic direction are they going to take? And I think on that front, there remains, you know, very large uncertainties. And to answer your question, yes, absolutely, there must have been some backroom maneuvering. You know, President Trump and the White House tried to pull a few favors, because obviously Intel in years gone by was the stalwart of the US semiconductor sector, and given the backdrop of geopolitics, obviously even under the Biden administration, the US is trying to bolster and rebuild its semiconductor sector, and Intel really does lie at the heart of this. So financially, at least the business is secure. It's been thrown a lifeline, but where do we go from here? Are they going to pursue the foundry line? That's going to be difficult with TSMC as the main competitor. Intel's lost the technology lead there many years ago. I would say probably on balance, they're more likely to go down the design path. And then maybe that's why, from a business point of view, the likes of Nvidia are showing some interest. But again, $5 billion is, I don't know about chicken feed, but it's you know, it's a relatively small monetary investment, given Nvidia is almost quite literally printing money at this point.
Yeah, for Nvidia, it's almost a rounding error, isn't it, in terms of this investment? But it does tell a broader story in terms of the alignment now when it comes to the semiconductor space and the role of the Trump administration as well. Rob Lee, thank you very much indeed. That's a story, of course, we'll continue to monitor, whether they do build out those foundries and whether or not they can secure some major customers as well for the foundry business. Now, to the UK, where the deficit has come in much higher than expected. The pound falling, gilts selling off. Let's bring in Alex Brazier, Investment and Portfolio Solutions Global Head at BlackRock. And Alex, given all of your wealth of experience, what a fantastic day to get you in on, even if it's a challenging day for the UK when it comes to the debt load. What kind of position do you think this puts the Chancellor in right now? How would you characterise the depth of the challenge?
I think it's a reasonably big challenge, but I don't think today changes it a huge amount. You know, the Chancellor was already facing something that a lot of governments around the world are facing, which is G7 rates have risen a lot over the last few years, and countries like the UK are now having to respond to that, because the fiscal dynamics mean effectively need a smaller primary deficit than you used to run to ensure fiscal sustainability. And that was always going to require difficult political choices. Now, what's really interesting to me, I think, is that actually the market isn't really questioning the credibility of the fiscal regime. The more interesting development over the course of the year, which is also difficult for the Chancellor, has been that the market's effectively looking at how sticky UK inflation has been. And it's not really pricing that the Chancellor is lacking credibility in meeting the fiscal rules. It's pricing that it's going to be tricky for the Bank of England to hit its inflation target. And that, of course, is having a knock-on effect to the fiscal numbers, because the market's pricing UK rates staying reasonably high into the next few years, and that, of course, is feeding through to the fiscal position as well. But, you know, having UK rates priced north of where the Fed's expected to go over the next few years, that seems a bit of a push. And actually, there may be opportunities in the UK front end. Some of our fixed income teams are leaning there. And if we get some good inflation prints over time, if wage growth continues to come down, some of those fiscal pressures could ease up a little bit.
OK, there's a lot to unpack there. I want to start with the neutral rate, because you were kind of nodding to that in terms of the BOE's role in how they can move inflation down. I was speaking to Bank of America, their economist there, and the view was that maybe we get a neutral rate of 3.5%, and that's where it settles for the BOE. Does that seem a reasonable level to think about when we think about the neutral rate for the UK central bank?
I don't think it's unreasonable, but you look at the Bank of England's
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Caroline Hepker. Nvidia plans to invest £2 billion to support the UK's artificial intelligence industry. The chip maker is giving the money to venture capital firms to invest in the likes of Wave, Revolut and Synthesia. Nvidia's CEO Jensen Huang says Britain is in a Goldilocks moment.
This is the third largest AI startups ecosystem in the world, only behind United States and China. So I think that the moment is right. It's just missing the infrastructure. This is the week. This is the week that I declare that UK will be an AI superpower.
Jensen Huang there speaking to journalists at a press briefing about the news. Nvidia's investments are part of a slew of AI announcements from big US tech companies this week, timed to coincide with President Trump's visit to Britain. While the UK is the biggest European market for startups by volume and size of deal, the country has yet to produce a national AI champion, the likes of OpenAI in the US or France's Mistral. But President Donald Trump and Prime Minister Keir Starmer concluded an historic state visit by hailing the transatlantic relationship with little sign of public disagreements. The two world leaders welcomed £250 billion in bilateral investment deals and a new tech agreement. After the summit, the US president told Fox News the UK had pushed for lower tariffs on UK steel exports.
They would like to see if they could make a little bit better.
Were you open to that?
I like them. We're making a lot of money.
So they're at 25% right now. You're going to go lower than that for them?
They're actually at 50% for steel and aluminum. And I want to see them. They're having a lot of difficulty.
Yeah. President Trump there. Talks between the two leaders did not lead to any obvious diplomatic breakthroughs on the issues of Ukraine or Gaza. Despite that, one UK official expressed relief to Bloomberg that the Prime Minister Keir Starmer had got through the visit without any further controversy over his former ambassador to the US, Peter Mandelson's relationship with Jeffrey Epstein. UK government borrowing has come in higher than forecast for August, delivering a blow to Chancellor Rachel Reeves ahead of a challenging budget next month. The UK state borrowed £18 billion more than it raised last month, which is £6 billion more than officials had estimated. Bloomberg Economics thinks that the Chancellor now faces a £35 billion fiscal shortfall that will need to be filled with either tax increases or spending cuts. The Bank of England's decision to rein in its quantitative tightening plan has swept aside any view that the policy remains on autopilot, this amid recent volatility in the bond market. Yesterday's announcement saw the bank's Monetary Policy Committee reduce the annual runoff of its gilt holdings to £70 billion a year, down from £100 billion. The Governor of the Bank of England, Andrew Bailey, says he would take into account the impact of gilt sales on interest rates.
We take into account all market conditions. So any effect that our sales have on market conditions and therefore on interest rates going out along the sort of the whole maturity spectrum of interest rates, we will take into account when we set bank rates. So there would be an offset there, in other words. If there's a feeling that in some sense quantitative tightening is pushing rates up in the market, then the effect of that we would take into account when we set bank rates. So there would be an offset there.
The Governor of the Bank of England, Andrew Bailey, who announced the changes to quantitative tightening alongside the bank's decision to hold interest rates at 4%. The bank kept guidance warning that future cuts will be, quote, gradual and careful, and that they will depend on the extent to which underlying disinflationary pressures continue to ease. So that on the UK. Now, Chinese President Xi Jinping and US President Donald Trump will discuss trade tariffs and the future of TikTok on a phone call at 2 p.m. London time today. It is the first conversation since June between the leaders of the world's two largest economies. Part of the discussion will focus on plans to shift control of TikTok's US operations from Chinese parent ByteDance to a group of American investors. The leaders will also discuss ongoing trade restrictions on semiconductors and rare earths. It's hoped that the call may lead to the first in-person meeting between Xi and Trump since Trump returned to office. And lastly, President Trump says that US broadcasters should face license scrutiny if they are too critical of him. The comments came as he defended ABC's decision to suspend Jimmy Kimmel's show indefinitely after his remarks about conservative activist Charlie Kirk. Earlier, California Democratic Congressman Ro Khanna weighed in on Kimmel's suspension.
This administration has initiated the largest assault on the First Amendment and free speech in modern history. They're making comedy illegal. Brendan Carr pressured ABC to cancel Jimmy Kimmel, and Disney cancels Jimmy Kimmel.
California Democratic Congressman Ro Khanna speaking there. The president and his allies have long complained that America's mainstream media is biased against conservatives. Those are our top stories for you this morning. Let's get to the markets right now. So in terms of European stocks at the beginning of the session here in Europe, we are down by almost 0.2%. In terms of the sector breakdown, media and technology seeing the biggest declines this morning. As for stock futures for the US Open after the record rally that we saw on Wall Street yesterday, the S&P 500 E-mini future still above 6,700 points, but they are down 0.2%. The dollar is up on the Bloomberg Dollar Spot Index 0.2%. As for UK gilt yields, actually up 3 basis points now, with the pound down this morning 0.5%. So racking up some declines and weakness for the pound, 134.88. Oil prices are lower. Gold is up 0.1% this morning, and 10-year US Treasury yields up 2 basis points at 4.12 right now. That's news when you want it with Bloomberg News Now. I'm Caroline.
ABC put Jimmy Kimmel's late night show on hiatus this week after he made comments about the assassination of Charlie Kirk that some people found offensive. This is the latest example of Trump's war on the media. While presidents have long had adversarial relationships with journalists, no head of state has attacked outlets like Trump has. He's used threats, courts, and his administration's regulatory authority to pressure some of the world's largest media companies. And he's had a lot of success. And some people even suggest we're moving to an era of state-run media in the United States. Kimmel's comments came during a monologue. Afterwards, Brendan Carr, the chairman of the Federal Communications Commission, criticized the remarks. He called on ABC to take action. And he said if the network didn't, then he would. And the FCC does have the power to yank the broadcast licenses of local TV stations, ones that are affiliated with ABC. And indeed, after Carr's remarks, Nexstar, a big station owner, told Disney that it wasn't going to air Kimmel's show. Now, Nexstar is in the process of trying to merge with Tegna, another big local station owner. And it needs the approval of the FCC to do that. And now ABC, this wasn't their first run-in. They had already settled in December a $15 million lawsuit brought by Trump, alleging that correspondent George Stephanopoulos defamed the president. And we've also seen this at other media outlets. Paramount Global, which was trying to merge with Skydance Media, settled another Trump lawsuit for $16 million, alleging editing at 60 Minutes was done to make Kamala Harris look better and not President Trump. And very soon after that, the CBS also said it was canceling its late night show with Stephen Colbert, a frequent Trump critic, that ends next year. And then, lo and behold, days later, the FCC approved that Paramount-Skydance merger. So media outlets are seeing this and thinking that it has consequences in terms of their business. For Trump, the strategy seems to be working because in the case of these settlements, he's He's raising money for his presidential library. He has energized his base. He did call this week for NBC to fire its late night hosts, Jimmy Fallon and Seth Meyers. No action from NBC on that so far. But Jimmy Fallon did skip a public appearance on Thursday that he had planned.
President Trump has indicated that he may further extend the trade truce with China when he speaks later on Friday with President Xi Jinping. The call will be the first direct engagement since June between the two leaders, and the issue of a TikTok sale should be high on the agenda. Let's bring in our chief North Asia correspondent, Stephen Ingle. What's being teed up for this call?
Well, it's going to happen about 12 hours from now at 9 o'clock p.m. Hong Kong time, which is 9 a.m. East Coast time. And it's an important call, no doubt, because it not only potentially gets the two leaders agreeing on the framework agreement that was reached over the course of those high-level talks, obviously the most recent ones between Besson and He Lifeng in Madrid, but also in Geneva and in London. And that will kind of be the top agenda item on a list of very contentious trade issues and national security concerns. And just getting these two people to talk for the first time, meaningful engagement since June, is important. Now, why is TikTok moved to the top? Well, it seems like it's something that can be delivered. We still don't have all the details, though. We know that there's a consortium of what Donald Trump calls all American investors going to be buying the U.S. side of it. But is it going to be a licensing deal? Is it going to be an outright purchase? Is it going to be, what's going to happen to the algorithms? Yeah. What's going to happen to the data? I think the algorithms is probably the biggest question. Is China going to be licensing their technology to the United States but still keep ownership? Or is it going to be down below 20%? Or are they divesting completely? I mean, so many questions. The devil will be in the details. And I think Donald Trump has even alluded to the fact, well, if Xi Jinping in the call is not on board, well, we can still walk away. This deal, and I'm paraphrasing, but this deal is not necessarily done. He, however, has flip-flopped on the TikTok issue. The first term he was against it. Yeah. Now he's already claimed that, well, it helped him win the election with the younger votes. And he says this is an entity in the United States that could be worth tens of billions of dollars. I hate to see value like that thrown out the window. So he's inclined to do the deal, but there has to be the right mood on that call.
I mean, we've just showed it to the viewers, right? There's a lot of potential items in that on that agenda. Yes. Soybeans, for example. A lot of these things are very hard to find any resolution to it. You know, do we get movement? Do we get a gesture? Do we get some peace offering?
Well, I think that's why the TikTok deal, if it is agreed to and goes through, you can kind of see that as a way forward for, I guess, not congenial, what's the right word I'm looking for? Just, facilitating some sort of agreement between the two countries at a time when they, are far apart on many issues, especially trade. Yeah, it'll be a civil agreement, but with government intervention, right? To use the pun there. But again, the FT is already reporting that China has offered a bit of I guess, an olive branch by dropping this antitrust investigation into Google, which they launched, let's be let's be honest here. They launched when the Trump administration launched the tariff regime. So, and Google doesn't really have a meaningful presence on the mainland. Yes, Android is licensed to many different phone makers, so they do have an outsized presence on the mainland. But that was what that investigation was into. The FT is reporting that they're dropping that kind of, an easy give for China to the United States. Soybeans is a more difficult one because that was part of the Trump administration's the first one. Yeah, the first one, and China didn't follow through for various reasons. There was the spy balloon, there was COVID, there was all kinds of issues that kind of interrupted China's pledges to buy soybeans. And China since then has diversified its sourcing to Brazil and elsewhere. And this is the harvest season in the United States right now, and farmers in the Midwest are nervous because they're not getting the orders, where the order book would be filling up right now. So we're already seeing the Ag Secretary, Mr. Rollins, talking about a possible aid package to U.S. farmers to alleviate this. So I think soybeans is going to be a little bit higher up on that phone call as well. Boeing jets, that's a usual deliverable, obviously, and China needs that. They haven't bought a lot of Boeing jets in a long time because of geopolitical friction. And rare earths. We just got customs data out of China saying August, it was the biggest jump on record dating back to 2012. So rare earth products, including those magnets, are starting to move. So that could alleviate some of the tension.
Are you going to ask Brendan Carr to weigh in on other late-night hosts that you have said should be off the air?
Late-night host is on network television. There is a licensing. I'll give you an example. I read someplace that the networks were 97% against me. I got 97% negative, and yet I won easily. I won all 7 swing states, popular, but won everything. And if they're 97% against, they give me only bad publicity or press. I mean, they're getting a license. I would think maybe their license should be taken away. It will be up to Brendan Carr. I think Brendan Carr is outstanding. He's a patriot. He loves our country, and he's a tough guy. So we'll have to see. When you think about this, 97% of the stories are opposed to me, and yet I win easily the election. It's pretty amazing when you think of it. That shows they have no credibility. Go ahead.
I was just going to agree with you. I mean, could you use that same logic with news? If someone
in the old days, I remember in the old days that every 4 or 5 years, a network would reapply for its license. And the license is free. You know, they get this valuable thing for free, and they'd reapply for a license. And if they did something wrong, well, I beat George Stephanopoulos, Slopadopoulos, I call him, George Slopadopoulos. They had to pay me $15 million for what he said. I beat CBS for much more money than that, including advertising and other things, much more money, because they totally changed the answer that Kamala gave. What a question. I mean, they didn't change it. They took it out and put a different answer in. And they didn't want to go to court with that. That's a tough one to go to court with. So, no, I think that if you remember, years ago, I remember as a kid, they would file, it was a big deal every 4 or 5 years, and I don't know, you don't hold me exact, but it was like 4 or 5 years, they'd have to file for a license extension. I don't hear about that. The only one that I've heard even bring it up is Brendan Carr. I think Brendan Carr is doing a great job, and I think he's a great patriot.
Who would you like to see replace Kimmel on late night?
Well, a lot of people, anybody could replace him. The guy had no talent. Kimmel had, look, he was fired, he had no talent. He's a whack job, but he had no talent, and more importantly than talent, he had no, because a lot of people have no talent, they get ratings. But he had no ratings. His ratings were worse than Colbert, I think. They got rid of Colbert, which was a good thing to do. And look, that's something that should be talked about for licensing too. when you have a network and you have evening shows and all they do is hit Trump. That's all they do. If you go back, I guess they haven't had a conservative on in years or something, somebody said. But when you go back and take a look, all they do is hit Trump. They're licensed. They're not allowed to do that. They're an arm of the Democrat Party.
We begin this hour with a leadership shake-up at Bank of America. Brian Moynihan recently naming Dean Athanasia and Jim DeMare as co-presidents. The firm writing in a statement, quote, Athanasia and DeMare will drive company-wide initiatives focused on long-term growth and returns and oversee Bank of America's 8 lines of business. I'm very pleased to say that joining us now is the Bank of America Chair and CEO, Brian Moynihan. Brian, of course, in London, and we're here in New York. You're actually in our home, and we're in yours, so thank you, sir, for making that happen. Brian, let's get to this leadership shake-up because we've got a lot to talk about. 8 lines of business, 2 very prominent individuals in this bank, at this institution. How do you and the team plan to split up responsibilities?
Well, it's good to talk to you both, and thank you for coming to our great corporate headquarters. Hopefully they're treating you nicely out there. Look, this is a recognition of 3 teammates, Dean and Jim and Alistair, and the contributions they made to our company and bringing Jim and Dean to help me leverage across the businesses. And there's a lot of initiatives we conduct across the company, our growth work streams, our operational excellence, our AI initiatives and things, and I've asked them to come help me. Meanwhile, it also frees up space for that talent group, and you're talking to a lot of them today, whether it's Lindsay or Eric or Wendy and others that continue to drive those 8 businesses for us and own the business, own the responsibility for P&L, and there's a lot of talent at that level. So the idea is to bring them to help leverage my time, leverage the company's time, leverage the company-wide initiatives, and then let that talent that drives those businesses keep making great progress.
Brian, there is an obvious, perhaps uncomfortable question. Some people might have responded to this and just thought, is Brian setting up for succession? Or is this just about changing how the company's ran?
Well, long term, we have one of the duties that I and the whole management team owes the board of directors is a series of candidates that have the experience to run this company over time. I'm not going anywhere in the short term, but in the medium term, but it takes a while to set that up and get people used to the size and scale of this company. So you all report all those ins and outs of succession, but the reality is we're a team and we're driving for it. There's a lot of talented teammates, and the board will have to make a decision someday based on the facts and circumstances at the time.
Brian, you talk about some of the new initiatives and looking forward to the bank, the Dean and the Jim that will be of the future partnering together. I'm wondering what you're hoping they can accomplish, whether it's the AI initiatives or beyond. What kind of projects you're hoping that they will spearhead?
Well, we have a lot of things going. For the last year, we've been working on some work streams to help drive expense efficiency and implementation of new technologies, and at the same time drive growth, how we take risk and continue to look at our risk parameters. And so what I'm asking them is and they've helped drive those while they've been doing their old jobs, and I've said, come do this full time, and that'll give us more leverage across the platform. Our company has a great reach. We have, we're all over the globe, and Bernie Menz and the team here out of London run all the international international businesses for us. We're in a lot of countries, a lot of teammates around the world. We just announced 1,000 more teammates that we're building out here in UK, and they can help the company drive that and put the key of the top big company like ours is to work the seams, work the business connections. And so Jimmy and his capabilities as he works with the wealth management group and Lindsay and Eric on the clients that we have, especially in the higher end clients that he has relationships with who are hedge fund operators and things like that. So there's a lot of initiatives, but it's really about revenue growth, organic revenue growth, and expense efficiency, and also thinking through how technology applies. And it just gives me more power at the top of the house to join us, and these teammates have done a great job.
I imagine it's going to be United Front at the Investor Day in November, the first one in some 15 years. You mentioned the CFO, now Executive Vice President Alistair Borthwick, said this: the most important thing from our perspective is we feel like we've got an opportunity to close a relative value gap. Brian, can we talk about that relative value gap? Where do you think that comes from? What is it that you think perhaps investors don't fully understand?
Well, as you look at the company, you have a great organic growth engine. So we'll do 1 million new checking households, and our average checking balances are 3 times, 4 times the industry norm, and we're building that up. What we're trying to showcase is what Bank of America is an organic growth machine on a very steady compounding basis. So if you look at the projections for our earnings growth rates by the street, they're faster than the average company as the balance sheet reprices and things go on. But what we're really trying to showcase is to put on the table basically the metrics that we run this company by across the 8 lines of business and how they work together, and then the international piece, and then AI and some of the other things we work on, the payments business, which is embedded in the lines of business but is a separate business. It really showed 3 things. We have a competitive position that no one else has. We just announced yesterday the largest small business lender. We have a competitive growth rate in the organic growth that's there. And then because of our the dynamics of our NII lift, which it will be growing, as we've told people, 6 to 7% this year, you're going to see the EPS keep kicking in and the operating leverage come into the business, and the return on tangible common equity keeps moving up. And that's what we lay out. But it gears off that good core organic growth with the right risk that we drive this company by.
Brian, as John was just mentioning, this is the first in 15 years. Why now? What changed for you? And is this going to be a new annual thing?
I think we have 35 analysts that cover us. We spend time at all the conferences. We spend time individually. But think about it, putting on the table where the company stands right now as we see after the pandemic and after the interest rate changes and after inflation fights and all that stuff. We see that people putting on the table where we are in organic growth and how it works together is critical. And I think, you should expect us to do it more often. We have a lot of connectivity to the people who actually own our stock and talk to them all the time. But this is a chance to sort of lay it all out so everybody can see it together. And to look at some of these initiatives that are unique, like our employee banking investment initiative, our Continuum, our Merrill Edge through Merrill Lynch and the private bank, and the ability for us to take a customer literally from their first bank account their entire life, and no matter what happens to them on an individual side, or a small business forming today that becomes the largest company in the world, or an individual trader that builds up a capability and becomes a hedge fund manager. The idea of these continuums and things like that are really important. And so we hope to put that on the table and make sure people see it, and then we'd annually update it, but sort of put a baseline on the table.
So, Brian, it seems like you're moving toward a greater degree of transparency, or at least availability, at a time where the president is talking about potentially moving from a quarterly reporting system for public companies to a 6-month reporting season. Do you think that would be helpful for you as a business manager if you had to report less frequently in terms of filing?
In the end of the day, we run the company along the principles of responsible growth and how we run it. So it won't change how we run the company. It may change how often we have to talk about it. And inherently, if you do it 2 times a year versus 4 times a year, you'd save some money and some effort. But my guess is our investors are going to demand from us more constant reporting. So we'll see it all play out. It's an initiative that was talked about over the last several years. If it's going to get done, it has to be done the right way, so it remains in place. And we look forward to what comes out of the SEC in the process. But on the other hand, we are very transparent in what we do. We put a lot of information out there, things like our digital capabilities that no one else reports on, quite frankly. And again, with the Investor Day, we'll be able to show that and really challenge people to say, look, if this is what's going on, if you've taken a company that had 300,000 people 15 years ago that has 212,000 people today and applied that technology, just think as we start to apply AI more fully. We already have Erica, 3 billion customer interactions, but as that applies more fully, you'll see the ability for us to continue to manage the headcount in the company well while the revenue keeps growing. And so I think we'll report on that more often than every 6 months is my guess based on the demand of our investors.
Lisa, I imagine some CEOs might welcome this.
Yes.
Even if some investors don't.
They might welcome this, but will they be allowed to actually follow it by their investors? And that, I think, is what Brian is alluding to.
I think investors will demand much more transparency. Brian, I want to talk about an initiative close to your heart.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Connecting the dot between what's at stake and what is possible.
The news that we got about 15, 25 minutes ago, that you're increasing the minimum wage to $25 per hour. I remember a very early conversation with you, and this is something you're very proud of. This has gone up from, say, 15 several years ago. Can you talk to us about why you've maintained this commitment to driving the minimum wage higher at Bank of America?
Sure. So let me set two things up. One, over the course of today and tomorrow and yesterday, we've announced a series of initiatives. One is to locate 1,000 new teammates in the UK that will work in our operations group, and that was announced by Bernie and Tom Scrivener. A second one is to recommit to our military hiring at Bank of America, 10,000 military veterans over the next 5 years. We've done this from time. We have about 20,000 working to increase that. Another is to increase 8,000 people from community colleges to present an opportunity at Bank of America to further their career and get into skills-based training. That's a doubling or tripling of what we do today. And then with the 75 branches that we're deploying and the teammates there. Then the third piece is the minimum wage. And so we started on a travel a number of years ago with a view that we want teammates to come to Bank of America with a career mindset. So join us. So today we're announcing $25 an hour, which is $50,000 for a starting salary across the country and higher in some places where the prevailing wages are higher, obviously. But what that gives a teammate a chance to join our company, spend their whole career here, and support their families. So not only is it the $25 an hour minimum starting wage, it's the benefit structure, which is a full 401k match, a full benefit cost that for the teammates in the brackets of $25 an hour, we basically dropped their premium coverage in healthcare in 2012 from $500 a month to $250 a month for family. Have never raised it to provide great health care for them, and then our child care benefits. So it's a package. So where's that payback for the investor? Where that pays back to the investor is the turnover rate when we started this program in the high volume operations groups and the branches was 20%. It's now down to basically 10% or so, and even below that. That stability and that career mindset allows us to do a much better job for our clients. And what you've seen is the attrition of teammates has gone down, you've seen the attrition of customers gone down, and you've seen our customer scores dramatically improve over the last 15 years due to this relentless pursuit to be a career employer. So yes, we're very proud of the $25 an hour, but there's an economic benefit for the shareholder, and there's a great positioning for the teammate at the same time.
Brian, I wonder also what it says about the situation, the current environment. It's very strange that we're going into this decision with the Federal Reserve talking about 25, 50 basis points of rate cuts and maybe more. Your team has talked consistently throughout this morning about the amount of resilience they see in the US economy. Pay hikes like this aren't the kind of things you would typically see in a recession. What's your sense of just how tight or weak, loose this labour market actually is right now?
Well, I think if you think of 23 summer, the Great Resignation, it was very tight. Then it loosened up, and it's more imbalanced now. So our turnover rate in our company is running about 8%. Even in places like tech programmers, of which we have 30, 40,000 of them, we're running in double digits is now in 3-4%. And what that shows you, the bid in the market's different, which then shows you people are being more careful at headcount. And you heard some of my colleagues talk to you about that. So I think the unemployment rate is still low, but I think businesses are being much more careful in managing their headcount for a number of reasons. One is to get by understanding how all the policies that are coming at them fit together. I'm talking about U.S. businesses mainly. And then secondly, they're also making sure that they're careful, and I heard some of my colleagues talk to you about this earlier. As you think about this application of technology, we know what this does. We have half as many people working in the consumer business than we did a decade plus ago. We have half as many people working operations. We know that as these technologies can apply to our legal department, our finance department under Alistair, our risk department teammates, we know that if we manage the headcount carefully, we will do it. So we look at headcount very carefully and say, don't hire people unless you really need them, not because we're trying to save money, because frankly, from a human management capabilities, we don't want to have people who won't be able to have a career here. So we just hired 2,000 plus kids from school. So we brought in all those new talent. We'll hire these 10,000 veterans. We'll hire these 8,000 people from community college. But each month we get the right to make a decision on whether we're going to hire about 1,300 to 1,500 people, and we're just managing that very carefully. So I think we're an example of what's going on in the broader labor market. You heard Wendy and my colleagues talk about it. All the companies are trying to manage this and make sure they get the headcount right, because that is a major expense for a lot of firms.
Brian, about a year ago, you were talking to us about the ramifications of AI and the explosion of efficiency. And you said that you think that headcount could remain about the same at the bank, even as the business continued to expand just in total size. I'm wondering if that's shifted, if you still see that as the natural progression of the relationship between the adoption of machine-based learning and the relationship to your headcount.
So there are two things now. One, I think the time we were talking, we were probably closer to 216, 17,000 people, or 213,000. So I think we'll be managing this down. But remember, at the same time, we're managing out through operational excellence and efficiencies of applied technology. We are deploying. So we're adding, Wendy's added commercial bankers in all the markets, and Sharon and the team added business bankers in all the markets, and Katie and Lindsay and Eric adding financial advisors and private bankers. So we're adding front-end people, sales traders, et cetera, to keep building out our capabilities. And so there's a reinvestment going on. The key to that is really redeploying people and reskilling them. So when we bring these 2,000 plus teammates in who just joined us in the last month and a half, we have to be more mindful about training them along multiple dimensions than we might have been 2 or 3 years ago. So I think, yes, I think ultimately the human being content of our work product would probably come down. But if we manage it right, it'll be flat to the same amount of people, maybe down a little bit, but all paid more and all being applied to the highest value tasks where, frankly, the machines can't do the work. And that's the important thing. We know we know what this AI can do in today's world. Erica's been out there for 7 years, 3 billion customer interactions, 20 million customers using it all the time. We see what it could do. We took that and put it in our commercial business. We took that and put it in our internal processes. We got other models to help in Jimmy DeMar's business in terms of a thing called Optimus and things like that. There's a lot out there, but what you're learning is it's still augmented intelligence, and that will be what's driving the near-term efficiency. So yes, I think the headcount management is one of the core tasks that managers have to take seriously.
I'm just wondering, Brian, as you train all of these new students, how do you make sure that they stay with you and don't go to some of your brethren across the way in the private asset sphere?
Well, we provide them a good opportunity, and look, they can go other places, but we've been able to retain enough that we're completely happy. And look, even for our clients, frankly, if they hire our teammates, it's not the worst thing that happens in all our businesses. But the reality is that we want these teammates to have a career mindset. In October, I'll celebrate our teammates have been with our company 50 years, 55 years, 60 years, et cetera. And you hear their stories, and their stories of I joined this company, I worked in a summer internship, I may even work part-time during college. I became a full-time employee, and I started doing this, and now I do that. And those are wonderful stories. And we have them tell those stories to our teammates to show you that you can have a long-term career at a company like ours, and that's what we want our teammates to come in with. They may not stay in trading or investment banking or corporate banking, but they'll have long-term capabilities here. And you've seen that even at the top of the house. Alistair was a capital markets head, and now he's the CFO, and so that goes on throughout the company.
They swear an oath of allegiance.
Yes, exactly.
Didn't you see them lining up this morning?
They came in.
Before they come in.
I promise on my cappuccino, which is very good, by the way.
Brian, I want to talk about the main event that takes place. I'm not going to ask for your guess. I know how much you respect the team behind me and some of the official forecasts of the bank. I want to understand from your perspective, looking across the 8 lines of business, whether you see an economy, market activity that demands a rate cut from this Federal Reserve.
Well, you've had the benefit of all our experts, and we have the talented, extremely talented research team, and you also have some in line of business teammates talking about what they see out there. I think you have to back up. If you think about last year this time, the projected growth rates for our team was probably 100 basis points higher than it is today for 25. And so that deceleration of growth, the prediction that was largely based on a couple things. One, rates would stay higher because inflation was kicking in, the impact of the uncertainty in tariffs, et cetera, et cetera. All that's coming through the system now, so you're seeing some certainty fall into place on this. And I think also inflation was coming down. And I think so the tension the Fed has to deal with, and you've been picking at it all day, is the tension between a higher inflation rate and ultimately where Fed funds could settle in at. And so whether they do 25 basis points today or 50, people have to keep in mind the growth rate in the economy was brought down, and now it's starting to go back up. So next year is predicted to be better than this year, and the year after is better than that. So you hear our teammates talk about the economy growing back out. And that then means we're on the other side of it. And so the Fed has to adjust to the inflation picture as it got more in control. They can come down. They came down 100 basis points already. It can keep coming down, but they've got to be very mindful of the inflation side. And so I think when the people get in the room and they see the data, they have to think it through. The big news since that you referenced earlier was the labor market's gotten softer, so that gave them concern. So I think the market believes and our teammates believe they'll cut rates. But I think the key for people is deceleration of growth, and will the growth reaccelerate? And you hear our teammates seeing that. We're seeing consumer spending strong and all those things, which would indicate we'd see the acceleration. Next year's better than this year. Unemployment is not expected to go up a lot, even though the employment picture may be softer. But the most important thing is the long-term interest rate scenario people projecting is a more normal rate environment that we saw before the financial crisis. Say 3% plus or minus on the Fed's fund rate, 4 to 4.5% or so on the 10-year rate, and a curve that's not inverted, that's normalized between that. The important thing is to get back to more of a normal environment, frankly, with maybe a little higher inflation, because the great debate about 2% is something you can get lots of experts talk about. A little higher inflation, a little faster growth, and then, frankly, that'll help with some of the debt carry and other things going on in the U.S. economy.
Brian, it sounds like next year you see the bigger risk as potentially a surprising bout of inflation and some sort of downturn. Is that correct?
Well, I think the question is how do you tolerate the inflation and the nature of it, what's come from. But, and I think that's the tension of all this, I think, is next year as you get to the second quarter, as these policies are now in place and are behind us, are you going to see the acceleration in growth and where our businesses start investing even faster? If you listen, I think if you asked Wendy about it, she would tell you her her commercial customers that have lines of credit are still borrowing less as a percentage of their availability than they did in sort of the 17, 18, 19 timeframe, where rates have been moved up and the economy was growing. And so why is that? They're probably not seeing quite the opportunity. And so they're trying to sort this all out. And well, I've got the benefit and the honor of leading a company that has this talented team behind us and all the talent and money we spend on research and everything. If I'm running a company that the three of us owned and it was a manufacturing company, I got to figure it out all myself. That tends to hold people back. So that would be the case for acceleration. And then the question is, if rates stay a little higher and the growth is higher, that's not a bad place for America to be.
Brian, just before you go, I wanted to sneak this in. One final question. Whose door do I need to knock for World Cup tickets? Who makes that happen here?
Well, you didn't bring David Tyree on, who's doing all our marketing and work. And so he's the guy that's got control of the tickets, but he does a great job for us. Look, our relationship with FIFA, we did the Club World Cup, which was sort of the warm-up, and next year, and you'll see us accelerate our efforts. We have great capabilities for our clients. But most importantly, this is a chance for America to showcase football, soccer as we call it. It's a case for these cities that are hosting to put on a great show. And I think I can see the enthusiasm building, and you're not the first person that's asked for tickets, John.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Caroline Hepker. Chinese President Xi Jinping and US President Donald Trump will discuss trade, tariffs and the future of TikTok on a phone call at 2 p.m. London time today. It's the first conversation since June between the leaders of the world's two largest economies. Part of the discussion will focus on plans to shift control of TikTok's US operations from Chinese parent ByteDance to a group of American investors. Speaking yesterday, President Trump teased ahead to that deal.
The United States is getting a tremendous fee plus, I call it a fee plus, for just making the deal. And I don't want to throw that out the window. No, I'd rather reap the benefits. I mean, the kind of money we're talking about is very substantial, and it'll be owned by all American investors.
President Trump speaking there as Bloomberg understands ByteDance would hold no more than a 20% stake in TikTok, while other investors would include Oracle and Silver Lake. The two leaders will also discuss ongoing trade restrictions on semiconductor and rare earths. It's hoped that the call may lay the groundwork for their first in-person meeting since Trump returned to office. Well, President Trump and Prime Minister Keir Starmer concluded an historic state visit by hailing the transatlantic relationship with little sign of public disagreement. Starmer praised the £250 billion in bilateral investment deals as paving a shared future.
This relationship is not just about history, it's about the future. It's about the benefits it delivers now and for decades to come, to make our people safer and better off.
That was Prime Minister Keir Starmer. Talks between the two leaders didn't lead to any obvious diplomatic breakthroughs on Ukraine or Gaza. Despite that, one UK official expressed relief to Bloomberg that Keir Starmer had got through the visit without any further controversy over his former ambassador, Peter Mandelson's relationship with Jeffrey Epstein. Now, Nvidia plans to invest £2 billion to support the UK's artificial intelligence industry. The chip maker is giving the money to venture capital firms to invest in the likes of Wave, Revolut and Synthesia. Nvidia's CEO Jensen Huang says Britain is in a Goldilocks moment.
This is the third largest AI startups ecosystem in the world, only behind United States and China. So I think that the moment is right. It's just missing the infrastructure. This is the week that I declare that UK will be an AI superpower.
Jensen Huang speaking there to a press conference. Nvidia's investments are part of a slew of AI announcements from US tech firms this week, time to coincide with President Trump's visit to Britain. Well, it's the biggest European market for startups by volume and the size of deals in the UK. The country has yet to produce a national AI champion like OpenAI in the US or even France's Mistral. Meanwhile, the UK's government borrowing figures, they have come in higher than forecast for August, delivering a blow to Chancellor Rachel Reeves ahead of a challenging budget next month. So the state borrowed £18 billion more than it raised last month, which is £6 billion more than officials had estimated. Bloomberg Economics now thinks that the Chancellor will have to will have a fiscal shortfall of £35 billion that will need to be filled with either tax increases or spending cuts. And lastly, also in the UK, the Secret Service is aiming to recruit new spies using a website on the dark web. MI6's chief Richard Moore is launching a secure messaging platform called Silent Courier, which is designed to target foreign agents. Bloomberg's James Wilcock has more.
How do you become the next James Bond? Well, one modern answer is be Russian and download a VPN. MI6's boss, who goes by the moniker C, is calling on people all over the world to help British intelligence over the internet in the name of global stability. It's a message being targeted particularly at Russians, with a new website being hosted on the dark web for anonymity. In London, James Wilcock, Bloomberg Radio.
So those are our top stories for you this morning. Guy.
Quick update on what's happening with the markets. In terms of the overall picture here in Europe, the Euro Stoxx 50 up by around 0.5%. Actually, a lot of that's coming out of Paris this morning. There's a big Goldman Sachs note out on the defence sector. Airbus in particular is powering the Paris market higher. Over on Wall Street, remember that we saw a huge move yesterday in Intel, and that bled through into some of the other tech names as well. But actually, if you look at what is happening this morning, we've got a fairly flat open predicted on Wall Street for E-mini futures. Just be aware of the fact that there is a big options expiry coming up a little bit later on as well. You're going to want to pay attention to that. The bond market on offer this morning. Yields are a little bit higher, so just be aware of that as well. You can see it over in the United States. And to Caroline's point just a moment ago, in terms of what is happening in the UK, you are certainly seeing a move higher in UK gilts this morning. We're trading at 4.7 on the back of that deficit data that we've had out this morning.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker, and this is Bloomberg.
I have no doubt the president's happy with this move. Not on Nvidia, but on Intel, higher by almost 30% in the pre-market. Your first reaction to that deal?
Well, I mean, look, from an Nvidia perspective, I don't see a big strategic rationale, given Intel has been such a big competitor over the years, except for the fact that Nvidia has a very healthy balance sheet, and it's been making investments, in CoreWeave and some other cloud providers. So $5 billion is not a big amount for them, given their balance sheet. And co-developing chips, to my mind, Intel's kind of ecosystem revolves around x86, and they dominate in the PC world. So that's where NVIDIA can use their distribution. But the fact that they are not using them in Foundry, I mean, that just goes to show that they don't want to touch that TSMC ecosystem where they dominate. And so it's more of, you have to convince the government that you're doing something about it. I mean, clearly, government has a 10% stake in Intel now. And, this was probably the best way to go about it.
What do you think NVIDIA might get in return? Have you given that some thought?
Well, the PC refresh cycle, we have been waiting for that for a while.
I'm thinking more of what the president might be able to give them. Access to China, selling their high-end chips.
That's definitely on the cards. And look, getting to a monopoly position is never a good thing for a company. That's what we have learned from Google, because, once you get to a monopoly position, it attracts so much attention. So to my mind, NVIDIA wants to keep competitors who are distant, third or second. And so from that perspective, it's good that Intel will be a competitor. But at the same time, NVIDIA still maintains the lead, and they don't get classified as a monopoly.
Dan out of Wedbush is standing by, wants to jump on. He calls the deal a huge game changer for Intel. Dan, good morning and welcome to the programme. Why do you believe this is such a huge game changer?
Pop the champagne. I mean, for Intel. Now you have NVIDIA, godfather of AI, doubling down. And this follows, obviously, U.S. government investment. I mean, what this essentially does, it brings Intel into the AI game. You think that from a stock perspective, that changes the multiple. And, clearly, this is also going to be viewed very positively in D.C. I think that's something that could definitely help Jensen and others when it comes to China.
Dan, I do wonder, though, about Mandeep's point, this idea that this isn't NVIDIA going all in and developing their chips for the big semiconductors, the big hyperscalers at the Intel Foundry. This is simply a $5 billion side project about PCs. How much is this essentially just an olive branch to the president and not an actual move of NVIDIA to try to fortify Intel's plans to become the foundry?
Yeah, look, Mandeep brings up great points as always. But look, this is also, it's a doubling down on investment in the U.S. I mean, that's also what it is. Now, clearly, that obviously olive branch to Trump administration and others. But what they're also doing is when it comes to PC upgrade cycle, x86, I mean, this does give them another potential growth lever. And look, NVIDIA right now, it's NVIDIA's world, everyone else is paying rent. And they know that they're in a massive position of strength.
Today, Jimmy Kimmel is taken off air indefinitely over remarks about the assassination of Charlie Kirk. Trump's new appointee is the sole dissenting voice at the Fed, with calls for a half-point rate cut. The CDC's former director testifies she was fired for sticking to the science. And Meta unveils its latest attempt to catch up in the AI
China
race
show.
with
I'm Yvonne Mann
smart
with
glasses.
Across the Asia.
It's Thursday, September 18th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. I'm Kim Vanel in Wanganui, New Zealand. A small group of protesters in Hollywood gather outside the building where Jimmy Kimmel Live usually records after ABC pulled the late-night show indefinitely. They did so in response to remarks Kimmel made about the killing of right-wing influencer Charlie Kirk. ABC's come under pressure from President Trump and FCC Chair Brendan Carr. It's raising fresh questions about satire, censorship, and political influence on American television. I spoke to Reuters entertainment reporter Lisa Richwine. I started by asking her what Kimmel actually said.
On his show on Monday night, what he said was that we hit some new lows over the weekend with the MAGA gang, being Trump supporters, desperately trying to characterize the killer of Kirk as anything other than one of them and doing everything they can to score political points from it. He also compared President Trump's mourning of Kirk to a 4-year-old mourning a goldfish. The people who were fans of Charlie Kirk really felt offended by this, the suggestion that they were using his death to try to score any political points from it to them.
The announcement about the show being pulled came a few hours after the head of the Federal Communications Commission, Brendan Carr, who is a Trump ally, went on a podcast suggesting the FCC could review ABC's broadcast license if they allowed this kind of thing to continue. Lisa says networks are paying attention.
President Trump has made no secret about how he feels about the news media in general. He feels like a lot of the media in the United States is biased against him, and the FCC has echoed that as well. And a lot of these networks have business before the government. There is definitely a concern that there is a crackdown or at least some self-censorship going on where networks might be afraid to criticize the president or the administration in any way so they don't get into making headlines with him.
President Trump responded to the news on social media, calling it great news for America. And in another development in the wake of Charlie Kirk's death, President Trump says he's designating the anti-fascist Antifa movement a terrorist group. It's not clear what legal weight the proclamation made on social media carries. Antifa is a loosely organised ideological movement without clear leadership. Trump and senior officials have repeatedly blamed left-wing groups for creating an atmosphere of hostility toward conservatives before Kirk's assassination. The Trump administration says the White House is preparing an executive order on political violence and hate speech. Trump posted that announcement from the UK, where he's on day 2 of an historic second state visit. Britain's royals rolled out the red carpet for Trump with a day of unprecedented pomp and pageantry, including a lavish state banquet and a toast from King Charles.
The ocean may still divide us, but in so many other ways, we are now the closest of kin.
President Trump returning the sentiment and making his affection for the UK clear.
This is truly one of the highest honours of my life. Such respect for you and such respect for your country.
Prime Minister Keir Starmer is hoping Trump's goodwill translates into investment. They're meeting at Starmer's Chequers country residence today. Tech giants have already pledged more than $40 billion in UK projects, but tensions remain.
Donald Trump, you can't hide! We charge you with genocide!
Thousands protested Trump's visit, and questions over his past ties to Jeffrey Epstein resurfaced after images were projected onto Windsor Castle.
Today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point.
Federal Reserve Chair Jerome Powell announcing a long-awaited rate cut at the central bank. Almost all the voting Fed governors agreed with the 1/4 point cut. The one standout dissenter? President Trump's newly appointed pick, Stephen Miron, whose dissent was also apparent in new projections on the outlook for rates. Fed reporter Howard Schneider has more.
We know that his role was to come in Tuesday before the thing started and pencil in a very, very, very low projection. And it's a full 3/4 of a percentage point below the next lowest and would have implied half-point cuts, basically, for the rest of the year. That's not as steep as Trump wants, but it's way, way steeper than anybody else at the Fed envisioned. And while Powell did not cite that by name, he was asked about support for a half-point cut. Powell said there was virtually no support for a half-point cut. So welcome to the Fed.
Jerome Powell also said the Fed is strongly committed to independence and is cutting 10% of its workforce in a bid to keep its own budget healthy. In terms of future rate cuts, Howard says that Powell indicated more would come as it shifts its focus to the labour market.
And really, the press conference was dominated by Powell talking about the possible erosion in the unemployment rate and the need to stay ahead of that. This is what they're trying to prevent right now. Even as they don't take their eye off inflation completely, they think that some of the tariff effects will fade over time.
Israel has opened a new route out of Gaza City as it continues its fierce bombardment of the city. Children on the streets scramble to catch flyers notifying residents that they have 48 hours to use the emergency route. More than 60 people were killed on Wednesday, a dozen of those as they were complying with the order to leave, according to medics. 3 police officers have been killed and 2 others wounded in a shooting in the Codorus township in Pennsylvania. State police say the officers had returned to the scene of an earlier investigation, described only as domestic-related. The suspect was shot dead by police.
On the morning of August 25th, Secretary Kennedy demanded 2 things of me that were inconsistent with my oath of office and the ethics required of a public official.
Former CDC Director Susan Menares testifying before a Senate panel about her recent firing by Health Secretary Robert F. Kennedy Jr. She says she was fired for, quote, holding the line on scientific integrity, and that she's also worried about upcoming changes to childhood vaccination schedules, which she says RFK Jr. will announce later this month.
I had refused to commit to approving vaccine recommendations without evidence, fire career officials without cause, or resign, and I had shared my concerns with this committee.
Her firing has frustrated both Democrats and Republicans, many of whom confirmed her appointment. Robert F. Kennedy Jr. has denied allegations that he pressured Menares. If you want to hear more about RFK's shake-up of US public health agencies, check out our last weekend's episode of On Assignment. We'll drop a link to that in the show notes. The wife of late Russian opposition leader Alexei Navalny says lab results found that he was poisoned.
Alexei was killed. More specifically, he was poisoned.
In a video posted online, Yulia Navalnaya says 2 foreign laboratories, although she didn't specify where, carried out tests on samples obtained from her husband. She's demanding they publish their results. Navalny died suddenly at the age of 47 last year in a Russian prison in the Arctic Circle. The Kremlin says it knows nothing about her claims. Facebook's Meta launching its first consumer-ready smart glasses. The glasses build on the old Ray-Ban models, which could record video, but these ones work with AI.
And if I want to adjust the volume, I act like there's a volume control in front of me, and I can just turn it.
And have a display in the right lens.
It appears in one eye, it's slightly off-center, so it doesn't block your view.
CEO Mark Zuckerberg says it's about making AI useful in the everyday. The launch is Meta's latest attempt to play catch-up in the high-stakes AI race. And for today's recommended read, a deep dive into how China's auto sector has become a victim of its own success, with too many cars and not enough profit. We'll drop a link to that in the description of today's show. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favourite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily
Japanese bond yield
show.
actually is out rising. Well, it's now at the highest level since 2008. Call it the 17-year high. And I mean, the question is not whether they move today or they don't move, but when they really will move. And I think the window out of Bloomberg Economics is that they will move in. Earliest window would be late next month.
Only viable option, according to Taro Kimura, because you start to get really busy during the political agenda when this new government or new prime minister is going to start pushing for a budget, pushing for fiscal expansion, maybe things that might complicate if you're talking about raising borrowing costs at that time.
Yeah, well, you can wait a few weeks, right? We waited a few weeks for many other things. We talked about this everything rally that's taken place and really underscored by, well, not a lot of negative surprises coming through out of the Fed, right? So we've really had a well-behaved bond market. In fact, the MOVE index actually dropped to the lowest in about 3 years overnight, and that's leading to this massive melt-up in global equities. And we're now nearing this next milestone, which is 145 trillion as far as market cap is concerned. So it's really been a good year to be long-risk assets.
Or anything, really.
Yeah,
I mean, you take a look at bonds, too. Bonds have also rallied in the face of this risk rally as well. We're going to talk to Amy Patrick from Pendle a little bit later on that as well. But even the fact that the Russell 2000, the small caps in the U.S. were also rallying was quite telling, right? Because you start to see that maybe this rally can actually extend and spread to other parts beyond just the Mag 7 right now.
Yeah, so as Yvonne is pointing out, you have the 4 major U.S. benchmarks closing at record highs. And you had the Fed resuming its easing cycle. So it's all angels and butterflies.
Triple crown.
There we go. Last time was 2021.
Yeah.
That he had all for one. I swear. For the
there you go.
Yeah, for the kids in the 90s.
All the
there.
millennials out there.
Paul Dobson is with us, our executive editor for Asian markets. Paul, so what do we not see here? That's the scary part for me. But I'm a concealed pessimist. But yeah, take it away, Paul.
I think we all are, David, as seasoned journalists. We've seen the rallies, we've seen the crashes before. I don't think that there's a lot, kind of blind sides on the immediate horizon. Look at credit spreads, right? The tightest since the 1990s, showing you that people are very happy with the strength of corporate America, as well as what we're seeing in the equities market. And like you said, bond yields at a government level are still relatively well behaved as well. Now, there's the geopolitics, right? There's also these inflation risks. Are they well contained? There's you could have concerns about central bank independence. You could have concerns about private credit and the risks that are getting sort of squirreled away under the radar there. But all of those things, I think, are for another day, not for this week. We've got the central bank, not only the Fed, but a couple of other central banks already this week cutting interest rates, and more likely to come around the world in the coming months as well. Lower interest rates reduces the cost of money, helps corporates, helps the economy, helps people remain bullish on equities. When I was in London last week, the people that I were talking to there were still very confident that there's more cash to come off the sidelines, and people wanting to invest, wanting to allocate more to equities, wanting to allocate more to fixed income for that matter, and liquid alternatives. Pretty much right across the board, there was interest in investing, even though, as you say, we're at stretched levels and people will be looking over their shoulders. And at some point we get towards year end and maybe people will start to take profits. But for all that, plenty of record highs, like you said, across those US gauges, plenty of record highs in Asia as well that we've been stretching again, in Japan, in South Korea, for example. Keep your eyes out for the next levels. We're not too far away, I think, from reclaiming the highs in India as well later on today or later on in the next few weeks.
We did see a little bit of profiting possibly in China yesterday. Obviously, we've talked about China tech all week. Is it time for some sort of breather here right now as we count down to this Trump and Xi call later on today?
I mean, the Trump and Xi call should give people hope for, the smooth waters as well. And the China tech space has been going at a phenomenal rate recently, but there's still the same sort of thing. Plenty of cash to come off the sidelines, right? We've got this idea that Chinese households are sitting on a load of cash still that they need to deploy at some point, or they want to deploy at some point. And equities are offering a far more appetizing investment opportunity at the moment than fixed income with very low yields, or property, which is still not out of the doldrums. So, if you get a little bit more of that momentum, then who's to say that the rally can't continue? It would be nice if it was at a slower pace. We have seen some foreign investors taking a little bit of cash out of that, and that has been slowing some of the rally. We've seen a few of the moves out of ETFs, the ones that were bought by the so-called national team. So again, a little bit of a way to put a bit of brake on it. But at the same time, people are excited about the prospects of the China tech companies, of the China new economy companies, really. And that's why we're seeing these really big gains right across the market.
Paul, thank you. Paul Dobson there joining us out of Singapore and what to expect later on today. Let's talk about that call now. President Trump has indicated that he may further extend the trade truce with China when he speaks later on Friday with President Xi Jinping. The call will be the first direct engagement since June between the two leaders, and the issue of a TikTok sale should be high on the agenda. Let's bring in our chief North Asia correspondent, Stephen Ingle. What's being teed up for this call?
Well, it's going to happen about 12 hours from now at 9 o'clock p.m. Hong Kong time, which is 9 a.m. East Coast time. And it's an important call, no doubt, because it not only potentially gets the two leaders agreeing on the framework agreement that was reached over the course of those high-level talks, obviously the most recent ones between Besson and He Lifeng in Madrid, but also in Geneva and in London. And that will kind of be the top agenda item on a list of very contentious trade issues and national security concerns. And just getting these two people to talk for the first time, meaningful engagement since June, is important. Now, why is TikTok moved to the top? Well, it seems like it's something that can be delivered. We still don't have all the details, though. We know that there's a consortium of what Donald Trump calls all American investors going to be buying the U.S. a side of it. But is it going to be a licensing deal? Is it going to be an outright purchase? Is it going to be, what's going to happen to the algorithms?
Yeah.
What's going to happen to the data? I think the algorithms is probably the biggest question. Is China going to be licensing their technology to the United States but still keep ownership? Or is it going to be down below 20%? Or are they divesting completely? I mean, so many questions. The devil will be in the details. And I think Donald Trump has even alluded to the fact, well, if Xi Jinping in the call is not on board, well, we can still walk away. This deal, and I'm paraphrasing, but this deal is not necessarily done. He, however, has flip-flopped on the TikTok issue. The first term he was against it. Yeah. Now he's already claimed that, well, it helped him win the election with the younger votes. And he says this is an entity in the United States that could be worth tens of billions of dollars. I hate to see value like that thrown out the window. So he's inclined to do the deal, but there has to be the right mood on that call.
I mean, we've just showed it to the viewers, right? There's a lot of potential items in that on that agenda.
Yes.
Soybeans, for example. A lot of these things are very hard to find any resolution to. And, you know, do we get movement? Do we get a gesture? Do we get some peace offering?
Well, I think that's why the TikTok deal, if it is agreed to and goes through, you can kind of see that as a way forward for, I guess, not congenial, what's the right word I'm looking for? Just, facilitating some sort of agreement between the two countries at a time when they, are far apart on many issues, especially trade. Yeah, it will be a civil agreement, but with government intervention, right? To use the pun there. But again, the FT is already reporting that China has offered a bit of an olive branch by dropping this antitrust investigation into Google, which they launched, let's be honest here, they launched when the Trump administration launched the tariff regime. So, and Google doesn't really have a meaningful presence on the mainland. Yes, Android is licensed to many different phone makers, so they do have an outsized presence on the mainland. But that was what that investigation was into. The FT is reporting that they're dropping that kind of, an easy give for China to the United States. Soybeans is a more difficult one because that was part of the Trump administration's the first one. Yeah, the first one, and China didn't follow through for various reasons. There was the spy balloon, there was COVID, there was all kinds of issues that kind of interrupted China's pledges to buy soybeans. And China since then has diversified its sourcing to Brazil and elsewhere. And this is the harvest season in the United States right now. And farmers in the Midwest are nervous because they're not getting the orders, where the order book would be filling up right now. So we're already seeing the Ag Secretary, Mr. Rollins, talking about a possible aid package to U.S. farmers to alleviate this. So I think soybeans is going to be a little bit higher up on that phone call as well. Boeing jets, that's a usual deliverable, obviously, and China needs that. They haven't bought a lot of Boeing jets in a long time because of geopolitical friction. And rare earths. We just got customs data out of China saying August, it was the biggest jump on record dating back to 2012. So rare earth products, including those magnets, are starting to move. So that could alleviate some of the tension.
Okay, well, just to underscore how multifaceted this relationship really is, Stephen Engel just really outlining the many fronts and potential fronts we could get more progress there. Coming up here in shows, we're talking about this tech rally that's been really front and center if you think about many of the strategies out there this weekend. Sean Yang and his team actually put out this call in Baidu, which arguably kicked off this latest leg higher in the stock price there. So he joins us at the bottom of the hour in about 15 minutes or so.
Yeah, but first, Pendle Group joins us as we wrap up a busy week for global central banks. Look at the rates outlook from Amy Shepatrick coming up next. We're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. Keep in mind, we are all still on typhoon watch there. Strong wind signal. Number 3, Typhoon 3, coming in at 9:20, about 6 minutes from now. This is The China Show. Happy Friday.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble, iconic. When we get people moving, when we get the world moving, iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
For over 147 years, Bgrim has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
Welcome back. So we're going into the session today with futures to the upside, cash markets to the upside. We woke up here in the Asia Pacific to the Dow, the Nasdaq, the Russell 2000, the S&P, all at records. The everything rally is what we're calling it. S&P's up 5 months. U.S. Treasury yields, a 10-year yield specifically, is down for 2 months or so. So this calm in the bond market is really creating this platform on which risk assets are rallying. But then again as well, bond markets have also been doing well. Let's bring in Amy Patrick out of Pendle Group, of course, this Goldilocks scenario. And whether or not, Amy, we do see something that might upset the calm in these markets. Amy, of course, is head of income strategies there. Joins from Sydney. Good morning, Amy. Yeah, why don't we start there? Do you see any potential risk short term, or should we just enjoy this ride for now?
Well, I think we need to separate the story of what's going on for bonds and what's been going on with equities. So the story I hear a lot about what's driving both is that because, the Fed has been talking more about the downside risks to unemployment and the US labor market, that then means the door is open for more Fed cuts. If interest rates are going to go lower, then that supports equity market valuations. Therefore, both can rally. Whereas I think what's been going on a little bit more behind the scenes is a slightly separate story for both bonds and equities, and probably relates more to the impacts of tariffs, right? So if we think about how long we've been waiting for the effects of tariffs to show up in inflation, and print after print in the US, you're just not really seeing that.
ओके गाइस, ये क्रूड ऑयल के ट्रेड को देखोगे तो मॉर्निंग से बिल्कुल वहीं का वहीं है, ना नीचे एक्सेलरेट कर रहा है ना ऊपर जा रहा है। थोड़ा सा रिस्की हो चुका है, अब रिस्की मानना है इसको ना। अभी तक या तो चला जाना चाहिए था ऊपर या फिर ब्रेकडाउन होकर नीचे आ जाना चाहिए था। दोनों में से कुछ भी नहीं हो रहा है, ना एसएल गया है ना ऊपर मार्केट गया है। थोड़ा बहुत बाइंग जरूर आई थी बट उसी रेंज में घूम गया। तो जिन लोग अभी इस ट्रेड में बने हुए हैं, चाहो तो निकल जाओ, नहीं तो छोटे से एसएल के साथ बने रहो। 25 पॉइंट का एसएल है, जाएगा तो निकल जाना। नाउ वी कैन कंसिडर दिस अ रिस्की ट्रेड। नॉर्मली इतना टाइम तो नहीं लगता है, ऑलरेडी वो लास्ट लेवल पे इस पर्टिकुलर जोन पे हिट कर चुका था लेवल को, तो यहाँ से चला ही जाना चाहिए था। काफ़ी ट्राई कर रहा है ऊपर जाने का, बार बार ऊपर से ओपन इक्वल टू हाई, ओपन इक्वल टू हाई। यहाँ से देखो मॉर्निंग पे कल मार्केट आया था, उसके बाद अर्ली मॉर्निंग जब ओपन हुआ था यहाँ पे इक्वल टू हाई, ओपन 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 इक्वल टू हाई। ये भी ओपन इक्वल टू हाई थी, कन्वर्ट हो गई। दिस इज ऑल्सो ओपन इक्वल टू हाई, कन्वर्ट हो गई। कंटिन्यूसली ऐसा ट्राई कर रहे हैं सेलर की बिल्कुल नीचे ही ले आए प्राइस को, बट वहाँ भी नहीं आ रहा है। वहाँ आ जाता तो बेटर था, तो थोड़ा सा इसका ध्यान रखना। नाउ वी कैन कंसिडर दिस एज अ रिस्की ट्रेड। ठीक है, अब सेफ तो कहीं से भी नहीं है, तो निकल जाओ। निकलना चाह रहे हो तो कॉस्ट पर ही है। अगर होल्ड करना है तो इससे बड़ा एसएल मत लेना, जाएगा तो एसएल निकलना ही है। फिर बहुत देर से रुका हुआ है, क्योंकि ब्रेक हो जाता तो फिर सेलिंग का कहीं प्लान करते, बिकॉज वो भी नहीं हो रहा है ब्रेक। 3:30 होने वाला है, let's see. दो बार पहले बाइंग आ चुकी थी, थर्ड टाइम था, कल ही आ गया था सपोर्ट वैसे तो। फिर मार्केट हमारा क्लोज हो गया, आज भी उसी लेवल पे थोड़ा बहुत बाइंग, थोड़ा ऊपर आता तो यहाँ से एक सेलिंग अच्छी बन जाती टारगेट के हिसाब से, बट वो ऊपर लेवल पे पहुंचा ही नहीं, ऊपर रेजिस्टेंस ज़्यादा ही स्ट्रॉन्ग है लगता है।
Moving are becoming more and more divorced from the company fundamentals and from the economic fundamentals, then that opens up the gap for a bit of a shock to the system that may cause a bit of a reset in pricing. So near term, probably slightly bearish on duration, but longer term, I see an opportunity, but only after a reset.
Amy, thank you. Amy Shea-Patrick there. Have a great weekend. Head of Income Strategies at Pendle Group, joining us from Sydney there. Your pre-market is just opening up here in the Hang Seng, and there you go. We continue to see slight gains here. Futures are slightly to the downside here today. 7.11 for dollar China here this morning. The fix just up there. There you go. 7.1128 this morning. This is Bloomberg.
Connecting the dot between what's at stake and what is possible.
All right, it wouldn't be the China show if we're not talking about Labubus, right? I mean, talk about when it comes to the shares down some 2%. So there has been some concerns about the resale price of Labubus. Well, that seems to be the case today. But Citi reaffirming, saying, look, don't look at that as a negative right now. The restocking initiatives actually cater to real demand and really improving the customer experience there. So that actually should help IP popularity. So
yeah. I mean, the fact that we're looking at inventory levels now, almost like when you look at oil prices and IEA stockpiles.
It's a commodity.
as a bullish call. There's a partnership that was announced, strategic 5-year partnership between the two companies. We'll talk more about this at the Open, which is coming up. This is the China Show. Over 40 seconds to the opening bell. It's been a fantastic week for risk assets globally. We've seen a bit of consolidation in the onshore markets. the last couple of days or so. 3,800, the level to watch. We'll talk more about that later. Hang Seng Index right now slightly to the upside. Any clues from overnight? We're not as strong as we've seen in recent days, but we'll see. Of course, we have a couple of seconds to the open, and we'll see, of course, what happens here going into the open today.
Yeah, I mean, even starting yesterday, you started to see a little bit of retreat towards late of the session there because, maybe we're waiting for this Trump call to see if there's any sort of breakthroughs that come through when it comes to TikTok and whether that leads to some sort of summit between the two leaders later on this year. That certainly is probably the next sort of milestone that we're watching out for in this market. But we're still kind of ending things on a pretty positive note when it comes to stocks, right? Given just the massive rally we've seen around Chinese tech this week. And, this whole re-rating, it almost seems like around the whole AI cloud trade. And Huawei, with the news yesterday about them developing their own chip there to challenge Nvidia, that certainly is going to be adding a little bit more to that trade as well. But you take a look at how onshore markets are doing. We're pretty much flat right now. Watching very closely what goes on when it comes to the tech space. There you go, Capricorn Tech. That's down some 2% here this morning. And we're watching very closely what goes on when it comes to the renminbi because that fixtures came out as well. The spot and the fixing rates are actually, that gap is really closing quite a bit, right? So in some sense, it seems like right now, the supply and demand for renminbi seems to be quite balanced in some ways. And maybe it doesn't need the central bank's sort of help in sort of anchoring the currency anymore. That's certainly something that we've seen of late. You flip the boards and see how Hong Kong is doing as well, right? So, obviously, yesterday it was a bit of profit taking in some cases here, but tech still seems to see pretty strong right now. We're up about 0.1%. At least we're extending that. Alibaba seems to be one of the main drivers of that right now. Alibaba is up about 0.6%. Baidu, though, is slightly down about 0.8%. And of course, we're watching the likes of course, Baidu, given we're going to get Arete, Shenyang, just a couple of minutes, of course, after their upgrade. That stock really has gone gangbusters this week, of course. So certainly that's one to watch. Let's take a look at SMIC. Let's take a look at Hua Hong, some of these homegrown sort of players there. And we are continuing to see some decent gains here when it comes to both of those. We're up more than 1%. Zijin Mining, so we did get more news about the IPO for Zijin Gold, right? So we know they're going to be listing on the 29th. They're seeking about $3.2 billion. This is going to be the world's biggest IPO now since May, of course, CATL. So certainly that's going to be the big one to watch in the next coming weeks as well. And then we have a trading debut today. So we're talking about GenFleet Therapeutics in Shanghai. So there you go. Doubling the price on the first day of school, Dave.
Yeah, well, that specific stock, if I'm looking at it just now, so it's actually hitting on really two themes with very strong momentum behind it. One is, of course, this equity market that's been on fire in terms of equity financing, raising equity financing. The other thing is it's a biotech company, right? So those two things are, 121% now as I speak. Isn't doing as well as GenFleet, but has done exceptionally well still. Has been Baidu, right? So where are we as far as this trade is concerned? I'll show you one chart that actually underscores how quickly the stock has actually risen. The blue line on the screen is the share price. The yellow line is the 12-month consensus price target from analysts. For the very first time, and you don't normally see the actual share price trading above the target, right? Well, that's happened. Because of this rally that we've seen recently. In fact, I think some of the other things that we're tracking here as well, stock is up 51%. It's a top 5 stock on the Hang Seng Composite. It's added some $16 billion. So what now? What are the opportunities still? What's been baked in? What does the company need to deliver to justify where we are as far as current valuations go? Let's bring in our guest, Sean Yang, Senior Research Analyst at Arete Research. They upgraded Baidu, of course, from sell directly to buy earlier this week, citing search engine operators' new in-house chip venture as having the potential to more than offset. This is a very long introduction here. The online advertising business. Sean, good morning, and a pleasure to have you on the show. The bull case is quite clear. We can look at potential maybe holes in the bull case, but what is the risk right now at the current share price level? Let's start there and work backwards.
The current risk, I think that Baidu's advertising business has always they always have some issues with advertising businesses. So it's like a search business is under attack by a lot of other players like Xiaohongshu, Little Red Notebook, and also Tencent WeChat search and Douyin search. So the advertising revenue will continue to decline I think will continue to decline for a couple of years. The other thing is that the current market expectation for the cloud and AI chip and autonomous driving seems that are rising. But whether Baidu could deliver the numbers just to prove that they are making progress, I think that is also something to watch out in next several quarters.
Sean, we spoke with Macquarie's Ellie Jiang yesterday about that very topic, right? They need to stabilize the struggling ad business. I just want to play a clip here. Just take a listen.
Investors started to get much more excited about the hardware side, which is their self-developed Kunlun chip. But at the same time, I guess the flip side of that argument is Baidu's core search remains heavily under pressure. Right? So I think for investors, we always have to kind of debate the pros and cons. And of course, in Baidu's case, whether they are able to achieve kind of more of a stable stage for their search decline would be the key catalyst to watch out.
Sean, your argument is that this chip venture for Baidu is enough to offset at least the weakness in the online advertising business. In terms of Kunlun, what are you looking out for the most when it comes to this chip now?
Right. We did a sum of part analysis. Basically, with our latest target price, we think advertising only takes 19% something of the whole valuation, and cloud and chips takes roughly about 60%. So, in terms of Kunlun chip, because we have already seen some early stage announcements. For example, they announced that China Mobile, China's leading telecom company, purchased large amount of Kunlun chips. And also we have seen that I think China Merchant Group, which is also leading state-owned enterprises, also start to purchase chips from Baidu. So I think that we are going to see more similar announcements going forward. And people will, I think after this announcement, after more external clients start to purchase Baidu Kunlun chips, then more people will recognize the quality of Baidu chips.
Yeah, okay, so Sean, let's put that together over a 12-month view and what to expect as far as whether that's margin, trends in the profit margin or the profit itself. How do you think this shows up or hopefully shows up in financials these next 12 months?
Because Baidu disclose very limited information now. Basically, they bundle a lot of things like autonomous driving and cloud and chip businesses together into other revenue. So I think my suggestion for the company that probably they need to break down a little bit, at least to let investors know what's the number percentage of this revenue mix. And the other thing is that we are probably going to see the other revenue growth very fast and likely to surpass advertising revenue very soon. And by that time, I think that people need to do to break down each businesses just to have a more careful analysis. But going forward, finally, all our discussions will return to the company's revenue growth and other profit growth. So finally, that Baidu needs to deliver concrete numbers to support their stories.
Sean, I want to broaden it out a bit. I know you also upgraded Alibaba price target there a few weeks ago. Obviously, there's a lot of optimism around the cloud business there as well. And there's a lot of CCTV reports just this week saying that their chip design unit T-Head has also developed some sort of AI chip that is on par with Nvidia's chips as well. There certainly is that sort of narrative that we're seeing when it comes to even Huawei's chip of late. I mean, how can we measure whether these claims are true and will hold, and whether actually these companies can actually scale up to a point to reach mass production?
Right. I think that's the most important thing I've seen here is that there has been very strong demand in China for the AI chips. that's mainly because I think that there's also very high demand for China's AI developments. All the industry are trying to embracing AI, but on the other hand, there's relative shortage of AI chips, and I think that there are a lot of articles describing this situation. So I think that probably it takes some time for these Chinese domestic made chips, either Huawei, Cambricon, Baba, or Baidu, to catch up. It's definitely not very easy to compare their capability with Nvidia now, to be honest. But I think it takes time. And I think the other thing is that if there are more enterprises clients are using China domestic chips, which on the other hand definitely strengthen these companies, like Huawei or Cambricon or Baba or Baidu, their capability and just to try to push them to produce more and improve the whole product quality. So it takes some time. I don't know how long it takes, but I think that's something that's definitely going to be an exciting investment thesis going forward.
Sean, the one stock that has not ridden this recent wave is Meituan, and we understand the fundamentals of the outlook don't seem as rosy compared to the others. You currently have a sell rating on the stock. What would make you change your mind here? And do you think we'll get that catalyst over the short term on Meituan?
For Meituan, I think the problem is that they are still trapped in a very intensified competition in food delivery businesses. Definitely, there are some catalysts. For example, Meituan also launched AI agents. I think just last week or sometime. But I think that seems that there's a lot of enthusiasm among the users. And the other thing that Meituan is also trying to expand globally. But I think that's the most important thing, that when can we see relatively easing competition in food delivery? I think that is a most important question for Meituan.
Sean, thank you so much. Sean Yang there, Senior Research Analyst at Arete Research. Of course, we're going to check this IPO, or at least the trading debut today, for GenFleet. So this is, of course, the biotech company that is an H-share listing here today. And yeah, we talked about doubling in price on the first day of trade. We continue to see, there you go, 120% upside this morning when it comes to that particular stock. We're also talking about a very big IPO coming up, right? We're talking about Zijin Gold, seeking to raise $3.2 billion through its IPO in Hong Kong, which is said to be the world's largest deal of its kind since May. Trading is scheduled to begin on September 29th. Now let's bring in Manuel Balgori, who leads our APAC deals coverage here on yet another big one coming through in Hong Kong. What to expect on the 29th?
Another big IPO. It's exciting. Yeah, just coming back after the summer holidays and big IPOs taking place. This one is a good one. Zijin Gold, definitely the biggest of its kind since May, as we've reported, set to begin trading next week. We've seen a good quality of cornerstone investors piling in. So let's see. I mean, still early to tell, but it feels like it's in high demand. It's a company with a good track record for sure.
Okay. Well, who are the backers of this one? In terms of the institutional, who are the ones that are... just to give us a sense, really, of what that institutional backing is.
Yeah, the cornerstone investors, David, as we know, here in Hong Kong, they get a certain allocation.
Yes, a size.
In return of staying or keeping the stock for at least 6 months. Those so-called cornerstones include the likes of GIC, Millennium, Hill House. So those are big institutional, reputable, and well-known investors. Interesting, for instance, Millennium, right? That we've seen them coming in a couple of public markets deal recently. I mean, Hill House, really solid track record, and GIC, obviously, as well, a big name. So just, I think when you see those big names piling in, it's always, a good, kind of solid foundation for what's to come. But obviously, we'll see how the books build up over the coming days.
Okay, there we go. 29th of September is the debut. update them.
Perfect timing, right? I mean, gold prices are at records. Why not?
Absolutely.
Yeah. It's also a month before Halloween.
Oh, yeah. Well.
Oh, ooh. Ooh. All right. We'll see if we bump into the Millennium guys, which I tend to see some of them every now and then on a Friday afternoon. Anyway, okay, you can get an insider's guide to the money and people shaking up the finance hub here in Hong Kong. It's out every Thursday, so the latest one, of course, is out. You can check. Someone has an entry in that newsletter.
Yeah, check it out.
Yeah.
I contributed this week.
Plenty more ahead. This is The China Show.
Well, AIA Group CIO Mark Conan says while China's property crisis is still hanging over the economy, market sentiment is clearly improving, with foreign investors seeking opportunities now. Conan was speaking at the China Show subscriber event after a recent visit to the mainland.
Sentiment has definitely changed on the ground, that's for sure. I don't think we've seen the back of the onflow, the after effect of the slowdown in residential property. That's still a spectre which is hanging over the consumer. But we've clearly seen a mobilization of resources and an alignment of policy, which has really galvanized confidence. And it's palpable. You can see it. I spent a day in a workshop looking at China logistics and data centers. Extraordinary growth. All of the things that we've been talking about, Steve mentioned 35 years, all of those things that we always talked about on enormous scale, they're now coming back into play. And there's a real level of enthusiasm and optimism around that. And dare I say it, you're even starting to see foreign investors come back to China. You're starting to see some of the big global pension funds, the sovereign wealth funds, starting to come back in and realize that there's opportunity there that they should be participating in. And there's a sense that if this is we're now scraping along the bottom, this is the right time to be rebuilding positions.
You've invested in Hong Kong for a long time. The Hang Seng Index. Can I trust this one? Because we've had our hearts broken a few times in just 18 months, not let alone the time before that.
Trust is a big word. I mean, can you make money? Yes. I think that's more the point, and the fact that it's driven by policy as well. So it's really an alignment of policy and action, and getting the IPO market started up here again, and it's phenomenal. On a global level, and it's really infused investors once again. So yes, you can trust that this is real, and there's a lot more to come.
Do we regret not taking advantage? Do you think we will regret not taking advantage of the treasury yields on the table, especially when we think about the end of U.S. exceptionalism, the role of the dollar? Like, where is your head around the entire conversation?
Yeah, so firstly, I would say that we don't trade the long end. We don't get rewarded for taking rate risk. So what we do is try and we hedge out as much rate risk as possible. Rate volatility costs us capital, so we try and neutralize that as much as possible. But we do take tactical positions, and we have. During the course of this year, there have been opportunities because of the volatility. And I think that's been one of the sort of trademarks of the market this year. You have tremendous volatility in rates across the curve. I think where we sit today is that most of the action is going to be the short end. That we're going to see the short end give up, but the long end could go up a little, but not significantly so. So I'm not sure we would be aligned with that and taking more tactical moves. We're very happy with rates where they are at the long end.
A large book of your policies are dollar-based. fixed.
Yes.
How does the overall confidence or lack of confidence on the dollar longer term mean for your sales and for your investment opportunities now?
Well, typically when we've seen dollar weakness in this region, it's been positive for the economies across the region. It gives a little bit of headroom in terms of policy flexibility. But what we really want is we want to see liberalisation of the capital markets across this region. The biggest constraint we have in terms of growing our business is, can we find enough deployment? Can we find enough assets to deploy? And if we look at the capital markets across this region, extremely constrained. So here's an opportunity, a slightly weaker dollar in terms of the trend. Will we see the liberalisation that we're expecting? Will we see taking advantage of that headroom? It looks like we're going to be disappointed again. So out across the region, China's a big play. This move for offshoring production to avoid the impact of tariffs, sort of aligning with what we saw in previous decades with Japan after the Plaza Accord. Right. That's the sort of thing that we're very much focused on, because it's not the same story being replayed again, because these tariffs are rolling out across the whole region. So it's very, very finely balanced.
Yeah, that was Mark Conan, who joined us, of course, last night at our subscriber event for the China show, just talking about many things there. Among the many other things, of course, that weren't included there in that final cut. But yeah, in any case, of course, you could rewatch that interview that we just showed right now on TV.
And thanks for coming to our subscribers too. Yeah.
Yeah, I mean, ended quite late, relatively speaking, for our usual habits.
But it was a good time.
I'm nursing a bit of a headache. I wonder why.
It struggled us a little bit, but we'll get through it. It's Friday.
Yes.
TV Go. You can check out more. This is Bloomberg. Some corporate stories that we're tracking for you today. Shares of GE Healthcare closed lower in the U.S. after Bloomberg reported it's considering selling a stake in its China business. Sources say a potential transaction may value its China assets at several $1 billion. If it happens, GE Healthcare would join other firms evaluating options for their China businesses amid fierce domestic competition. India's securities market regulator has cleared the Adani Group and its billionaire founder Gautam Adani of some allegations raised in 2023 by the U.S. short seller Hindenburg Research. It's found no evidence that Adani used so-called related party transactions to move money into its listed units. Adani has welcomed the decision, repeating that the claims made by the now defunct Hindenburg were baseless. All right, Dave, you've been tracking. If we had to make a playlist for this China rally, you're coming up with some names, right?
Yeah, well, I mean, I think we're giving away the title. Weren't we joking the other day? We were bantering on this, right? That my plan was not to get a haircut until either I think the Shanghai Comp reached 4,500 or the Hang Seng Index top 29,000.
Yeah, no, your hair cannot stand it. You need a haircut like now.
Well, our viewers just have to live with it. And the peg was, weren't we going for Michael Bolton, right?
Oh,
that was the peg.
That's ambitious, Michael Bolton.
Yeah? Well,
not everyone can rock those waves.
Can pull it off.
No,
nor do I have the husky baritone vibe that he has going. But then again,
you're good with charts, though. Tell me about this.
Yes. We've been leaning on that, the support level. We like nice round numbers, right? 3,800 has really been that level, with the exception of one day where we closed below it. For the past several weeks, we've actually closed above that. We bounced off that several times. We did so again exactly there yesterday, and that seems to be where the market thinks the current floor is, at least on the Shanghai Composite. We'll ask this question actually to Tommy Fang out of UBS, who'll be joining us in a couple of minutes' time. Keep it here.
If you have weekend plans, we don't know what's going to happen. T3 is going to be happening in the next few hours or so. So certainly that's going to be the one thing to watch here. Preschools, kindergartens already closed for the day. So yeah, it's going to be a long weekend for us. Maybe we have to hunker down. We'll see.
Ahead of the big one next week, which is Yeah, which is the one we're tracking as well, going into, should be Tuesday, Wednesday, right? I mean, we've barely had sunny weekends here in Hong Kong.
No.
We've had one or two very, very recently, but they were just scorching hot. So
stock up while you can.
Absolutely. A lot of stories across these markets today. I think the latest one, in fact, in the last hour, so we've gotten a lot of corporate news. We'll start things off here with Xiaomi and this software fix and this recall. Just under 117,000 cars. The market doesn't seem to be reacting quite a bit. In fact, it's going the opposite way right now. We were down as much as 2%. Volumes were picking up, though, going into today. And as you can see, we are just wrapping up. Well, we're going back to Xiaomi. Okay. The other story is this strategic partnership between CATL and Li Auto, 5-year partnership, car safety, battery safety, and stocks are doing this. The big news could come in the form of, well, the big event will come, of course, at 9 p.m. local time, which is that, and we'll talk more with Steve on this phone call between the two presidents. Markets don't seem to be extremely bothered or building up hedges ahead of that. In fact, when you look at implied vol overnight on dollar China, you look at it over the past month or so, markets don't seem to be worried too much over this going into that strict meeting.
It really hasn't been for months now, right? We really haven't been talking about trade. It's really all about AI. It's really all about all these thematic sort of investing in this market. But, I think it's because it's the fact that you also heard from President Trump saying, we probably could extend when it comes to some of these truces. So certainly there's a lot at hand here, especially when it comes to TikTok, right? And that certainly has been put on the top of the agenda. Let's bring in our Stephen Ingle, Chief North Asia Correspondent, on what to expect from this call in less than 11 hours or so.
That's right. So obviously trade is the big issue behind the scenes. But TikTok has risen up to the top of the agenda because it's one that at least Donald Trump is telegraphing that it could be delivered. And that's what everybody's looking for after all these months of turmoil with from Liberation Day to the threats and the realization of tariffs and just the icing of Donald Trump, if you will, by Xi Jinping not taking a call until really more recently. And we're going to get it in about 11 hours' time. You just had this sense that we need some deliverable because you can only kick the can down the road so many times. We've had so many truces, right, and extensions, and the current one expires November 10th, and Donald Trump, as you've just alluded to, why the markets are not necessarily on tenterhooks, because Donald Trump keeps on telegraphing everything that's possibly going to happen, right? And he's saying, well, we can extend this again under the current terms. So right now, the trade friction seems to be on the back burner. The big question is, can they get this framework agreement that was done over several high-level meetings between He Lifeng and Scott Bessent and Jameson Greer? Can they get it across the line so both leaders can take deliverables, okay? Right now, they're doing the leveraging and the pulling the levers to see if they can get the better side of the deal. What we need are the details of the deal. What's going to happen with the algorithms, right? Is this going to be a licensing deal, or is it an outright purchase by this consortium that the White House has talked about between Oracle and Andreessen Horowitz and Silver Lake Management? We simply don't know what it's going to look like, the U.S. entity. Donald Trump says it could be an entity worth tens of billions of dollars. Seems quite exorbitant, but he says, why would you throw that kind of value out the window? So he's on board with it, but he has to see what kind of tone is going to be struck in this phone call. How long is the call going to take? And is it going to be bogged down in their differences? Or are they going to find that common ground on TikTok? Because China, so far, they've telegraphed over all these years that TikTok's been in the focus of national security issues, somewhat reluctant to give it up, right? So what's this going to look like?
Yeah, in fact, let's listen in on how President Trump actually framed, going this TikTok conversation going into today, which really underscores why the markets so far aren't too worried about this. Let's have a look at that, guys, if we can.
So what we're doing, and we're speaking to President Xi on Friday to see if we can finalize something on TikTok, because there is tremendous value, and I hate to give away value. And we're doing it in conjunction with China. But we are getting, the United States is getting a tremendous fee plus, I call it a fee plus, for just making the deal. And I don't want to throw that out the window. We're pretty close to a deal. We may do an extension with China, but it's an extension based on the same terms that we have right now, which are pretty good terms.
Yeah, Steve, who would have thought that TikTok would be the low-hanging fruit among the many other prickly issues that they need to get over
Yeah,
the
but
line?
still not a lot of detail there.
That's
right?
true.
A lot of hyperbole, not a lot of detail. So I'm a stickler for detail. I need to know, then I can make up my mind whether this is a significant move or not. Yeah. What is this deal going to look like? And does this pave the way perhaps for further cooperation on other more prickly issues? Because there are a lot of prickly issues, obviously, that have been the bugaboo for trade. No doubt soybeans is going to be one. We're going to talk about that, in greater depth later this hour. But soybeans, right now it's the harvest season in the United States. Farmers in America are quite concerned that they're not getting the order books filled for their soybeans because China, let's face it, they've diversified their sourcing to Brazil and elsewhere. They didn't fulfill their commitment in the first trade deal that Trump made, but pandemic happened, a lot of things happened, and now soybeans for the Chinese, they found other sources. Now, there's certain olive branches that China can also offer.
Yeah.
Gestures. One is just basically, according to the FT, scrapping this Google antitrust investigation on the prevalence of Android across China. But let's face it, that was more symbolic than anything. China or Google doesn't have a meaningful presence on the mainland right now, so they can do that. That could be an easy gift for China to give to the U.S. for good faith. The other one, rare earths. We're already seeing the exports, according to China Customs in August, were at record levels for rare earth minerals and the products, including those magnets that the United States needs. That is a lever that China is definitely going to use and has used in the past. It looks like the export numbers are quite strong in August.
All right, Steve, thank you. Our chief Malaysia correspondent, Stephen Engel there. Of course, let's get the take from UBS, right? They've been talking to a lot of overseas investors, getting more confident, who they say are getting more confident when it comes to China, despite the back and forth on trade as well. Let's bring in Thomas Fang, head of China Global Markets at UBS. Tommy, it's good to see you.
Yeah, it's good to be here.
What's the sentiment like now? I mean, obviously we've seen a rally. Things have slowed down a little bit, but where do we stand now?
Well, we just finished our 22nd anniversary of Asia Conference a few weeks ago. So we have seen record attendees, both from global investor and the domestic. The overall, if you look at it on the back of very strong momentum, particularly in August, investors are really looking to China, both the long-term investors and also trading-oriented investors, both domestic and international.
Okay. I want to ask you a follow-up on the trading-oriented clients of the bank here. So what seem to be the preferred strategies right now? Like what have they been doing?
Well, there are a lot of fundamental-driven but short-term oriented clients. Obviously, the AI supply chain has been the focus, but overall, the biotech and the new consumption and some of the other high beta name has been very much in focus.
Is there still hesitation for many to want to deploy more capital into this market here right now? I mean, in terms of the macro side of things, are they still focused on the fundamentals and waiting for maybe something more there before they actually get more or turn more bullish?
Yes, there are, I would say, skepticism from global investors, especially the long-term oriented patient capital, if you will. So they are looking at broader-based rebound for all sectors, not only just the high beta one, but also, the beaten up, consumption names. The argument is, if it's fundamental plus the liquidity-driven rally with the lower risk-free rates and the risk premium, so it should justify for all sectors to grow. We have seen some of those rotation, and now we see the exchanges and regulator are also putting some messages to calm down some of the more hype sectors and have the broader rallies. Yeah.
So they're waiting. Is it fair to say that the patient money, they're waiting for the macro to turn and for that to look convincing before they reallocate in a bigger way back to Chinese equity markets?
I think people always, equity investors always invest ahead of the overall macro or economics, if you will. Right. So they want to see clear signals. If it's the anti-evolution campaigns, whether you trickle down into the profitability of the broader companies, and then they want to see liquidity spread broadly, not just a few high beta sectors. Okay. So those are the things they are looking for. We have seen some of the encouraging signs, and we'll continue to work with those investors to find those broader base rallies.
Opportunities, yeah.
What do I do with tech now? I mean, What do I do with tech now?
The high growth, high beta.
Well, I think so. This is the key theme, not just for China, globally, right? So this is what drives the U.S. market, and also the good news is the logic become aligned globally. So we have seen global investors looking at the sector holistically, compare valuation. So now, before it's quite hard to compare U.S. versus China. But now with DeepSeek and some of the comparables, they look at the overall tech, deep tech, high-end manufacturing and AI supply chain valuation in a sort of a like-for-like basis. So we have seen investors' overall sort of responses. Yes, the AI sectors, some of the leading names in China has rallied quite a bit, but compared to the forward-looking of 12 to 18 months, it is justifiable. But so this will be a 2-3 year story, so then they will have a sustained a longer-term rally.
What about the other themes that did well going into this one, but somehow got forgotten because of the tech rally? Things like dividends or value plays, for example. Sure. What about those other strategies?
Well, we still see, for example, for Hong Kong, because of there are, very solid number of southbound investors, especially from insurance companies, sectors from China. They are also taking that more conservative approach, looking at, value names and also high dividend yield names. So those continue to be, a good sectors to look at as well, especially with some of the uncertainty still lingering around tariff.
What do you think could really derail this equity rally? If you look at the rest of the year right now, whether it's trade tensions, whether it is any sort of policy or the lack of stimulus, or what do you think could actually derail this market?
But overall, I think many of the risk factor, I would say, is properly priced in. Okay. There are a few things, when we discussed during the conference earlier this month, could be Chinese, regulator being too heavy-handed in terms of this liquidity rallies. So we have seen, I think, regulator and exchange are relatively cautious in terms of how they guide the market. So that's one. The other one is whether a global market will have a larger sell-off. But with the Fed started easing, so that seems also a relatively manageable risk. So overall, we just need to look at all sectors. I think overall U.S.-China negotiation, the general, I think, consensus, this will be a medium-term, ongoing sort of negotiation. It's not a one-time deals, but the catalyst hopefully will be on the upside either today or the potential summit between President Xi and Trump.
I'm wondering whether, I'm not sure how to state this more diplomatically, but I'll just say it bluntly. I wonder if investors still care about these trade negotiations. It doesn't seem to be featuring in many of these lists of risks to watch. Yeah. There seems to be other good reasons to ignore any potential friction between U.S. and China, for example. So I wonder, does it still come up in your conversations with clients?
It does.
Okay.
So, but it's relatively, I think it's also a reflection of resilience of the company and the economy. So we priced in, our economists priced in a year-on-year decline of export. But if you look at the data, particularly to the rest of the world, actually overall China's export has been very strong. U.S. also, down year-on-year down, but it's holding up relatively in a sort of better than expected level. But we need to see the detail, like what Steve said. So what happens during the talk today, and also the ongoing negotiations. But I think China is ready to make an overall concessions and also be prepared. This is not a one-off negotiation. It will be going on into October, into the year end, into next year.
Tommy, it was great to see you. Have a great weekend. I think there's a bit of weather out there, so stay dry, stay in. I have some recommendations, some fairly lackluster TV series out of Netflix. There's a lot of that, by the way. Tommy Fang there, head of China Global Markets at UBS. Right, we are on watch for the BOJ. Could come really any time this hour, now maybe towards the latter part of the hour. So we'd live out of Tokyo next with Sherry to give us a preview of what to expect or not to expect out of the Bank of Japan. Right, welcome back. And left side is the equity market rally, which continues on in the Asia Pacific. Russell 2000 futures, after hitting a first record since 2021, continuing to see some upside, 0.25%. And of course, the bond markets have really been well behaved as the MOVE index, 3-year lows in that S&P futures bottom of your screen. So yeah, it seems to be a very good place right now.
It seems like we got through the Fed pretty easily.
What Fed?
Remarkably so. And so, is there reason to think that this everything rally can continue, right? We did speak with Amy Shea Patrick from Pendle Group earlier about, she's mentioned basically it's hard to kind of stay bullish, really, in the short term in the bond market. Take a listen.
In this environment, it's really difficult for me to get short-term very bullish on bonds. But I do think that, it's a matter of time. When you do get this kind of herd thinking and herd behavior happening in equities, and if I start to see more signs that the way equity markets are moving are becoming more and more divorced from the company fundamentals and from the economic fundamentals, then that opens up the gap for a bit of a shock to the system that may cause a bit of a reset in pricing.
All right, JGBs, though, that certainly is one thing we're watching after we saw that 2-year yield, right? We briefly did touch to the highest in terms of 2008, so 17 years, right? So maybe there's anticipation that we might hear a bit more hawkish tone from Ueda later on in this BOJ meeting. Let's bring in Sherry An, our Asia Trade co-anchor, with a preview of what to expect from the BOJ. So let's first start off with the eco, right? I mean, it seems like it still remains strong. The inflation data today, headlines suggest that things are decelerating, but still above the BOJ target. And still people are anticipating that the BOJ can probably hike later on this year, but the narrative seems to be because of the political situation, they just have to hold today.
Yeah, but the inflation data that you mentioned, yes, that pushed JGB yields higher, right, with a 2-year yield at the highest since 2008, as you guys mentioned. And it's the expectation that the Bank of Japan won't be able to hold off any longer when it comes to hiking the rate. We're talking about potentially October swap rates now. Swap markets pricing in 30% chance of that October rate hike. But the variables that you mentioned, political uncertainty, that has led some people to push back expectations of that rate hike to come next month, given that we could see some of the lead contenders for the ruling LDP leadership race, for the likes of Sanae Takaichi, who has advocated for aggressive monetary easing. But the economic data is in place, especially after we got more certainty around U.S. tariffs with that trade deal struck with the United States in July. Now we have strong GDP data, strong wage growth as well. So inflation numbers this morning decelerating a little bit on the headline year-on-year growth of 2.7% for core inflation, but take out energy prices as well on top of fresh food, and you get inflation above 3%, which is obviously above the BOJ's 2% target, now running for more than 3 years.
Okay, and can we talk more about the political landscape? There's a date, I believe it's the first week of October. What should we expect, and might that, once we're done with that, then open the door, a clear path to higher rates, Sherry?
So campaigning starts next week on Monday, and yes, the vote is on October 4th. And the expectation right now is that the lead contenders are, as I mentioned, Sanae Takaichi, who's a hardline conservative, who's advocated for aggressive monetary easing and fiscal spending as well. In fact, before the election last year, she was one of the lead contenders, and she talked about how stupid it would be to hike rates back then by the Bank of Japan. Of course, the macroeconomic picture, as I mentioned, has changed significantly since then, but she's still a lead contender. We also have the Agriculture Minister Shinjiro Koizumi, though, who is seen as more supportive of rate hikes. So just thinking about aggressive monetary easing might not be the right strategy for markets pricing, according to some analysts who think the markets have gotten ahead of themselves. Of course, we have seen this rotation out of bank stocks into real estate, for example, that relies heavily on debt. But recent polls, including Kyoto, showing that Takaichi, yes, is at 28%, but Koizumi is at 23% approval rating. And we also have the Chief Cabinet Secretary Yoshimasa Hayashi also jumping into the race. And remember, the surprise leader of the election last year was Ishiba, who was seen as a more neutral contender. So we'll be watching the top government spokesperson very closely as well.
All right, Sherry. Thank you, Sherry, on there. Our Asia Trade co-anchor on what to expect out of the BOJ. And, of course, when it comes to that election. We're more on the upcoming BOJ decision. Goldman Sachs is going to be joining us next here. They also say, maybe a hold, but, they might have to hold till January before the BOJ actually moves. Much more ahead. This is Bloomberg.
Welcome back. President Trump says U.S. broadcast networks should face license scrutiny if they're too critical of him. Trump had earlier praised ABC's suspension of Jimmy Kimmel over comments about conservative activist Charlie Kirk, and also filed a $15 billion lawsuit against the New York Times. Now, the incidents have spurred worries among Trump critics about free speech in the United States.
Meanwhile, U.S. authorities are continuing to investigate Charlie Kirk's alleged killer, Tyler Robinson. The U.S. Secret Service is said to be looking into the 22-year-old's online and gaming activity. And the New York Times is reporting that state media from Russia, Iran, and China are using Kirk's murder to stoke conspiracy theories. They said in a report that official media have mentioned Kirk over 6,000 times from September 10th to 17th. Utah's governor, meanwhile, made the same claim in a news conference last week.
What we're seeing is our adversaries want violence. China, we have bots from Russia, China, all over the world that are trying to instill disinformation and encourage violence.
Right, and we're looking at Chinese media right now hitting back at those claims. This editorial you see here on our big screen right now is out of the Global Times, which singled out the New York Times report, saying it's using familiar narrative against China. So the piece actually accuses the U.S. of blame shifting and claims that it's looking to distract from its own problems, including gun violence and political polarization. And certainly when you look at what's happening underneath the hood and how this is being framed, it certainly just points to the very fact that this also clearly has happened, but it's just like the roles have shifted at this point in time, Yvonne.
Yeah, the fact that it's made it into Chinese media is quite interesting as well. But certainly it does raise a lot of questions about what's next when it comes to, obviously we've been tracking, there's a lot of political violence that's been really sparked in America overall. So certainly, we have to continue to watch what this means and really the narrative and moving forward here. So there's a lot going through here, how the state media and everyone is kind of playing this right now. In terms of markets and what we're seeing, right now we're focusing a little bit more, of course, on what's been going on in China, right? So obviously we continue to watch how this rally goes. It seems like right now things are stabilizing just a little bit here as well, but certainly there's a lot to unpack here as we count down to that Xi and Trump call later on today. This is Bloomberg. .29 a.m. in Tokyo. Japanese markets are heading to that lunch break, of course, and we are still counting down to that BOJ decision here, likely to hold, but certainly what Ueda-san is going to say, and of course, and the tone in which whether he will open the door possibly for a rate hike later on this year. I mean, this is after what we saw when it came to those inflation numbers. Core was still pretty strong and above that BOJ target. So there you go. That's why you're seeing that 2-year yield, which we don't have here, but yes, 17-year high for the 2-year JGB yield today.
Yeah, I think 88. The take from our colleagues at Bloomberg Economics is similar to advice if you see a shark out in the waters. No move is the smart move out of the BOJ. There we go. SoftBank, big news there on the Vision Fund. But, of course, the percentage tells you much, perhaps, somewhat does a disservice as far as the absolute number of jobs actually within the Vision Fund itself. But it's about a fifth of the head count on the Vision. Markets don't seem too bothered by what's going on. They're 1.2%. The other big story, of course, that's playing out in Japan today, and we talked about the BOJ and this, is really Intel. And, yep, there we go. And, of course, a massive move up in Intel shares overnight. Of course, Nvidia now involved there. The co-developing chips and across the supply chain listed over in Tokyo. You do see some market reaction there going into the morning, going into the lunch break here. There we go on the Nvidia story. We'll talk more about that.
It's certainly an interesting one, right? Because, I mean, these were two rivals for, decades? And now you're talking about some sort of co-marriage of some sort. We did hear from the Nvidia CEO, Jensen Huang, during a conference call with his Intel counterpart, Lip Bhutan. Take a listen.
The two technology teams have been discussing and architecting solutions now for probably coming up to a year. The two architecture teams, it's three architecture teams, are working across, of course, the CPU architecture as well as product lines for server and PCs. And so the architecture work is fairly extensive. And the teams are really excited about the new architecture. And so the teams have been working a while, and we're excited about the announcement today.
Let's bring in Robert Lee, our Bloomberg Intelligence senior analyst, on, certainly unexpected pairing of two companies, as Ron was just pointing out there. They were competing, and of course now they're somewhat together. Is it worth looking at who the winners are? Are they both winners? In this specific case, how does this work out?
I think the obvious winner is clearly Intel because, just to quote some numbers at you, at the peak of demand that coincided with COVID, they were generating in excess of 20 billion operating profit in a year. That was in 2020. In 2024, that had dropped to a marginal loss. So there's been a massive turnaround in their underlying profitability for reasons we've discussed previously. So there's been a lot of talk today about them being thrown a lifeline, which I think there's a fair amount of truth in, both financially, in terms of putting cash in their balance sheet. And obviously this move follows a similar cash injection from the US government of about $5.7 billion. And don't forget as well, I think in the last couple of weeks, we've seen SoftBank also put, I think, $2 billion into them. So there seems to be a coalition of the willing, I'm trying to find the right phrasing there, but a coalescence of companies with, either strong strategic interests in developing the US tech sector, I would imagine as well with a bit of backroom direction and encouragement from the White House, to help re-establish Intel, to at least to stabilize it financially in the short term. But I think still there are major question marks about the growth outlook for Intel.
Yeah, certainly, I guess, breathing some fresh air into the company, but does it get them out of these troubles?
Well, again, as you said in your intro, cast your mind back. Intel was previously the global technology leader in semiconductors until TSMC overtook them. And essentially, they have two businesses. They've got the design business, which is focused on the PC market. And as we know, that's an ex-growth market. The market's fully penetrated. There are limited growth opportunities. There's the server market, where Intel's quite well placed, but they've been under heavy pressure because of competition from the likes of AMD. So there are big question marks there. They never really got into AI in any meaningful way. And then finally, they've been pushing into foundry or trying to push into foundry for, 15 years or so, maybe longer. And again, that's a market dominated by TSMC. So strategically, what are they going to do going forward? Are they going to push down the foundry line, which I think under Pat Gelsinger was a sort of direction they tried to take. That didn't really play off, and obviously Pat departed. I think that there was a lot of talk out there, and there's a lot of rationale behind the arguments as to why maybe the company should split ultimately. In the same way that AMD did. AMD hived off its foundry business into global foundries. And, looking back, that was the right strategic thing to do. So I think at the very least that is a major strategic question going forward. There can't be all things to all men. They're lacking growth drivers. We need a very clear, coherent strategy. Cutting costs and all the rest will help stabilize things in the short term, as will cash injections applications, but what's going to drive the growth of this company going forward? I would say it's more likely on the design side, less likely on the foundry, just because that's an incredibly expensive business to compete in, and they've lost their technical lead.
And for any concerns that this might affect the outlook for TSMC, should we just put those current concerns to bed at the moment?
Yeah, I think so, again, because they've tried and not had a great deal of success. And to be fair, Samsung in Korea has also tried to break into foundry. Right. It's so dominated by the Taiwanese. It's the boat has sailed to some degree. So, I think maybe sentiment-wise there's an impact. But also don't forget that Intel's high-end chips now are actually fabricated by TSMC. So, again, I think that leads you sort of logically, the greatest opportunity for Intel was really in chip design, which is a lot less capitally intensive. It is R&D intensive, but it's a lot less expensive business in crude terms to remain in. But they need to drive, maybe with Nvidia's help, and they need to tap into growth markets. And to date, that's something they've really failed to do.
Robert, thank you. Robert Lee there, Bloomberg Intelligence senior analyst. And yeah, it kind of brings up some old names like Oracle as well, which basically has really been catapulted into the spotlight here, just given all these AI news and the like. And even briefly made Larry Ellison, the co-founder, the world's richest person, right? And known for its database software, Oracle has recently found success in the red hot cloud computing market and competing against the likes of Amazon, Microsoft, and Alphabet.
Yeah, Bloomberg Originals has been looking into really how legacy tech giant, this specific name, became this massive AI force. Have a look.
True to its name, only Oracle seemed to see this coming.
Oracle is having its biggest jump since 1992.
What a blowout quarter for the software company.
Maybe the stock of the year.
And then, just days later,
TikTok's US operations are set to be acquired by a consortium including Oracle.
Oracle shares spike after it's named as part of the consortium.
What was going on? This was an old-school enterprise tech firm, tickling investors in places only a flashy startup normally reaches.
Because Oracle basically said that they have almost $500 billion of contracts to be earned in the next few years. And that was a shocker.
Everyone was modeling maybe, $150 billion.
It blew away analyst expectations.
Now, Oracle's deeply connected to one of the hottest social media properties on the planet. And behind
गाइस ये क्रूड ऑयल कुछ कर ही नहीं रहा है इसमें जो लोग रुके हुए हैं अगर अभी भी इसमें निकलना चाहो तो निकल जाओ कॉस्ट टू कॉस्ट पे ही है वापस अभी ऊपर जा ही नहीं रहा है ये बाकी अगर इसमें रुकना चाह रहे हो तो फिर भैया एसएल स्ट्रिक्ट रखना इससे बड़ा एसएल लेना मत और एसएल जाएगा तो निकल भी जाना है फिर होल्ड मत करके बैठ जाना काफ़ी देर हो गई है मॉर्निंग से ही कहीं रुका हुआ है अब मान के चलो कल ही आ गया था इस सपोर्ट एरिया पे क्लोजिंग होते होते आज अर्ली मॉर्निंग भी ओपन हुआ आया सपोर्ट थोड़ी बहुत बाइंग हुई फिर काफ़ी देर से रुका हुआ है वहीं पर कंटिन्यूसली ओपन इक्वल टू हाई बनाया जा रहा है ब्रेकडाउन के लिए बट हो नहीं रहा है ब्रेकडाउन दैट इज़ अ डिफरेंट थिंग सो आई विल सजेस्ट यू जो लोग अभी भी रुके हुए हैं स्ट्रेट में या तो निकल जाओ कॉस्ट टू कॉस्ट नहीं तो इससे बड़ा ऐसा लेना मत अब जाएगा तो निकल ही जाना ब्रेकडाउन हुआ नहीं है अभी भी देखते हैं बेस साइडवेज ही जाता है आज या फिर कुछ मोमेंटम करता भी है अब 5:30 न्यूयॉर्क सेशन ओपनिंग मोस्ट प्रॉब्ली उसके बाद शायद थोड़ा बहुत मोमेंटम इसमें भी आ जाए रिस्की हो चुका है रीजन इज दैट बहुत ही ज़्यादा कंसोलिडेशन है आप मान सकते हो 50% चांसेस हैं किसी भी साइड में मोमेंटम दे सकता है कहा नहीं जा सकता किस साइड मूव करेगा एग्जैक्टली cautious on this level. नॉर्मली इतना मोमेंटम इतना साइडवेज तो मैंने देखा नहीं है नहीं तो एसएल अभी तक जा चुका होता मच साइडवेज मोमेंटम है रिसेंट टाइम में इतना साइडवेज मोमेंटम मैंने भी नहीं देखा कहीं पर हो नॉर्मली या तो मोमेंटम डायरेक्शनली जिस डायरेक्शन पे ट्रेड है आ ही जाता है या फिर एसएल चला जाता है दैट इज़ अ नॉर्मल थिंग बट दैट काइंड ऑफ साइडवेज मोमेंटम मतलब कुछ ना कुछ यू नो समथिंग कुकिंग अंडर द टेबल कुछ तो ऐसा हो रहा है जो हमें नहीं पता एक तो कैंडल देखोगे आज एक्सपायरी भी है शायद फ्यूचर की ये जो मैंने करंट फ्यूचर लगाया करंट मंथ का ही है नेक्स्ट मंथ का है नहीं तो हो सकता है उस वजह से थोड़ा सा वॉलेटाइल और ज़्यादा हो रहा हो लाइक भी करते रहो गाइस लास्ट ट्रेडिंग सेशन है तो ज़्यादा रिस्क भी नहीं लेना है ठीक है फिर मंडे को ही मार्केट ओपन होगा तो तब देखेंगे बाकी कोई डेटा भी नहीं है आज देयर इज़ नो डेटा शेड्यूल फॉर टुडे तो जो भी मोमेंटम होना है नॉर्मली इसी लेके है इसी लेवल पर ही है से देखोगे बिल्कुल एक स्मॉल सी रेंज में फंसा हुआ है प्राइस 60 पॉइंट की 27 लाइक्स आर डन 50 लाइक्स का टारगेट है गाइस लाइक करते रहो सभी लोग क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हैं है 1857 1957 तो उसमें ऐसे भी देख लेंगे कितना आता है फ्यूचर में तो नहीं होता ये क्रूड ऑयल में जो लोग निकलना चाहें निकल भी सकते हैं बाकी अभी रिस्की है 50-50% चांसेस हैं इसके ऊपर जाने के और नीचे आने के दोनों ही चांसेस 50-50 हैं हो सकता है इसी तरह से साइडवेज चला जाए हो सकता है ऊपर जाए हो सकता है नीचे भी आ जाए क्योंकि अब इस लेवल पे प्रिडिक्ट कर पाना प्राइस को प्रोबेबिलिटी के अकॉर्डिंग बहुत ही लो है कि वो एक ही डायरेक्शन पे जाएगा फिर रिपीट कर रहा हूँ, जो लोग क्रूड ऑयल में अगर रुके हुए हैं निकलना चाहें तो निकल जाओ, कॉस्ट टू कॉस्ट पर ही है प्राइस, वापस मौका देगा नहीं देगा वी डोंट नो। और दोबारा एंट्री करना मत इसमें, अगर लिया हुआ है रुक रहे हो तो फिर इससे बड़ा एसएल भी नहीं मत लेना, क्योंकि अभी 50-50 चांसेस वाला ट्रेड है। वी डोंट नो अभी ऊपर जाएगा या फिर नहीं, इस पर्टिकुलर जोन से स्पेशली लॉजिकली तो चला जाना चाहिए था अभी तक। काफ़ी अच्छा लेवल था, काफ़ी अच्छा लेवल था ये कल से इस लेवल पे, बट लग रहा है शायद बायर इंटरेस्टेड ही नहीं है। वो नीचे वहाँ पे लिक्विडिटी लेने वहीं जा सकते हैं अब तो इसमें। मुझे वही लग रहा है, बीच में और कुछ है नहीं इसमें लेवल, कोई रिमूव ही कर दो। फिर रिपीट कर रहा हूँ, क्रूड ऑयल का ट्रेड अब रिस्की हो चुका है, अगर निकलना चाहो तो निकल जाओ, कॉस्ट टू कॉस्ट पर ही है। दोबारा एंट्री मेरे अकॉर्डिंग तो मत करना, अगर कोई रुक रहा है इससे बड़ा एसएल भी मत लेना। नीचे आएगा तो अब नेक्स्ट सपोर्ट यहाँ देखते हैं इस एरिया के आसपास। बाकी ये करंट मंथ का फ्यूचर है तो उसका भी ध्यान रखियो। ऑलरेडी आ गई इसमें पर्पल बाइंग। ठीक है, मैं भी इसको रिमूव कर रहा हूँ। मैं फिर रिपीट कर रहा हूँ, क्रूड ऑयल के बाइंग के ट्रेड में कोई है तो निकल जाना मेरे अकॉर्डिंग। नाउ इट इज़ टू रिस्की टू होल्ड दिस ट्रेड, कॉस्ट टू कॉस्ट पर ही है, जाने के चांसेस 50-50 हैं, जा सकता है, मैं मना नहीं कर रहा हूँ, ऊपर जरूर जा सकता है, बट इट इज़ टू रिस्की टू टेक होल्डिंग दिस पोजीशन। अगर होल्ड कर रहे हो तो इससे बड़ा एसल मत लेना। 5548 थोड़ा नीचे आ जाता है तो इस एरिया के आसपास देखते हैं फ्रेश बाइंग। बाकी कोई नया सपोर्ट बना दे तो तब मेरे अकॉर्डिंग ज़्यादा बेटर है देन यहाँ पर ट्रेड करना, तो मैं भी इसको रिमूव कर रहा हूँ फिलहाल के लिए। ठीक है, थोड़ा नीचे आएगा तो वहीं का वेट करते हैं, और कुछ कर नहीं सकते इसमें। एक सेलिंग का ट्रेड ही ले लें यहाँ पे, एक सेकेंड, क्योंकि ये ब्रेक डाउन तो कर ही चुका है। एक सेलिंग का ट्रेड ही प्लान कर लेते हैं यहाँ पे। 50-50 चांसेस हैं, कुछ तो रिस्क लिया जा सकता है। इसको रिमूव ही कर दो। ठीक है, यहाँ पर एक सेलिंग का ट्रेड प्लान कर रहे हैं क्रूड ऑयल में। वो बाइंग के ट्रेड से निकल जाना, बार बार रिपीट कर रहा हूँ, डोंट होल्ड नाउ। इवन तो ब्रेकडाउन के लिए मार्केट रुक रहा है, 50-50% चांसेस है। नीचे वाला 5500 तक का रखते हैं, इससे बड़ा भी नहीं रख सकते, काफ़ी है। ठीक है, बहुत ही कंजस्टेड लेवल है ना, ऊपर के अभी भी सेलर निकल पा रहे हैं प्रॉपरली, बायर अभी भी हटने के लिए रेडी नहीं है। तो रिस्की ट्रेड है तो कुछ तो रिस्क लेना पड़ेगा यहाँ पर, या तो अवॉइड ही करो, कुछ कर नहीं सकते। बेस्ट के लेवल तो यही है कि ऊपर वाले लेवल पे मिले या फिर नीचे वाले लेवल पे मिले, दो आर सेफ लेवल्स। यहाँ पर कुछ भी करें, बाई सेल दोनों ही रिस्की हैं, बट या कैन टेक सम रिस्क, थोड़ा तो ले सकते हैं, ज़्यादा भी नहीं, बट वी कैन मैनेज सम रिस्क ओवर हियर। तो एक छोटा सा ये ट्रेड यहाँ पर प्लान कर लो, 1/4। ठीक है, एक छोटे से सेलिंग के ट्रेड के लिए। बाकी देखते हैं 5:30 के बाद, आई होप सो रेंज ब्रेक करे। ज़्यादा रिस्क मत लेना ट्रेड्स में, ये भी ऐसा ना हो कि साइड भी चला जाए। एसएल उतनी पॉइंट का है जितना वहां पर रखा हुआ था उस फ्यूचर में। हाँ, बिल्कुल कंजस्टेड है, ऊपर रेजिस्टेंस से नीचे सपोर्ट, वो ब्रेक हो नहीं रहा है, ये ब्रेक नहीं कर रहा है। जब सपोर्ट इसके बाद पास हो जाएंगे तो फिर मोमेंटम ही नहीं होगा। बाकी जो लोग रिस्क नहीं लेना चाह रहे हैं अवॉइड ही करना इस लेवल पे क्रूड ऑयल को। जैसा मैंने बताया दोनों साइड से रिस्की ही ट्रेड है, चाहे सेलिंग का लगाया जरूर है वो भी रिस्की, ऐसा नहीं है बुलिस हो गया है वो, सॉरी बेरिस हो गया कम्प्लीटली। रीज़न इज़ वेरी सिंपल, नीचे सपोर्ट ब्रेक नहीं हो रहा है, ऊपर रेजिस्टेंस के लिए जा भी नहीं रहा है, सेलर आर टू स्ट्रॉन्ग, कंटिन्यूसली ओपन इक्वल टू हाई बनते जा रहा है, तो किसी एक साइड पे एसएल जाना फिक्स है, तो रिस्क उतना ही लेना जितना ले सकते हो। लास्ट वाले ट्रेड में अगर जाना होता तो मोमेंटम ऐसे हो जाना चाहिए था, काफ़ी देर से रुका था, बट अब दोनों ही साइड के बायर और सेलर दोनों ही वीक हो चुके हैं, क्योंकि मल्टीपल टाइम उस लेवल को होल्ड करके सेलर भी बैठे हुए हैं और बायर भी बैठे हुए हैं उसी एरिया को, तो एक कंजस्टेड जोन है, प्राइस हो सकता है इसी रेंज में घूमता रहे। लेट्स सी किस साइड के एसएल उड़ाता है पहले। क्या फिर रिपीट कर रहा हूँ, ये भी ट्रेड रिस्की है क्रूड ऑयल का, चाहो तो अवॉइड भी कर सकते हो कम्प्लीटली ट्रेड लेना यहाँ पे, कि मार्केट दोनों साइड मोमेंटम रखने की पॉसिबिलिटी कर सकता है। बाकी सेफ ट्रेड लेना है तो मैं तो ये कहूँगा कि इस दो पर्टिकुलर जोन पे ही ट्रेड लेना, या फिर किसी एक साइड पे यहाँ पर रेंज को ब्रेक हो जाने दो तब ट्रेड करना, नहीं तो फंस भी सकते हैं। जो रिस्क नहीं लेना चाह रहे उनके लिए स्पेशली बता रहा हूँ, ठीक है, कि ऐसा ना हो कि लेके बैठ जाओ और फिर प्राइस आपके अपोजिट डायरेक्शन पे मूव कर जाए, देन फिर प्रॉब्लम क्रिएट हो। समझ में आ रहा है? यहाँ पर जो सिचुएशन है वो बड़ी ही क्रिटिकल है। यहाँ पर देख रहे होगे सपोर्ट से बायर अभी भी निकले नहीं है, बट रेजिस्टेंस थोड़ा सा ऊपर है, बट उसका प्रेशर इतना ज़्यादा है कि प्राइस अपसाइड भी नहीं जाना चाह रहा है, थोड़ा सा भी अपसाइड जाने पे सेल ऑफ आ जा रहा है। तो एक तरह से मान के चलो कि कंप्लीट एक रेंज है जहाँ पर प्राइस दोनों साइड ब्रेक कर सकता है, तो इसमें तो निकल ही जाना है बाइंग वाले ट्रेड से, कॉस्ट टू कॉस्ट पे आ ही गया है, उसमें तो मैं भी होल्ड नहीं कर रहा हूँ। बाकी सेफ चाहिए तो वेट लेवल का वेट कर लो, दैट इज द सेफेस्ट थिंग यू कैन डू, अदरवाइज नो ट्रेड इज सेफ ओवर हियर, ठीक है। इसमें सेफ तभी हो सकता है जब एक साइड के एसएल चले जाए, दूसरा कोई ऑप्शन नहीं है। फॉरेक्स में देख लेते हैं फॉरेक्स में क्या चल रहा है। रुको यार इसमें वेट करते हैं अभी, अननेसेसरी रिस्क मत लो। देखिए जब तक वहाँ पे कोई नया सपोर्ट नहीं बन जाता। तो यहाँ से आया सेल ऑफ, इसका 50% डन, यहाँ से सपोर्ट लेके जो है इसका 50% डन, यहाँ से सेल ऑफ करना ही बेवकूफ़ी है। इसलिए ब्रेक हो गया ना इसलिए। अब इसको ऊपर जाना है तो या तो नया सपोर्ट बनाना पड़ेगा, तीसरा कोई ऑप्शन ही नहीं है। ये भी थोड़ा पुल बैक देता, अब देखते हैं वो ले सकते हैं। बिकॉज फॉरेक्स वाला ही है जो मोमेंटम करा सकता है उस केस में। हो जाएंगे नहीं तो अननेसेसरी ना। पहले ब्रेकआउट करे फिर नीचे आए, ताकि यहाँ से जो लिक्विडिटी है सेलर्स की वो निकल जाए। यू नो ये एक बार 5-6 से चला जाए, यहाँ ब्रेकअप करे फिर नीचे आए, देन एक पॉसिबिलिटी बन सकती है। अदरवाइज तो इंटरेस्टेड नहीं है, छोड़ दो। ठीक है तो क्रूड ऑयल में अभी मेरे अकॉर्डिंग तो अवॉइड ही कर लो यार। काफ़ी देर से रुके थे बाइंग के ट्रेड में, कल जैसा ही सिनेरियो हुआ है, वो बाइंग वाले ट्रेड में तो अब होल्ड नहीं है, मैं तो निकल गया हूँ। मैं आपसे भी कहूँगा कि अगर निकलना है निकल जाओ, होल्ड कर रहे हो तो आपकी चॉइस है। सेलिंग वाले ट्रेड में तो जाना ही मत, वो अभी हटा ही दिया मैंने। कोई फ्रेश ट्रेड में वेट कर रहा हूँ कि किसी एक साइड पे प्राइस पहले निकल जाए, एक साइड के एसएल हिट कर दे बायर्स के या फिर सेलर्स के रेंज के वाला ऊपर, उसके बाद फिर कहीं देखते हैं। बाकी सेफ ट्रेड चाहिए तो ये लेवल है, बीच में बनेगा तो बना दूंगा, अभी कोई नहीं है। अब मोमेंटम होना होता तो हो जाता मॉर्निंग से। बाकी 5:30 का ध्यान रखना, न्यूयॉर्क सेशन की ओपनिंग होती है तो। लेट्स मूव ऑन टू द ऊपर वाला तो स्ट्रॉन्ग है, अभी भी काफ़ी स्ट्रॉन्ग है, वहाँ तक जाना है लेकिन पेंडिंग। अच्छा ये चार्ट ये आपका 1984 रैली में चल रहा है मार्केट ये भी अच्छा है 84 वाला
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, the Walt Disney Company's decision to take ABC's Jimmy Kimmel Live off the air continues to make waves. The late-night show was suspended indefinitely after the comedian joked about Republicans' reaction to conservative activist Charlie Kirk's death. Now, President Trump says the Federal Communications Commission should look into the licenses of broadcast networks that are too critical of him.
When you have a network and you have evening shows and all they do is hit Trump, that's all they do. If you go back, I guess they haven't had a conservative on in years or something, somebody said. But when you go back and you take a look, all they do is hit Trump. They're licensed. They're not allowed to do that. They're an arm of the Democrat Party.
President Trump spoke aboard Air Force One. He has suggested that NBC should fire its late-night hosts Jimmy Fallon and Seth Meyers next. Fallon addressed Jimmy Kimmel's suspension on last night's Tonight Show.
This morning, I woke up to 100 text messages from my dad saying, "I'm sorry they canceled your show." I go, "That's not me. That's Jimmy Kimmel."
Jimmy Fallon says Kimmel is a decent, funny, and loving guy, and he hopes he comes back. Sources tell Bloomberg News Disney executives met with Kimmel last night to discuss the future of his show. They say the soonest it could return to the air is this Monday.
Well, we want to turn to the latest now, Nathan, on U.S.-China relations. President Trump's call with Chinese President Xi Jinping will be the first direct engagement between the two leaders since June. The future of TikTok is expected to top the agenda. Bloomberg's Amy Morris has a preview from Washington.
Negotiators from both countries reached a framework deal earlier this week to preserve the U.S. operations of TikTok under a national security law. President Trump says there's value in TikTok, and he doesn't want to give away value.
We're speaking to President Xi to see if we can finalize something on TikTok, because there is tremendous value, and I hate to give away value, but I like TikTok. It helped get me elected.
Xi and Trump are also expected to discuss a tariff truce after tit-for-tat tariffs earlier this year spooked the markets. The call is a watershed moment for both sides and will be watched closely for any indication on whether Trump and Xi agree to hold their first in-person meeting since Trump returned to office. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. And the call is scheduled to happen at 9 a.m. Wall Street time.
And that call, Karen, comes just a day after President Trump's historic second state visit to the UK. He signed a new partnership on technology that includes more than $300 billion in bilateral investments from the likes of Microsoft and OpenAI. And at a joint news conference with UK Prime Minister Keir Starmer, the president expressed disappointment over the war in Ukraine.
The one that I thought would be easiest would be because of my relationship with President Putin, but he's let me down. He's really let me down.
The president also showed mild disagreement with Prime Minister Starmer over the war in Gaza. President Trump says he does not support Starmer's decision to recognize a Palestinian state at the UN General Assembly next week.
Meanwhile, Nathan, U.S. law enforcement is building a profile on suspected Charlie Kirk shooter Tyler Robinson. That includes his use of President Trump's name as a pseudonym on Valve's Steam video game platform. Sources say the Secret Service has joined the investigation into the shooting, even though Kirk was not under the agency's protection. And Turning Point USA, the organization Charlie Kirk founded to mobilize young conservatives, says Kirk's wife, Erica, will serve as his next CEO.
Back in Washington, Karen, the Trump administration is asking the Supreme Court to allow him to remove Fed Governor Lisa Cook. We get more from Bloomberg economics correspondent Michael McKee.
Basically, they are refiling the same cases they filed in district court and then at the U.S. Appeals Court, arguing that the president has the unreviewable right to fire anybody for cause, and cause is whatever he deems it to be, which the district court judge rejected, but the appeals court didn't address that.
It's Bloomberg's Mike McKee. President Trump has cited allegations of mortgage fraud. Cook denies any wrongdoing. She remains at the Fed after lower courts blocked her ouster.
Let's turn to the markets now, Nathan, where stocks sit at records as we close out the trading week. The Dow, S&P 500, NASDAQ, and Russell 2000 all begin the session at all-time highs. It's a rare feat that's occurred on just 25 other days this century. Aaron Kennan is CEO of Clear Harbor Asset Management.
Certainly, valuations are not cheap. We're trading at sort of top quartile levels in most equity indices. And yet we also know that elevated valuations do not always or never really augur bear markets. Usually there's some economic shock that ensues.
Clear Harbor Asset Management's Aaron Kennan. It's the first time since November 2021 that all four major benchmarks closed together at all-time highs.
Karen, shares of FedEx are moving higher. They're up more than 5% in early trading. The parcel service reinstated its profit and sales forecast. It says revenue will grow by 4 to 6% in the current fiscal year. That topped Wall Street estimates. FedEx also says it expects a $1 billion hit from trade volatility this year due to President Trump's tariffs and the loss of a key exemption for low-value goods.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Thursday Night Football to start Week 3. The Bills got 3 touchdown passes from Josh Allen, beat the Dolphins 31-21. Buffalo is 3-0. Miami is 0-3. Clayton Kershaw, at age 37 in his 18th season, all with the Dodgers, announced that he's retiring at season's end. His last home, at least regular season start, will be tonight at Dodger Stadium, where last night Dodgers beat the Giants 2-1. Giants had only one hit. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
ABC put Jimmy Kimmel's late night show on hiatus this week after he made comments about the assassination of Charlie Kirk that some people found offensive. This is the latest example of Trump's war on the media. While presidents have long had adversarial relationships with journalists, no head of state has attacked outlets like Trump has. He's used threats, courts, and his administration's regulatory authority to pressure some of the world's largest media companies. And he's had a lot of success. And some people even suggest we're moving to an era of state-run media in the United States. Kimmel's comments came during a monologue. Afterwards, Brendan Carr, the chairman of the Federal Communications Commission, criticized the remarks. He called on ABC to take action. And he said if the network didn't, then he would. And the FCC does have the power to yank the broadcast licenses of local TV stations, ones that are affiliated with ABC. And indeed, after Carr's remarks, Nexstar, a big station owner, told Disney that it wasn't going to air Kimmel's show. Now, Nexstar is in the process of trying to merge with Tegna, another big local station owner, and it needs the approval of the FCC to do that. And now ABC, this wasn't their first run-in. They had already settled in December a $15 million lawsuit brought by Trump, alleging that correspondent George Stephanopoulos defamed the president. And we've also seen this at other media outlets. Paramount Global, which was trying to merge with Skydance Media, settled another Trump lawsuit for $16 million, alleging editing at 60 Minutes was done to make Kamala Harris look better and not President Trump. And very soon after that, the CBS also said it was canceling its late night show with Stephen Colbert, a frequent Trump critic, that ends next year. And then, lo and behold, just days later, the FCC approved that Paramount Skydance merger. So media outlets are seeing this and thinking that it has consequences in terms of their business. For Trump, the strategy seems to be working because in the case of these settlements, he's raising money for his presidential library. He has energized his base. He did call this week for NBC to fire its late night hosts, Jimmy Fallon and Seth Meyers. No action from NBC on that so far. But Jimmy Fallon did skip a public appearance on Thursday that he had planned.
ठीक है, क्रूड ऑयल साइडवेज ही जाने वाला लग रहा है आज। 5:30 के बाद देखते हैं, कुछ मोमेंटम आता है, नहीं तो फिर यूएस मार्केट के बाद ही मूव करेगा मोस्ट प्रॉब्ली। साइडवेज है मार्केट। AI से डे लो देखोगे आज तो 70 पॉइंट की रेंज है।
Connecting the dot between what's at stake and what is possible.
A big headline crossing the Bloomberg terminal.
A big headline, quite the headline, John, for two companies that the U.S. government has a vested interest in. In a statement, we heard from the Nvidia CEO Jensen Huang, who called this a historic collaboration. As part of the deal, Intel is going to use Nvidia graphic technology in upcoming PC chips, and Nvidia will use some of Intel's processors in order to meet the demand from AI data centers. The idea here being that they're really going to work together when it comes to some of this chip development. And it follows, of course, a recent push from this administration to bolster the domestic chip supply chain. Of course, last month, President Trump signing that deal that gave the U.S. government a 10% stake in Intel in a bid to sort of repurpose some of the existing CHIPS Act money. And I'll also point out that Japan's SoftBank made a surprise $2 billion investment in the company last month, too, amid this mounting pressure from the administration for this sort of money to be put up in order to clinch these trade deals. Now, I do want to point out one pretty important stat from this story that's now on the terminal. Analysts estimate that at some point next year, Nvidia will pull in more revenue per quarter than Intel gets in a year. Of course, John, as you well know, this White House, this president has really shored up ties with Nvidia as the company now finds itself really at the center of some of these sensitive trade negotiations.
Elisa, this is a really important development. You just listened to what Tyler was talking about there and the president's involvement in all of this. What's his objective? Build out domestic foundry capacity. One. What needs to happen after that? Someone needs to use it. And we've been talking about this over the last month. Who would be pushed to use it? This is not about the push anymore. Nvidia essentially is telling you they're ready to use it, they're ready to partner with Intel to make this happen.
Yeah, and specifically on certain chips for PCs and other devices, the question is whether this is going to be a big effort or whether this is going to be more performative. And this is something that we've asked when it comes to China and the Huawei move earlier, this idea of Is the technology comparable? Or is it going to be tough to move away from, say, TSMC and Taiwan for the U.S. chip manufacturers?
Intel, higher again, up by 18% in the pre-market. Anne-Marie on the ground in the UK. Anne-Marie, I imagine this announcement is music to the ears of the president.
Absolutely. The president has almost become, a co-CEO of Intel, putting a lot of pressure, one can imagine, on a lot of these companies since, as Tyler mentioned, almost 1 month ago to the day, the U.S. government decided to take that 10% stake in Intel. And the question, Jonathan, you, me, and Lisa sat around the table and asked, who is going to be next to either buy these chips from Intel or invest in more money to make sure that Intel could once again become a national champion? So on one front, you once again have what many would maybe call unconventional, what the U.S. government did, but certainly this is going to mean that more support could be flowing into the company like Intel. And then to Lisa's point, what did we hear today out of Huawei, out of Beijing? This highlights a core issue for the United States. Huawei basically announced a multi-year plan to take on the dominance Nvidia has in the marketplace. Howard Lutnick, the Commerce Secretary, has said time and time again, we have to make these chips in the United States. We have to make sure we are a dominant player in this. We cannot lose to China. Jensen Huang told me himself he doesn't feel like China's behind. They're right up against them in terms of where they are in the market and in AI technology. And the Commerce Secretary has said we have to make these chips in the U.S. We can't rely on Taiwan. So from a national security perspective, this really is in line in something we've seen from this White House. And once again, highlights, I would be absolutely shocked if the president and his team had no influence on this, highlights the heavy hand they are really taking in the semiconductor industry.
I've just got off the line with Jensen Huang and Lip-Bu Tan, and the way they explained it is, yes, the Trump administration had absolutely zero to do with this partnership focused on the technology.
Connecting the dot between what's at stake. And what is possible.
Level since February, but are investors underpricing risks? We begin with the big issue, watching the Fed's next move.
You're getting this stickiness in inflation.
Stickiness in inflation
is stickier for longer.
Inflation's gradually going up. The economy's gradually slowing down.
We still have a lot of additional inflation from tariffs in front of us.
That's what we thought tariffs were going to do.
What was more concerning was actually the jobless claim.
This risk on the labor market side. Spreads are going to widen from here.
The Fed wants to cut rates to stimulate an economy with no excess capacity. They're just going to create more inflation.
The Fed has gotten behind the curve.
And the Fed's going to cut 25 basis points in September, and it won't be enough.
They're probably going to cut less than the market expects.
I don't think enough faltering in growth has happened to merit 50.
We don't really need a rate cut here.
The risk is that the Fed ultimately won't deliver as much as they should.
If the Fed is aggressive around price cuts, that may actually spook markets.
All right, with all of those voices in mind, on the heels of last week's jobs data and this week's inflation prints, let's look at how the market is currently pricing in Fed rate cuts. For next week, the expectation is for a 25 basis point cut, and then potentially by the end of the year, 75 basis points of cuts, or in this case, 70. It's shifting around a little bit. 1 year from now, though, traders see 135 basis points of cuts. That is just over 5 potential regular-sized cuts. Now, let's flip up the charts and take a look at volatility in the U.S. bond market. Not really present. This is the MOVE Index, which measures volatility in treasuries by tracking options on interest rate swaps. And after a bit of an increase in early September, you can see a steady shift lower. And the index is now at its lowest in 3.5 years, going all the way back to early 2022. Now, earlier this week, Apollo President Jim Zelter was on Bloomberg Television, and he said that this rate cycle will not be immune from a lingering issue in the U.S. economy.
While this administration is dead set on getting rates lower,
I believe that there is a legacy inflation issues in the economy. When's the last time any one of us bought something in the last year and you said, wow, that was cheaper than a year ago? It has not happened. And that's just and I do believe that's going to be the scourge of this rate cycle, because I do believe there's greater inflation, and companies are having a much more challenging time passing that along to consumers.
All right, joining us now, Franklin Templeton Fixed Income CIO Sonal Desai and Bank of America Securities Head of U.S. Rate Strategy Mark Cabana. Thank you so much, both of you, for joining us today. As we talked about, the latest data basically guarantee a rate cut next week. The question really is what the easing cycle will look like after September. Sonal, let me start with you. What are you thinking?
So, I'm on record saying, and I haven't changed this, notwithstanding the recent payrolls and revisions, I don't really think the Fed should or can do much more than 2, maybe 3 rate cuts for the entire cycle. So if they do it, they may. I think it would be a mistake.
Wow, that leaves a very disappointed market. Mark, what about you?
Yeah, the House view is that the Fed will be cutting to around 3%. We on the rate strategy team do see risks that they cut even more than that. We still like being received the 5-year part of the curve. And it's not necessarily because we think that the economy is going to materially slow down. We just think that you're going to hear very different policy preferences from Fed officials going forward that do support a desire to focus more on the unemployment rate and continue to be somewhat dismissive of inflation. Listening to those comments earlier, we do agree that inflation will be sticky. We think that the bond market is underpricing the extent of that. We continue to recommend investors be long inflation, be positioning for a steeper inflation curve, simply because we do see risks that this Fed just accepts inflation and ends up cutting anyway.
I guess the question then is betting on short-term yields falling more than long-term yields due to these rate cut expectations really the crowded trade that has run its course? Dan Iveson of PIMCO is pulling back from this particular trade. You can see that he has said it's performed so well that our conviction level has come down. So now, what do you think?
So honestly, I do think that I kind of agree with what Dan is saying, but from a different angle. I think that the short end has rallied too much because, as I noted, my views on rates are really quite distinct from Mark's. I think that they are quite different. Having said that, I see a lot of reason why the Fed might feel under pressure. There's a policy preference for lower rates. The issue is whether they can get long end rates consistently lower by simply cutting at the short end. And that's where I'm less convinced. I'm not sure that's going to be that easy for the Fed to engineer.
Mark?
So we think that the bull flattening that you saw on the rates curve this week, which was very pronounced globally, led by the U.S., is really driven by, A, heavy positioning in steepeners, similar to what PIMCO was saying, but also, B, the fact that investors have been quite underweight the front end. And we think that they are seeing a turn in the economic cycle, consistent with the employment data last week, and they are believing that's a turn in the rate cycle. And they are essentially grabbing for yield, grabbing for coupons while you can get them. And we do think that that was a temporary phenomena this week. Maybe next week. Look, we do think that retail sales will be better than consensus. We also think that the Fed will end up delivering a hawkish cut, not because they're going to tell the market wrong, but just because the market's priced in so much in 2026. Right. That may be one last bout of the flattener, but we still think that the steepener is the right trade for this cycle, largely because we still think that the market is underpricing how much the Fed will cut. And it's not fully appreciating, in our view, the heavy preference that the Fed will have to overweight the labor market and, to some extent, succumb to some of the political pressure that we all know is so heavy on the Fed right now.
And I'm glad you're bringing it back to political pressure. So now let me bring this question to you. How do you think about the 10-year part of the curve? Because it's clearly sensitive to politics, as Mark was mentioning. Bessent and President Trump pay a lot of attention to it. They arguably try to manage it. And then, of course, it's very sensitive to economics because it influences rates on all sorts of consumer products. How does that disrupt the usual signals that investors in the bond market watch for and rely on?
So I actually think that on the 10-year part of the market, while you can talk a lot, and Trump can talk a lot, and so can Scott Bessent, about what he would like, the market determines the 10-year part of the curve more when the Fed isn't actively doing QE of some kind. The 10-year part of the market, I think, also is going to respond to things like issuance, the supply of bonds, what's going on in the rest of the world, does the US look attractive? All of these factors, I think, actually, on a relative basis, I think all of these factors play a role. So it's interesting because I also think that we might get steepeners back in play, but it's more because I see the back end selling back off and I see the front end actually selling off a bit as well, because what is currently priced, I would completely agree, is far too much inside the yield curve as we look at it today.
Mark, what about you?
So we agree that the back end will lag. Largely because we think inflation risk is underpriced. As you know, the great kryptonite for fixed income investors is inflation. And if inflation is staying elevated, or if the Fed is just accepting a higher level of inflation, then we do think that investors will feel as though they're not being adequately compensated in real terms to extend out the curve. So that will drive some of the steepening. We also think that there will be cheapening. We like being short 30-year asset swap spreads. And look, Sonal is right that the market largely determines the back end. But policymakers do have influence. And we do think that issuance is very much in play. In our forecasts, we do not have any further auction size growth from the U.S. Treasury through the end of fiscal year 2027, which is as far as our forecast horizons go. If the long end were to be too steep or too cheap, we also very much think that the Treasury Department, led by Scott Bessent, would consider auction size reductions out at the 20 or 30-year tenor. In our view, 20 or 30-year auction size cuts are more likely than auction size increases, and they will use that as one tool to help manage the long end of the curve. They are clearly very focused on this. We don't think that the 10-year is going to go much below 4%. Our forecasts for the 10-year at the end of the year are now 4%, so we agree with where the market is roughly. But we just think that they're going to continue to lag the front end. And if you're looking for, let's say, a big refi wave due to the 7 or the 10-year part going materially lower, we are skeptical about that. We do think that the cutting trough will go down, the curve will go steeper, inflation should be priced a little bit more heavily, and that the long end will indeed go cheaper. And then it's really up to the Treasury Department and other policymakers as to how willing they are to accept that.
Yep, we'll see how they manage through that next. All right, thank you so much to both of you. Franklin Templeton, Fixed Income CIO Sonal Desai, and BofA Securities Head of U.S. Rate Strategy, Mark Cabana. Up next on Real Yield, credit volatility now at its lowest level since February, raising questions about possible complacency. More on that next. This is Real Yield on Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
I'm Scarlett Fu, and this is Bloomberg Real Yield. It is time now for the auction block, where we highlight some of the key debt sales of the week. And we start with U.S. Treasuries. We saw sales for the 3, 10, and 30 years. Primary dealers saw record low shares for the 3 and 10-year auctions. All of the sales saw good demand. Over in U.S. high grade, Wells Fargo led the way with a $4 billion deal. Volume for the week is set to finish about $10 billion below the midpoint of dealers' estimates. And looking at high yield, the pace of issuance did slow down, but there was still a steady stream of borrowers. 12 borrowers sold almost $9.5 billion this week, and this week will be the third consecutive week of more than $9 billion in supply. All right, we're going to stick with credit here because when Apollo President Jim Zelter spoke with Bloomberg this week, he also sounded a note of optimism about what is inside the fund's portfolio. Take a listen.
For the most part, the credit portfolios that we oversee, the multi-thousands of counterparty risk, 3 to 4,000, it actually showed quality upgrades 3 to 1 versus downgrades in terms of performance. So in the breadth of our credit portfolios, we're not seeing a weakness.
All right, let's bring in Amanda Lynham. She is head of macro credit research at BlackRock. And joining us as well as Wayne Dahl, managing director and investment risk officer at Oaktree in Los Angeles. So we heard what Zelter just said. Apollo, though, is clearly not seeing weakness. But if you look at an index of investment grade credit default swaps, the high grade credit benchmark, what it shows is that the credit market is pricing in the lowest credit risk since February, close to where they were in the late 90s, despite a spike in issuance for the month. So even though we haven't really seen the worst of tariff impacts, demand continues to outstrip supply. I just wonder, is there complacency in this market, Amanda?
Sure. Thank you. Thank you for having me. I would say we would characterize that resilience as warranted resilience. That's a trend that's been with us actually over the past several quarters. And I think it represents a confluence of a few things. The growth backdrop is holding up, I think, better than many market participants have expected. Corporates have been very forthcoming about the operational levers at their disposal to navigate this environment. The demand from yield-based investors remains very robust. And the fundamentals, as you played in the earlier clip, are actually improving. And we see that both in liquid and private credit market. Just to kind of dig down on that disconnect between supply and tight spreads, actually, let's use the high yield market as an example. 71% of the supply so far this year in the high yield market has been for refinancing or debt repayment. That's almost close to the record that was set last year of 72%. So what that means for credit investors is you've had back-to-back years of limited new money coming into this market. The technicals are really favorable on the demand side as well as the supply side, given that stat. And I think it just represents a confluence of factors. So we are actually quite comfortable. I think it's important to acknowledge the scope for absolute spread tightening is likely limited, but the bar for a sustained sell-off is pretty high.
Wayne, what do you think? Is there complacency in these yields? In the spreads?
I mean, it would definitely appear like there is some complacency, but I don't think that's necessarily a bad thing for credit investors. When you're buying into these products, high-yield bonds, investment-grade bonds, other forms of securitized credit like CLOs, you're doing this for the income. You know, one thing that investors have been rewarded with this year in fixed income is earning that coupon. You've been able to sit back, put your feet up, earn your, year-to-date 7% return in high-yield bonds, largely just by gaining that yield and earning that coupon. And that's something I think that keeps investors coming back to this market. As Amanda said, I mean, on a fundamental basis, things look pretty good. You can kind of justify the spreads when companies are largely in pretty good health.
When you look at performance, though, Wayne,
connecting the dot between what's at stake and what is possible.
There is one segment of the market that's not doing as well, and those would be the triple Cs. You look at the spread between that and single B, and it's still pretty wide. Could this be signaling something? Is this the canary in the coal mine?
I mean, triple Cs are always going to be your, riskier credits. They're going to be names that are, much more idiosyncratic. Even if you drill into the triple Cs and kind of separate them by those that have spreads above 1,000, seem to be much worse than those that have spreads below 1,000. So it is a market you have to be careful with, and at Oaktree, with a focus on bottom-up fundamental credit investing, we're able to navigate this market and avoid those names that I think are at the greatest risk. That's something that we always strive to do. As our Chairman Howard Marks always says, you want to avoid those losers, focus on the risky triple Cs, and let the winners take care of themselves, which would be represented by those quality single Bs and double B bonds.
Well, I guess that brings me to my next question, Amanda. Do you just avoid that part of the market, the junkiest of the junk, and go one notch higher? But by going one notch higher, are you that much safer?
Well, I would say we do have a view that we're still comfortable selectively moving down in credit quality. I think the dispersion point that you're raising with Wayne is a really important one. I think there was a period of time in the credit market where you could actually bifurcate it in terms of kind of risk spectrum ratings cohorts, but I think it's actually much more nuanced in this environment. We're seeing winners and losers within the same rating category, within the same sector. So I think it actually puts an emphasis on this back to basics credit work, not as simple as just avoiding triple C's full stop. There are some names in there that will probably ultimately be better bets than others. But I think actually it's time to put the credit hat on. And I would say in certain environments like this one, that sort of company level analysis makes a lot more value add in a portfolio.
A lot of people are, of course, always comparing public credit with private credit. And when the credit cycle turns, there are those who say that some corners of private credit will be worse off, including Tom Moulds of RBC Blue Bay Asset Management. He told our colleague James Crombie that public credit is far superior over private credit. There'll probably be a point where you do see losses in private credit and people get very concerned. And if we did slip into a period where growth looked weaker, then I think that would be a problem. It's worth noting here that Moulds does not invest in private credit. So, Amanda, I want to turn to you because I know BlackRock has a lot of private credit in its portfolio. Where do you see risk mispriced? What are you seeing inside that space?
Sure. So I would say at a high level, credit is credit. So liquid credit and private credit, they're both growth sensitive, right? You still have a lot of the same fundamental building blocks of the analysis. I would push back on that a little bit, though. There's a lot more fluidity in what we've seen across the liquid and private credit markets. So as private credit has grown into a sizable, scalable asset class, it's now reaching areas of the market where it previously couldn't, including those borrowers that actually have demonstrated access to the public markets. That's important because it's no longer reserved for niche financing opportunities like it was in the early days of kind of its emergence. So what that means is that it's lending to a lot of the higher quality borrowers. You see that in the growth of jumbo loans and private credit, loans above $1 billion. You see it in refinancing activity that's taking place between the two markets. A lot of that is driven by market conditions. If the syndicated markets are volatile, private credit can really step in and provide a financing void. So just like we're watching kind of those left tails of the liquid credit market, there are areas of private credit that we've actually highlighted in our recent research that we're watching. But in general, we're pretty comfortable with credit full stop. And I think there's a lot more fluidity between those liquid and private credit markets than there used to be.
So we've been hypothesizing about a growth slowdown and volatility in public markets. But Wayne, right now you look at equities, they're at record highs. They're possibly overvalued. A lot of people say they are. What does that kind of valuation, those levels, mean for the relative appeal of private credit and public credit?
Yeah, I think as we've mentioned up front, the appeal is that you get a contractual yield. If I buy a fixed income instrument, I will earn the coupon if I've done my credit work and I can avoid defaults. And that applies to the public markets. That applies to the private markets. I think Amanda makes a great point. I mean, the public markets kind of owe a debt of gratitude to some degree to the private markets. I think they have been there to, kind of drive some of that lower volatility and what you raised as complacency in the beginning. Mm-hmm. And, private markets, I think, are still a good and attractive place to invest, especially in portfolios that have a mix of public and private assets. Being able to capture relative value opportunities in public, in private, areas like asset-backed finance, which are newer to the private credit market, provide, really attractive yields relative to maybe some of the direct lending deals you're seeing now. But I really think you can't just ignore one of those markets because they each have their place in a portfolio. And again, providing that base yield that you will earn as a fixed income investor if you've done your credit homework.
All right. I guess the moral of the story when it comes down to it is doing your homework as always, which the bond market knows very well. Our thanks to head of macro credit research at BlackRock, Amanda Lynham, and Wayne Dahl. He is managing director and investment risk officer at Oaktree in Los Angeles. And if you can't get enough talk on credit, be sure to check out the Bloomberg Credit Edge weekly podcast on the terminal and wherever you get your podcasts. Still ahead on Bloomberg Real Yield, the final spread the week ahead. More data and a marathon of central bank rate decisions on deck, starting with the Fed. This is Bloomberg.
Hey guys, you can see right now crude oil completely sideways. ना ऊपर जा रहा है ना नीचे, दोनों साइड पे रेंज बना के बैठ गया है. 5:30 हो चुका है. लंदन सेशन इज ओपन. लंदन सेशन के बाद न्यूयॉर्क सेशन इज ओपन. एक ही ट्रेड प्लान करते हैं, इसमें कुछ हो तो नहीं रहा है. दोनों साइड का रिस्क बना हुआ है अभी भी स्टिल. ठीक है, मार्केट कहीं भी मूव कर सकता है. रेंज ब्रेक नहीं हो रही है, ना ऊपर के सेलर निकलने दे रहे हैं ना नीचे के बायर अभी तक निकले हैं. तो 70 पॉइंट की ओवरऑल रेंज. एक ट्रेड कर लो इसको प्लान. अब इसमें तो कुछ हो नहीं रहा है, मॉर्निंग से कुछ खास आता है मोमेंटम, तो इसमें एक बाइंग का प्लान कर सकते हैं. ज़्यादा रिस्क मत लेना जब तक रेंज ब्रेक नहीं हो रही. मैंने ऐसा बताया 50-50 चांसेस है किसी भी डायरेक्शन पे मूव हो सकता है. वी डोंट नो येट. एक ट्रेड बनाया था मॉर्निंग पे बाइंग का, वो भी चला ही नहीं. मार्केट वहीं का वहीं रह गया, ना ऐसा लिट हुआ ना ऊपर गया. वो अभी भी चलने को चल रहा है बट उसमें निकल चुके हैं. फिर से एक ट्रेड ये है, लेट्स सी मोमेंटम देता है या नहीं. कोई डेटा भी नहीं है आज, तो ऐसा लग रहा है बिल्कुल नो मोमेंटम मार्केट है. वो एक ही छोटा सा ट्रेड ये लगा रखा है, देखो चलता है या नहीं. फिर ऐसा लेट होता है, जो भी है. ज़्यादा क्वांटिटी मत ट्राई करना. ऐसा टारगेट इसलिए बड़ा रख रखा है मैंने. डोंट गो विथ अ बिग क्वांटिटी. ओके, बड़ी क्वांटिटी में मत जाना, कम ही क्वांटिटी में ट्राई करना. क्योंकि देखो रेंज बाउंड रहा तो फिर मोमेंटम तो होगा नहीं अननेसेसरी. और एक सर्टेन एसएल तो रखना ही पड़ेगा, उससे कम एसएल रख भी नहीं सकते. तो रेंज बाउंड मार्केट है, डोंट टेक रिस्क, गो विथ अ स्मॉल क्वांटिटी. रेंज बाउंड मार्केट, वी कैन वी वांट टू प्ले लाइक दैट सेम. ऊपर जाना है तो ये ब्रेकआउट चाहिए हमें. थर्टी है, न्यूयॉर्क सेशन की ओपनिंग है. थोड़ा बहुत वॉल्यूम आ रहा है वहां से. लंदन सेशन के बाद न्यूयॉर्क सेशन की कैंडल भी क्लोज. लेट्स सी क्रूड अब मूव करता है यहाँ से.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equityfutures.
News when you want it with Bloomberg News Now. I'm Karen Moscow. President Trump says the FCC should look into the licenses of broadcast networks that are too critical of him. The president made the comments on his way back from the UK on board Air Force One.
I read someplace that the networks were 97% against me. I got 97% negative, and yet I won it easily. I won all 7 swing states, popular, but won everything.
And the president's latest pressure on mass media comes after Walt Disney's ABC network suspended a late-night host Jimmy Kimmel following a joke about Republicans' reaction to Charlie Kirk's murder. Sources tell Bloomberg that Disney executives met with Kimmel last night to discuss his show's future. President Trump is speaking with Chinese President Xi Jinping for the first time since June, with trade and TikTok topping the agenda. Bloomberg's Amy Morris has a preview from Washington.
President Trump indicated he may further extend his trade truce with Xi, saying that they're pretty close to a deal. And he says the deal with TikTok would be done with China, that the U.S. is getting a little extra for that deal.
The United States is getting a tremendous fee plus, I call it a fee plus, for just making the deal. And I don't want to throw that out the window. The kind of money we're talking about is very substantial.
The president says this new version of TikTok would be owned by all American investors. He did not say whether the app would require a new algorithm. In Washington, Amy Morris, Bloomberg Radio.
Amy, thank you. President Trump's call with Xi comes a day after his historic second state visit to the UK. The president signed a new tech cooperation deal with Prime Minister Keir Starmer. And at a joint news conference, they mostly sidestepped tricky issues like immigration and Jeffrey Epstein, though the president said one of his few disagreements with Starmer was over the war in Gaza.
Simply, I want the hostages released now, right now, not 1, 2, we'll give you 3 more tomorrow.
President Trump says he disagrees with Starmer's decision to recognize a Palestinian state at next week's UN General Assembly. Turning Point USA, the organization Charlie Kirk founded to mobilize young conservatives, has seen a massive surge in interest and support since the activist's assassination last week. As conservatives mourn Kirk's death, the group announced that Kirk's wife Erica will serve as its next CEO. Meanwhile, a new AP NORC poll taken shortly after Kirk's murder shows the share of Republicans who see the country headed in the right direction has fallen sharply in recent months. It found only about half in the GOP see the nation on the right course, down from 70% in June. The shift is even more glaring among Republican women and the party's under 45 crowd. President Trump is asking the Supreme Court for an emergency order to remove Lisa Cook from the Federal Reserve's Board of Governors. This is after an appeals court refused to go along with Trump's effort to oust Cook on allegations of mortgage fraud. Federal Reserve Bank of Minneapolis President Neil Kashkari said he supported the U.S. Central Bank's decision to lower interest rates this week and penciled in 2 additional cuts this year. In an essay published on the bank's website, Kashkari said, quote, "I believe the risk of a sharp increase in unemployment warrants the committee taking some action to support the labor market." Fed officials lowered interest rates by a 0.25 percentage point, the first cut since December, at their policy meeting on Wednesday, citing the need to support a more fragile job market. We now turn to the markets, where stocks begin the day at all-time highs. As Bloomberg Markets reporter Valerie Teitel notes, it was a historic day on Wall Street yesterday.
Yesterday was quite incredible, given the tech enthusiasm on both sides of the Atlantic and the fact that we had not just one index breaking record, but all 4 major indexes yesterday ended up at record highs. The S&P 500, the tech-heavy NASDAQ, small-cap focused Russell 2000, and the blue-chip Dow Jones, all notching record highs by the end of the session, something we've not seen since 2021.
And that's Bloomberg Markets reporter Valerie Teitel, who says there have only been 25 other days this century that the Dow, S&P, NASDAQ, and Russell 2000 closed at all-time highs on the same day. A warning this morning about mounting debt in the U.S. and how it might upset the world order. We get the story with Bloomberg's John Tucker.
Bridgewater Associates founder Ray Dalio says the U.S. is unable to cut back on runaway spending that is piling up debt and putting the monetary order at risk. Speaking at the Future China Global Forum in Singapore this morning, Dalio said the U.S. will spend $7 trillion this year and take in only $5 trillion. He warned other factors together will determine whether we're seeing the end of the entire U.S. empire. Dalio has long warned of the risk of spiraling debt becoming unsustainable. He has said that politicians on both sides of the aisle in Washington have been reluctant to deal with the growing fiscal challenges. I'm John Tucker, Bloomberg Radio.
All right, John, thank you. In Asia, the Bank of Japan took another step toward policy normalization, announcing it would start to offload its massive exchange-traded fund holdings. The moves come even as the BOJ kept interest rates steady in a contested vote as 2 dissenters pushed for a hike. And
क्रूड ऑयल के ट्रेड का ध्यान रखना, इसमें ज़्यादा रिस्क लेना मत। मैं फिर रिपीट कर रहा हूँ, ये बहुत ही ज़्यादा नैरो रेंज में चल रहा है। थोड़ा सेफ प्ले करना चाहते हो तो वो नीचे आने दो प्राइस को, अदरवाइज मार्केट इज कम्प्लीटली साइडवेज एंड ऐसा हो सकता है कुछ भी मोमेंटम देखने के लिए ना मिले, तो मैं फिर सजेस्ट करूंगा जो लोग होल्ड करके बैठे हैं इसको, यहाँ पर बाइंग करेंगे, कम ही क्वांटिटी से जाना, बहुत ही नैरो रेंज में है। एक बार मैं नेक्स्ट मंथ का फ्यूचर भी देख लेता हूँ, वो भी ऐसा ही मूव कर रहा है क्या, या सिर्फ यही फ्यूचर ऐसा मूव कर रहा है, ये भी वैसा ही है, सेम ही रेंज ही है। यहाँ भी देखोगे वो 67 पॉइंट की रेंज में ही चल रहा है मार्केट ओपनिंग के बाद से। ये ओपनिंग की पहली कैंडल है, साइडवेज था, ऊपर गया, नीचे आया, फिर उसी रेंज में चला गया, तो दिस इज द रेंज फॉर टुडे। करंट मंथ का ही चार्ट मैंने लगाया हुआ है, तो थोड़ा सा इस वजह से ज़्यादा साइडवेज दिख रहा है, वॉल्यूम थोड़ा सा कम है यहाँ पे। ऑप्शन नेक्स्ट मंथ का ही कर रहे हैं, तो वहाँ पर नेक्स्ट मंथ का ही फ्यूचर का चार्ट लगाना, वहीं वॉल्यूम ठीक है। बाकी चाहते हो तो मैं भी नेक्स्ट मंथ का ही चार्ट लगा देता हूँ इसमें। इसमें तो वॉल्यूम ही नहीं आ रहा है, ऐसा लग रहा है। लुक एट दिस, स्टिल कैंडल इज गोइंग टू ओपन गैप डाउन गैप अप। 15 मिनट में यहाँ अभी भी कैंडल गैप अप गैप डाउन हो रही है। ठीक है, नेक्स्ट मंथ का ही फ्यूचर लगा लेते हैं, इसमें वॉल्यूम कुछ ज़्यादा ही कम लग रहा है। ऐसे रहा तो हो सकता है अननेसेसरी मोमेंटम दे दें, फ़ायदा नहीं है। चेंज करने के लिए कॉन्ट्रैक्ट यहाँ से 2 कर दो इसको, मॉर्निंग से रेंज के अंदर ही है। यहाँ फिर भी ठीक है, होने को यहाँ भी उतना वॉल्यूम नहीं है, रेंज के अंदर ही है, बट स्टिल एज कम्पेयर टू दिस वन इज फार बेटर देन दिस। इसको चेंज कर दो। नेक्स्ट मंथ का फ्यूचर लगाया है मैंने अभी फिलहाल के लिए क्रूड ऑयल में। लुक एट दिस कैंडल, ये फिर से गैप अप हुई है, फ्यूचर एक्सपायरी है लग रहा है। कल से क्रूड ऑयल को पता नहीं क्या हो गया, मोमेंटम ही सही से नहीं कर रहा है, ऐसा लग रहा है। इसमें भी वॉल्यूम नहीं है. कैंडल ओपन हुए 30 सेकेंड हो गए, मोमेंटम ही नहीं आया. लुक एट दिस क्रूड ऑयल कैंडल. लग रहा है वॉल्यूम ही नहीं है क्रूड में. दोनों चार्ट एक जैसे ही चल रहे हैं ऑलमोस्ट. यहाँ तो कुछ भी नहीं हुआ है. मूव ओपन इक्वल टू हाई लो क्लोज सब सेम ही है इसका. ओपन इक्वल टू ये वॉल्यूम ठीक ठाक जितना है. हर बार ओपन इक्वल टू हाई क्रिएट कर दे रहा है. क्रूड को क्या हो गया, वॉल्यूम ही नहीं आ रहा है, पता नहीं। इसमें वॉल्यूम प्रोफाइल देखो, नॉर्मल वॉल्यूम देखो, 24 आवर्स वॉल्यूम देखो, सब जगह वॉल्यूम गायब है। और इस सिर्फ इसकी बात नहीं कर रहा हूँ मैं, नॉर्मल वाले का भी देखोगे वही हाल है। उसमें तो वॉल्यूम ऐसे गिर रहा है जैसे पता नहीं अब कभी आएगा ही नहीं। कंटिन्यूसली डिक्लाइन पे जा रहा है कल से। इसमें एटलीस्ट वॉल्यूम थोड़ा बहुत कल आया था, आज देखोगे तो है ही नहीं वॉल्यूम बिल्कुल। मॉर्निंग पे ओपनिंग के बाद देखोगे वॉल्यूम डाउन था, चलो समझ में आता है। मॉर्निंग पे 12 साढ़े 12 बजे के बाद लंदन सेशन ओपन हुआ, वॉल्यूम आया थोड़ा बहुत सेल ऑफ देख सकते हो, बट वो भी रेंज के अंदर ही था। उसके बाद फिर साइडवेज हुआ, अब फिर से वॉल्यूम डाउन हो गया। इवन दो 5:30 हो चुका है, न्यूयॉर्क सेशन इज ऑलरेडी ओपन। कैसे होगा ऐसे में ट्रेड? ट्रेड ले ना ले हो रही मेरे तो क्रूड ऑयल की। इतना टफ जैसा हो गया क्रूड ऑयल को ट्रेड करना कल से। कल भी सेम वॉलेटिलिटी थी, आज तो कुछ ज़्यादा ही वॉल्यूम डाउन है। ठीक है, फिर से रिपीट कर देता हूँ। मॉर्निंग से क्रूड ऑयल को देखोगे तो क्रूड ऑयल कल एक सपोर्ट एरिया पे आया था, यहाँ पर एक सपोर्ट जोन था। मॉर्निंग पे एक बाइंग का ट्रेड भी लगाया था, काफ़ी देर साइडवेज चला गया, फिर सडनली एक थोड़ा बहुत मोमेंटम आया, फिर से साइडवेज ही है। उस पर निकल गए थे कॉस्ट टू कॉस्ट, मोमेंटम ही नहीं हुआ, मॉर्निंग से साइडवेज चला गया था। उसके बाद से ना ऊपर रेजिस्टेंस पे आ रहा है, नीचे सपोर्ट पे आ रहा है। ट्राई मैं कोशिश कर रहा हूँ कि कहीं कुछ ट्रेड मिले, बट अगेन सडन मोमेंटम हो जा रहा है, उसमें ट्रेड करने का मन ही नहीं कर रहा। एग्जैक्ट लेवल थोड़े ऊपर है सपोर्ट और रेजिस्टेंस के, वहाँ अभी तक आया नहीं है। बीच में ट्रेड करने का मन हो नहीं रहा है, बट ऐसा लग रहा है कि शायद मोमेंटम कर दे। टू डिफिकल्ट टू ट्रेड राइट नाउ। ये फ्यूचर का जो चार्ट है नेक्स्ट मंथ का है। थोड़ा भी रहने दो, लेट इट गो, क्या करता है।
phrasing this as a war on the media.
News when you want it with Bloomberg News Now. I'm Karen Moscow, and President Donald Trump and Chinese President Xi Jinping are having a phone call, a discussion that promises to determine the fate of TikTok and potentially ease trade tensions between the world's two biggest economies. We get more on the call with Bloomberg's Tyler Kendall in Washington.
We're still waiting for the White House to confirm the details here. Of course, this marks the first call between the two leaders that is publicly known since June, since President Trump took office. Really only the second time that they have had these discussions. Importantly, coming to the forefront of the conversations today really does appear to be a potential framework agreement when it comes to TikTok. Of course, we're still waiting for a lot of key details to emerge about that potential deal, but Bloomberg News has been reporting that it's very likely going to be structured with a group of new outside U.S. investors. Names like Oracle are included, combined with some existing investors, and then, of course, ByteDance will still, according to our reporting, hold a share, but that will likely be below 20%.
And that's Bloomberg's Tyler Kendall. And again, that call getting underway about an hour earlier than what was initially reported. President Trump is suggesting the FCC revoke the licenses of broadcast networks that criticize him too much. He made the comments on board Air Force One following ABC's suspension of late-night host Jimmy Kimmel. We get more with Bloomberg's Lauren Dezensky in Washington.
We're phrasing this as a war on the media, and you see this kind of as the framing for Trump's fight here, and truly it feels that way. This president has made no secret of his grievances with the media, and particularly in his second term, he has had no hesitation going after those who he feels, as he puts it himself, is against Trump.
And that's Lauren Dezensky in the nation's capital. Federal Reserve Bank of Minneapolis President Neil Kashkari is saying he supported the U.S. Central Bank's decision to lower interest rates this week and penciled in 2 additional cuts this year. In an essay published on his bank's website, Kashkari said, quote, "I believe the rise of a sharp increase in unemployment warrants the committee taking some action to support the labor market." Fed officials lowered interest rates by a 0.25 percentage point, the first cut since December. At their policy meeting on Wednesday, they cited the need to support a more fragile job market. Meanwhile, the Fed's decision to cut interest rates this week is getting solid marks from former St. Louis Fed President James Bullard. He's one of the candidates to succeed Jay Powell as chair next year.
I thought the Fed's decision was a good one. This is looks like a sequence of 3 moves in a row through the end of the year. Of course, you want to be data dependent, and the chair stressed that in the press conference.
And former St. Louis Fed Chief Jim Bullard said a 3-rate cut move would be significant. He says central bankers still have optionality if the data go the other way. Bullard was a guest on Bloomberg Surveillance. You can watch the full conversation on the Bloomberg podcast page on YouTube. Well, the European Union is proposing a complete ban on Russian liquefied natural gas imports starting in 2027, a full year earlier than originally planned. The move comes after President Trump called on the EU to do more to curb Russia's energy trade. We get more with Bloomberg's Anne-Marie Hordern in London.
It does seem like the president, he really is not stopping in terms of making sure that he tries to get the European Union more in line in ditching these Russian fossil fuels. And we saw this just 5 days ago. The president had a tweet out and he said, "I'm willing to do more, but why should I do that if the European Union is still buying Russian fossil fuels?" He said, "I'm ready to go when you are, basically your move."
And that's Bloomberg's Anne-Marie Hordern in London. The EU is also proposing full transaction bans on more Russian banks, as well as trade restrictions on entities in China and India. Taking a look at FedEx this morning, it expects a $1 billion hit from trade volatility this year, highlighting the impact of President Trump's tariffs and the loss of a key exemption for low-value goods. The Memphis-based parcel company reinstated its profit and sales forecast, though, saying revenue will grow by 4 to 6% in the current fiscal year, and that beat Wall Street estimates. It's a big day for Apple fans who want to be among the first to get their hands on new devices. The iPhone 17 Pro Pro Max and iPhone Air went on sale along with new watches and AirPods. Early sales in Asia indicated strong demand for the Pro models. And futures this morning are higher, indicating the benchmark indexes will add to their gains after closing at records yesterday. S&P futures up 0.2%, Dow futures up 0.1%, NASDAQ futures up 0.2%, 10-year Treasury yield 4.12%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Yesterday, and as far as where we go from here, you can see Fed funds hanging out around 4.25% right now, but the terminal rate that this market is pricing in closer to 3%. So we would need 125 basis points of easing here to get that. We know that we have a few cuts priced in already. I thought this was interesting, though, that the terminal rate priced at 3%, because you think about what we heard yesterday from FOMC participants. Their guess as to where the neutral rate, the long-run neutral rate is 3%. So that seems to be the magic number here, Romaine.
All right, as we kick you off to the close, let's get some insights out of Ed Yardeni, President and Chief Investment Strategist at Yardeni Research. And Ed, I think yesterday's decision was certainly expected. I am curious, when you look at the market reaction, are they reacting to the rate cut yesterday, or the prospect that that we're basically at the start of a prolonged rate cutting cycle?
The answer is yes. I think it's both. Clearly, the rate cut yesterday was widely anticipated, and maybe as a result, when it happened, the markets didn't really respond much at all. But very often it's the next day after what the Fed does that you get the reaction. And so the positive reaction makes sense that the market might be anticipating further rate cuts. Also today, we had some good news on the economy. I mean, we're kind of getting the best of all worlds. We're getting somewhat easier interest rates, financial conditions, and at the same time, we're getting some good news on the economy. So that would be good for earnings, and it's all about PE times Z. The earnings outlook remains very strong, and the valuation multiple is only helped by lower interest rates.
I am curious, though, separating out kind of what we're seeing maybe in stocks and the potential impact, positive impact to the bottom lines and what we're seeing in the economy. Yes, encouraging economic data, but you still had Jay Powell yesterday articulating this idea that when it comes to the labor market and, for that matter, inflation, we still got a ways to go to get it back to, I guess, what the Fed would be comfortable with.
Well, you know, he's kind of trying to have it both ways. He wants to be non-committal about what the Fed's going to do next. He wants to say everything's on the table and everything's off the table. It's all going to depend, you know, what's on the table is going to depend on the data. And what we do know for sure is that inflation is not at 2% yet. There's still an overshoot there. Maybe they're going to conclude that they can't do much to get it much lower. And so on a de facto basis, 3% will become the new inflation target. I wrote about that in the Financial Times today, that the Fed's kind of being challenged by the dual mandate. You know, it's hard to do both, keep employment full and inflation down.
Well, just to draw that out a little bit. So, okay, you make the case why it might be the time to repeal that dual mandate, but What should they actually abandon here? What is the more pressing issue that the Fed should be concerned with?
Well, in my opinion, it should always be inflation, and even more importantly than that, financial stability. The Federal Reserve at the end of 1939 was established to a large extent to help maintain financial stability, to avoid financial crisis. And when crisis hit, they were supposed to do the central function of a central bank, which is to provide liquidity and get us out of that kind of financial crisis. But I think of the two other goals, inflation and unemployment, I think it's been said often by Fed Chair Powell that it's hard to get a stable economy with low unemployment if you have an inflation problem. So first and foremost of the two, I think you want to get inflation down. So you got three goals: financial stability, low inflation, and low unemployment. And I think that's sort of the priority of the goals.
And Ed, I do want to talk a little bit about the cross-asset picture and focus on the bond market specifically, because right now the 10-year yield higher by about 1 basis point. It was higher. We were looking at 4.12 on the 10-year a little bit earlier this morning. One of the fears out there is that we're going to see a repeat of last year, that you had the Fed deliver that basis point cut, and then you actually had the long end take off.
Correct.
Do you see that maybe playing out this time around?
I think it's a realistic possibility. As you said, last year, September to December, the Fed cut the Fed funds rate by 100 basis points, and the bond yield went up 100 basis points. Mortgage rates went up 100 basis points. So the Fed easing really didn't help very much if they were trying to get interest rates down across the board. And I think it's a possibility that the same thing happens now. I mean, the deficit issue is going to come back into the fore as Republicans and Democrats start fighting over the potential of closing the government. And the Democrats want to get an increase in spending, reversing some of the cuts that the Republicans took out of their favorite programs. So the deficit issue isn't gone. The potential for a debt crisis is still there. And I think that's why we're not seeing the bond yield do particularly well with the Fed cutting rates. On expectations, it got just below 4%. Now we're back at 4.1%.
Well, this raises a lot of questions about the effectiveness of what Jay Powell and the Fed, or whoever's going to be leading the Fed in 2026, can do. I mean, even these first few months of this year, the idea of Jay Powell back in January talking about wanting to wait and see the impact of trade policies and other policies out of the Trump administration, it was kind of an acknowledgement. And I think you kind of touched on this idea in general in your column in the Financial Times, that there are just a lot of other forces right now in our economy that are, if not immune to monetary policy, certainly not something that monetary policy, at least in terms of raising and lowering rates, can in and of itself address.
Well, the whole point of lowering interest rates here is to stimulate the demand for goods and services, which in turn should stimulate demand for labor. But a lot of the problems in the labor market seems to be supply related. So we had basically a drop in the foreign-born population just since March through August by 1.5 million people, and a good percentage of those people were actually in the labor force, and now they're not. State and local governments hired a lot of teachers and a lot of social workers to help out those people who crossed the border and wound up in their community. Now that's not happening. Companies that are looking at AI are saying, well, we're spending some money trying to assess how to implement AI. Maybe we should hold off on hiring because we may get some productivity gains from AI. So this lower interest rates is not going to really deal with these structural problems on the supply side in the labor market. And that being the case, all that stimulus is going to increasingly show up in the stock market and in other financial assets.
All right, Ed, always great insights. Ed Yardeni, President, Chief Investment Strategist over at Yardeni Research, kicking us off to the close here on this Thursday afternoon, post-Fed day, and, well, just an hour or so away from earnings out of FedEx. Another read, not so much on corporate America, but also on the economy and, of course, the impact of tariffs. A conversation up ahead with Mary Lovely, Senior Fellow at the Peterson Institute. Stick with us. This is The Close on Bloomberg.
In the last few months, there has been a lot of uncertainty, both on the geopolitical and obviously for the economy with the tariff. There's been a silver lining, especially in this region, around these events. Currency and bonds have been attracting a lot of attention in terms of performance. In general, it's been a pretty good performance for equities. And going forward, I will definitely remain positive around the Asian assets.
Connecting the dot between what's at stake and what is possible.
Well, all eyes are on FedEx as we await tonight's earnings report, where they're not expected to reinstate a full-year outlook due to the removal of the de minimis exemption, heightening unpredictability for the company. Joining us now to discuss is Mary Lovely. She is Senior Fellow at the Peterson Institute for International Economics. Mary, great to have you with us. So you think about the de minimis exemption, basically that allowed for duty-free imports of goods that were valued at $800 or less. It's only been a couple of weeks, so FedEx really will give us a sense of how companies are dealing with this. And I wonder, from where you're sitting, how you think that adjustment is going.
Well, we know that many companies suspended or partially suspended packages headed to the United States. So the rollout wasn't smooth. I think that companies will adjust, firms will adjust, but of course, with added time and added effort, extra services from customs brokers, et cetera, and that means higher costs for these low value items.
When it comes to just, I guess, how FedEx navigates this, is this something that they can sort of adjust their own costs in a way that I guess picks up some of the costs themselves, or is the idea that maybe they can broker a way for their shippers and for their clients actually to mitigate those costs on their end?
Well, I mean, I think they're going to have to look at both the short run and the long run. In the short run, they may, in fact, mitigate some of the costs. But in the long run, you know, the capital markets demand a certain return, and these costs are going to have to be borne somewhere. I think that FedEx and other shippers have encouraged de minimis packages and have encouraged use of warehousing to break up big packages into smaller value items. So I think that this aspect of their business is fundamentally going to have to change. That will take some time. It will also affect particularly the smaller businesses and medium-sized businesses that have taken advantage of this service to help get their packages to consumers faster and more cheaply.
Well, let's talk about it from the perspective of consumers for a little bit, because is the net effect for those shoppers basically just that they're going to be dealing with higher prices?
No, that's a good point, that we're also going to see fewer choices. Mm-hmm. So one of the things this did is that it brought in, shippers and suppliers who were able to reach smaller or niche markets. For example, we've lived through this sort of golden age where people could virtually find anything that they wanted, a red shirt, a blue tablecloth, whatever. And many of these suppliers will no longer be able to serve that market because the cost of doing so will be prohibitive. We're going to see this as a result of tariffs in a lot of different areas. Yeah. We've already talking to companies that are saying they're looking carefully at their product lines and culling, low volume products.
Mary, I do want to get your thoughts, though, a little bit more broadly beyond the consumer sector, beyond FedEx, and really this idea of trying to reshore or onshore a lot of manufacturing. Of course, a lot of us were somewhat, I guess, confused by what took place at that Korean plant here in the United States a couple of weeks ago. And I am curious, when we hear these big announcements from Korea and Japan and other nations about investing in the U.S., do we have any sense here that the environment is going to be conducive to them standing by those commitments?
Well, I think they would like to stand by the commitments, but some of the president's programs are in conflict with each other. And the roundup of skilled technicians at the Hyundai plant clearly was, illustrated one of those conflicts, which is this cracking down on visa usage and the desire to have foreign companies install advanced equipment. The U.S. wants to encourage investment in advanced manufacturing, and that often requires the employees who know that best to come here for a period of time, oftentimes to train Americans who will then work on the equipment. And the visa problem, the roundup there has left a very, very, very bad taste in the mouth of the South Korean people, who have always viewed themselves as strong allies of the U.S. This has been a very large political and diplomatic issue for the South Koreans, but it has other reverberations. The deal with the EU is rather wobbly, and the deal with the Japanese is completely unprecedented. And we've already seen Prime Minister Ishiba, he's leaving. It's going to cause political conflict within these countries. So these deals, while we're toting up the trillions of dollars that are being invested right now, actually look rather shaky.
All right, Mary Lovely, Senior Fellow at the Peterson Institute for International Economics. And as foreign companies maybe potentially seek to invest more here, there is still an effort to get our own homegrown companies here in the U.S. back on track. One of the biggest ones, of course, is Intel. And today, an interesting tie-up between Intel and Nvidia, a $5 billion investment. We're going to get the latest on what this means for the broader chip sector. This is The Close on Bloomberg.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
For over 147 years, Bgrim has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
It is the first week of September. Our clients are just back from the holidays, and we've gathered over 1,000 of them with us today, and we're going to help them piece together a strategy.
Clients are in the room and they're here to hear more about investment opportunities in Europe, possibly in Japan, in China. We're here to help, and we can help them find those opportunities. We can advise them on how to position their trades, and then we can facilitate and give them access.
Intel shares soaring after announcing that Nvidia will invest $5 billion in the company and co-develop chips with them for PCs and data centers. For more on the partnership, let's bring in Bloomberg Tech co-host Ed Ludlow. Ed, what do we know about how this arrangement came together?
Well, we spoke to Jensen Huang, the CEO of Nvidia, and Lip-Bu Tan, the CEO of Intel, a couple of hours ago, and they both were steadfast in the idea that the administration and President Trump had nothing to do with this deal. 12 months ago, engineering teams from Nvidia started talking to engineering teams at Intel, which would predate the more recent developments in the relationship between the administration and both CEOs. I'd also point out that 12 months ago, Lip-Bu Tan was not the CEO of Intel. It's basically a technology story, right? Intel's x86 architecture CPUs are pervasive in data center and they're pervasive in PC. And what Jensen Huang was arguing in the course of the conversation was that it puts Nvidia into new markets. They'll basically be a buyer of Intel's technology, and Intel will be a buyer of Nvidia's competencies in graphics. The $5 billion equity investment, Jensen Huang justified by saying that if they believe in the product roadmap that they're working on together, entry into new markets, particularly into areas of the PC market that Nvidia has not yet been, then they will see a return in that investment. It will be healthy. But again, there was no direct link drawn between the investment or the equity stake taken by the US government, which, of course, based on today's gain, is much bigger.
Shares up 23% here on the day. Let's get some additional insights out of Angelo Zeno over at CFRA. And Angelo, I want to get right to it. I mean, back in August, you wrote a note talking about this idea of Intel needing a white knight. Is this it?
Well, it's not it yet, right? So when you think about how this partnership is structured, it really is on the product side. And when we said you needed a white knight, it was more on the foundry side. So I think overall this is a good first step. It kind of it bolsters, I think, investor sentiment and the fact that Nvidia is now more entrenched with that Intel, and Intel is now kind of within Nvidia's architecture. What I would say is the hope here, and I think why the stock is trading up as much as it is the fact.
ओके गाइस, यूएस मार्केट ओपन होने वाला है, देखते हैं यूएस मार्केट में क्या होता है। नेचुरल गैस में एसएल कॉस्ट पे रख लो, दोबारा ट्रेड मत लेना यूएस मार्केट से ओपनिंग से पहले। वेट फॉर द यूएस मार्केट नाउ, ठीक है? यूएस मार्केट का वेट करो, उसके बाद ही फ्रेश एंट्री करना। किसी की अगर एंट्री चल रही है यहाँ पर नेचुरल गैस में, एसएल कॉस्ट पे रख के छोड़ दो। इतना एसएल लेने की जरूरत भी है, 2 पॉइंट का एसएल है। यूएस मार्केट के बाद देखते हैं। अरे सेम नहीं है, ठीक है? नेचुरल गैस में एसएल कॉस्ट पे रख के छोड़ दो, फ्रेश एंट्री मत करना। 9 मिनट रह गए, यूएस मार्केट की ओपनिंग होती है, फिर देखते हैं। एक तो नेचुरल गैस का, क्रूड ऑयल का भी वही हाल हो रहा है। क्या मार्केट है? ठीक है, नेचुरल गैस में एसएल कॉस्ट पर रख के छोड़ दो, कॉस्ट टू कॉस्ट पर, ये फ्रेश एंट्री मत करना। यूएस मार्केट ओपन होगा, उसके बाद देखते हैं कुछ ट्रेड मिलता भी है या नहीं। मोमेंटम ना होने का रीज़न क्रूड ऑयल में यही है कि इसमें सपोर्ट रेजिस्टेंस बहुत पास पास बनते जा रहे हैं। एक ब्रेक हो रहा है, दूसरा बन जा रहा है, दूसरा रेजिस्टेंस ब्रेक हो रहा है, नया रेजिस्टेंस बन जा रहा है, सपोर्ट ब्रेक हो रहा है, नया सपोर्ट बन जा रहा है। तो प्राइस को बाहर निकलने का मौका ही नहीं मिल रहा है। नेचुरल गैस में भी एसएल कॉस्ट पर रख के छोड़ दो यूएस मार्केट से पहले, अब रिस्क मत लो। यूएस मार्केट के बाद ही देखते हैं कुछ अगर होता है तो। फिर से एंट्री मत करना, अगर कॉस्ट टू कॉस्ट निकलता है तो निकाल दो। लेट्स सी द आफ्टर यूएस मार्केट। ठीक है, यूएस मार्केट के बाद ही देखेंगे। नहीं आ रहा है यहाँ मोमेंटम, कैसे भी हो रहा है। नहीं, 5 मिनट कॉस्ट कॉस्ट निकाल दो या फिर ऐसा रख के वहीं पर छोड़ दो नेचुरल गैस को यूएस मार्केट का वेट करते हैं 5 मिनट है वो सैडो रेजिस्टेंस बना हुआ है वहाँ पे तीन मिनट और है कर रहा हूँ नेचुरल गैस का जो बाइंग का ट्रेड लगाया था कॉस्ट कॉस्ट पर ही है ऐसा वहीं लगा के छोड़ दो या फिर निकल भी सकते हो यूएस मार्केट की ओपनिंग के बाद देखेंगे अब नेक्स्ट ट्रेड Okay, US market open. ठीक है, दोनों ही जगह ओपन इक्वल टू लो बनी है शायद, कैंडल क्रूड ऑयल में भी नेचुरल गैस में भी। फॉरेक्स में होगा, एमसीएक्स में कुछ भी नहीं है। अच्छा ये यहाँ पर ब्रेकआउट हो गया था उस दिन, so it act like a retest, रेजिस्टेंस था, सेलिंग आ गई, फिर ब्रेकआउट। जाके रीटेस्ट पे चिपक गया। एक बार रीटेस्ट हो गया, दूसरी बार है। ठीक है, ये कैंडल क्लोज होती है यहाँ पर नेचुरल गैस में, ये 7 PM की यूएस मार्केट की कैंडल, तो फिर से लेते हैं, क्लोजिंग होने देना। ठीक है, ये कैंडल क्लोज होगी उसके बाद ही एंट्री करना, इस कैंडल पे मत करना। अभी कैंडल क्लोज होने में 7 मिनट है। यहाँ पर भी एक रीटेस्ट है। नेचुरल गैस भी ऐसा लग रहा है 240 के आसपास जाने की तैयारी में है। बाकी क्रूड ऑयल में तो कुछ नहीं होने वाला अब, कंप्लीट साइडवेज। नीचे अगर आ जाता है तो बढ़िया है, वैसे एक सपोर्ट एरिया या फिर ऊपर ही चला जाए। बहुत ही नैरो रेंज में घूम रहा है आज कंप्लीट डे। ओके, कैंडल हो गई क्लोज यूएस मार्केट की, कुछ नहीं हुआ क्रूड में, वहीं का वहीं है। एक ये नेचुरल गैस में ले सकते हैं अब, यहाँ पर हल्का सा पुल बैक आएगा, नेचुरल गैस में बाई करना। क्रूड में तो कुछ नहीं है, कुछ नहीं कर सकते, मोमेंटम ही नहीं हो रहा। यही दो लेवल है बेस्ट, या तो ऊपर ही आ जाए बिल्कुल या फिर थोड़ा नीचे और गिरे. Those are the protective level. काफी टाइम के बाद इंट्राडे में इतना साइडवेज गया. लेट्स सी, मे बी शायद मंडे को मूव करे.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell.
Was that it was quite dovish. They went for a 25 basis point rate cut. Median dot moved to another 2 rate cuts for this year. But then next year, only forecasting a further 1 incremental rate cut, 2027, another one as well. So mixed interpretations as to whether this was actually dovish. The Fed Chair Jerome Powell spoke about some of the downside risks to the labor market, but at the same time framed it as risk management. So what we got by the end of the day was a small pullback for the S&P and NASDAQ. And I will just tell you, for NASDAQ specifically, one stock was in focus. That was Nvidia. The stock ended almost down 3% in trading yesterday on this news story. We're going to talk about that in a moment, that Nvidia's chips have been banned for use within China. So we had also a tech story at play yesterday. This morning, things have flipped. S&P is trading in positive territory once again. We have NASDAQ leaning towards the green too, so sort of brushing off some of the price action that we had yesterday after the event. 10-year yields also whipsaw action. Initially, we rallied through 4%. We got to around 397, I believe, at one point. By the end of the day, though, we ended up 4 basis points higher as the market sort of repriced the further rate cutting cycle from 26, 27 onwards. So we had a bit of a case of buy the rumor, sell the fact in yields. And then the USD also, this one is interesting because remember, into the event, we've been talking about weakness after weakness after weakness for the greenback. Another situation of the Fed delivering on rate cuts, indicating that they're going to do 2 more this year. And yet the dollar rallied. So that's your price action today. So somewhat interesting. Flipping over, also, let's just take a look at how, for example, some of the EM currencies reacted in response to the Fed decision yesterday. And you can see that little blip at the end. In the run-up, we had seen a very strong performance out of this EM currency basket. This is MSCI EM currency basket. Yesterday, we came off a little bit, and perhaps EM currencies wanted to see more explicit dovishness out of the Fed, something that we can discuss with our FX guest later on this morning. Okay, let's also move on and check in on how markets in Asia are faring. Annabelle Jewelers is in our Hong Kong studio. What has been the price action from Asia today, Annabelle?
Yeah, well, it's actually been kind of interesting. I mean, yeah, there's 2 different stories. Firstly, you've got the reaction to the Fed, and then secondly, it's very much still the focus on what's happening, rather, in China's tech space. But I'll kick off what you were saying there about that dollar strength that we're seeing. Certainly, you can see here playing out in Asia here. Most currencies are weaker against the greenback today, particularly watching the Kiwi dollar, actually, because they had GDP figures that came out really undershooting economist estimates, and so telling us that maybe the RBNZ is going to need to act with further easing to come. Otherwise, across the board here, I mean, you can kind of see some expected moves. For instance, you're seeing commodities pulling back a little bit, concerns, as you said, around the health of the labour market, and maybe some of those more recessionary clouds, perhaps, building on the horizon, even though they did, I guess, upgrade their growth forecast somewhat. But equities-wise, there's a very clear theme here today. Yes, you've kind of got muted moves, except for the tech-heavy indexes. That's Japan, Korea, and Taiwan. And that is actually a really interesting dynamic. If you take a look at some of the movers in China in particular, what's happening is that we're seeing continuing reappreciation of China's semiconductor abilities. And a lot of those companies, Global Wafers, for instance, over in Taiwan, still has supply chains back into China, customers in the China market as well. So that strength we see there is actually benefiting some of the bourses here in Asia. But Huahong, one of the names that's standing out because they just had an upgrade from Goldman Sachs. But generally, there's a lot of positivity here. And more headlines dropping as well, not just restrictions on Nvidia products, and we'll get to more details on that in a few minutes, but also we're hearing things like Huawei, for instance, introducing new chip computing clusters that can give more power and more capabilities around AI as well.
Yeah, that Huawei news also very relevant in light of the price action that we had at the beginning of this year when DeepSeek was unveiled. Annabelle Jewelers in Hong Kong, thank you so much. Let's go back to the Fed now. The Fed Chair Jerome Powell pointed to growing signs of weakness in the labor market to explain why officials decided it was time to cut rates.
I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market.
Joining us is Frédéric Carrier, investment strategy head for the UK and Asia at RBC Wealth Management. At the top of the show, I was going through the market interpretation at various moments of the evening yesterday. Initially, it was perceived to be quite dovish, and then later on, as the press conference was underway, I think the market price action suggested that what the Fed actually delivered yesterday was a hawkish cut. Where do you stand on that debate?
There's a little bit for everyone in this meeting, isn't there? So lowering interest rates twice this year, people are looking at the dot plot. But as you mentioned, 2026, 2027, fewer cuts, and market expectation of the terminal rate has increased just very slightly. I think it's fair to say that it's difficult to see monetary policy as being very restrictive at the moment. It has to be taken into the context of a federal deficit, which is equivalent to between 3 and 5 cuts already. And there's very little evidence in the borrowing market that monetary policy is restrictive. It seems there's a lot of evidence that borrowers have market power. So I think people, probably investors, still scratching their head with this message and are aware that while the unemployment picture is not great, it's really monetary policy is a blunt instrument to deal with it. We think there's more of a mismatch in terms of what corporations need compared to what the skills which are available.
Let me pick you up on what you just said there, that the fiscal deficit is equivalent to, I think you just said 4 or 5 rate cuts, i.e. there is a sufficient amount of fiscal loosening in the economy. Is that enough to keep the Fed from engaging in an aggressive rate cutting cycle? Is that what you're trying to say?
So, yes, we think between 3 and 5 rate cuts is the equivalent of this loose fiscal policy at the moment with the tax cuts and other fiscal plan. And so monetary policy has to remain relatively contained at the moment. We don't think it is restrictive, however.
Yeah. Let's talk about the 2026 thoughts. I mean, there was some attention paid to the fact that Stephen Myron voted for 50 basis points yesterday, but then others, Waller, Bowman, actually went with the majority and voted for 25 basis points. So perhaps you could say there was somewhat of a hawkish surprise there. But how much weight should we really put on what happens in 2026, given we know that the Fed Chair Jerome Powell's term ends in May, and the composition of the Fed and who's voting on the Fed is likely to change? The expectation is that President Trump will be appointing members to the Fed who are likely to be more dovish. Therefore, should we not read in too much about these 2026 dots and forecasts?
So it's probably the reason why the terminal rate has been moved only slightly. There is this expectation that we will end up next year, particularly if Governor Cook is replaced with a much more dovish Fed board. Whilst for this particular meeting, the unanimity of the Fed board members surprised, it's very likely that we will have next year a Fed board which will be accused of political interference a lot more than it has in the past.
In terms of market price action, really interesting that the dollar got a bid after this meeting. Do you think that that's going to hold?
So it's a very small rally in the dollar, and that, given that the recent weakness, it could be sustained, but we think it would be just temporary. We think that the market will focus again on the credibility of and the strength of the U.S. institutions. And that will lead to a continued erosion of U.S. dollar dominance, not an end to it, but certainly an erosion of it.
Yeah, so it's interesting because on one hand, we talk about the erosion of confidence, perhaps questions around credibility, and that's manifesting or playing out via the USD. But at the same time, U.S. stock markets keep making record high after record high. Can that paradigm persist, i.e., investors have a very positive view of the outlook for U.S. companies, but at the same time, a dismal view of the USD at a macro level?
So we do think that there are still potential gains and that the equity markets could reach new highs in the coming months, so long as investors remain confident that the earnings for 2026 earnings expectations can be achieved, and that seems to be the case. People going to results season being very cautious, expecting some restraints in terms of company comments, but what we are seeing is that in fact they are delivering. So long as this confidence remains, we do think that there is possible to have more gains in equity markets. Now, should of course yields at the long end start to increase too much, we might have to review this position.
Yeah. Frédéric Carrier, thank you so much. Really good to chat to you the day after such an important meeting as well. Investment strategy head for the UK and Asia at RBC Wealth Management. Now for a look at some of the other stories we're following today. Disney's ABC network is taking Jimmy Kimmel Live off the air immediately after a backlash over the late-night host's comments about the killing of Republican activist Charlie Kirk. On Monday, Kimmel suggested in his monologue that the man charged with Kirk's killing was a Trump supporter. A major owner of ABC TV affiliates, Nexstar Media, had called Kimmel's remarks offensive and insensitive. Tesla says it's working on a redesign of its door handles following a Bloomberg investigation that uncovered incidents of people getting trapped in their vehicles. The firm's design chief told us Tesla is looking to combine the electronic and manual door release mechanisms, which are currently located separately. Earlier this week, the U.S. auto safety regulator opened an investigation into whether some Tesla doors are defective. And Meta has launched the first version of its smart glasses with a built-in screen as it seeks to turn the product into a consumer hit. The $799 Ray-Ban display features a screen in the right lens that can show text messages, video calls, directions and maps, and visual results from web searches. CEO Mark Zuckerberg says the product will be a vehicle for what he calls AI superintelligence. And coming up, China orders firms to stop buying a type of Nvidia chip, tightening its AI clampdown and escalating tech tensions with the U.S. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Huawei has unveiled its SuperPod technology to bundle more AI chips together and boost computing power to challenge Nvidia's technology. For the latest, let's bring in our Bloomberg's tech correspondent, Annabelle Jewelers. Once again, we saw her just a few minutes ago. But first, let's talk about this Huawei news. Essentially, how powerful is this new technology?
Yeah, well, it's powerful enough to be linking thousands of graphic chips together. So I think what's important to acknowledge about Huawei's AI ambitions is that the AI chips it's been able to produce so far, so its Ascend series, are not nearly as competitive as the most advanced that we see from Nvidia. The solution that the company, though, has to this is to create technology to put more semiconductors or bundle more semiconductors into a cluster. So cluster-based computing, I mean, it's common. It's one of the common paths toward creating supercomputers, but this superpod technology that the company has just announced can link as many as nearly 15 or 16,000 graphics cards together. So it'll be 16,000 graphics cards, but it's containing, importantly, as I said, that Ascend AI chip. So this is really important as we know that China is really continuing to focus its efforts on really weaning companies off in China off Nvidia technology and really refocusing its efforts to try and build out its self-reliancy essentially in this space. So that plus Huawei also announced a new lineup of AI chips. We're going to be getting a new Ascend product from next year and over the coming years as well, one each year.
Yeah, so you had the Huawei unveiling, and then we've also, as you've been tracking on the shows, the in-house chip, a lot of excitement around Baidu and Alibaba in the last month as well. But all this is coinciding with some new geopolitical developments. China yesterday widening its clampdown on Nvidia chips. What else do we know specifically about what's happening with those chips, specifically the H20, obviously a big focus?
Yeah, it's really fascinating timing, and I think you really can't sort of overstate the significance of it as well, given that Presidents Trump and Xi are supposed to be having a call this Friday. And you've got President Trump right now in the UK, where the Nvidia CEO also is, to announce big investments there. But essentially, what the regulator has told companies in China is that they shouldn't be buying Nvidia's RT6 Pro 6000D. Now, this is a technology that's actually less advanced than the H20, which we know was sort of banned and then not banned, but now China's also trying to encourage companies quite firmly not to use the H20. But the RT6 Pro 6000D is a semiconductor for workstations, essentially, that can be repurposed for AI applications. And so companies have basically been told, stop testing these products, cancel existing orders. This is according to people that are familiar with the matter. The information isn't yet public, but still, as I said, it sort of, again, tracks with the common theme here, which is that China wants to build up its own efforts, focus on its own companies, and you see that, as you said. I mean, we've got Alibaba, we've got Baidu, we've got Huawei today on the upgrade from Goldman Sachs. I mean, it's just been a very, very optimistic sector and space in China just over the past few weeks alone.
Yeah, most definitely. Bloomberg's tech correspondent, Annabelle Jewelers, thank you so much. And coming up, the UN says billions of dollars have been plundered via rampant corruption in South Sudan. We'll bring more details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The UN says billions of dollars have been plundered via rampant corruption in South Sudan, which has financed conflict and starved the nation of essential services. A report by the Commission on Human Rights in South Sudan says oil wealth has been diverted into the pockets of a narrow elite, pushing the nation to the brink of catastrophe.
One of the reasons we produced this report is South Sudan's not a poor country. It's a plundered nation. And since independence, more than 25 billion in oil revenues have flowed into government coffers.
For more on this, Bloomberg's Nzira Ganga joins us now from Kigali, Rwanda. So pretty damning assessment by the UN there. What are they suggesting of the scope of the plunder of this oil wealth?
Good morning, Jumana. So what they're talking about is how in South Sudan money and politics go hand in hand. And what has happened is public resources have turned into private wealth. And this has locked the country in a vicious cycle of corruption. And what it's in turn causing is humanitarian and human rights crisis. And how we are seeing this manifest is the economy has regressed so far back. You look at GDP per capita. When the country got independence in 2011, it was $1,660, 75% reduction to $421 by 2025. What has also happened is the country now ranks second last in the Human Development Index, and 92% of the population live in poverty. And one might think this is motivation enough for them to be prudent with their resources. It's not. Like the UN was saying, $25 billion in oil receipts, but the accounting is scanty. A lot of money is going into things that are not essential. For example, Presidential Affairs has spent close to $500 million. This is 6 times their allocation. Yet you have critical sectors like healthcare and agriculture that receive less than 10% of their allocation. And what is now happening is the government is technically abdicating its mandate, and the people are forced to rely on international organizations for healthcare, education, and food. And this is not a sure bet, because we're seeing also funding to these organizations continually reduce. And if you think the pilferage stops there, it doesn't. Oil for Roads was another project that has become a vehicle for corruption and political patronage, where of the $2.2 billion allocated, $1.7 billion cannot be accounted for, and close to 95% of these roads are not completed. But if you ask the government, they attribute this regression to climate change, war, and volatility in the oil market.
Yeah. And let's talk about some of the political developments. The vice president was recently indicted and suspended. How will this play out in terms of the possibility of further civil unrest in the country?
Joanna, the risk is high, because if you look at the statements that are being put out, they're calling on their supporters to report for national duty and defend the nation and the country's sovereignty by all means. Now, this is very dangerous rhetoric, because it leans very ambiguously between political and military statements subject to interpretation. But then again, the UN is not surprised. They say this political unraveling that we're seeing in 2025 is as a result of engineered chaos. This is a country that in 2018, they had an agreement, peace and reconciliation, but what they've done is they have ignored the core and building tenets of this agreement that they had when it comes to fiscal management, when it comes to security reforms. And what happens if they've laid foundation for a perfect cocktail of chaos? And when cracks form at the top, this division will spill at the bottom, risking chaos in an economy that is already very shaky.
Bloomberg's Andira Ganga, thank you so much for bringing us that story. Now for a look at some of the other stories we're following today. Abu Dhabi National Oil Company, ADNOC, has abandoned its planned $19 billion takeover of Australian gas producer Santos. The deal fell through due to disagreements over valuation and tax issues. The decision to walk away is a setback for XRG's strategy to expand globally and diversify away from crude oil. Egyptian authorities are searching for a 3,000-year-old golden bracelet that has gone missing from a museum in central Cairo. The bracelet, linked to an ancient pharaoh, vanished from a restoration lab. A photo has been sent to all border crossings to help prevent it from being smuggled out of the country. Quickly, let me just check my wrist. Nope, not wearing it. Okay, it's not me. I'm free. Coming up, we're going to be talking about the Fed. Obviously, this is the price action bucking the trend that we had yesterday. A bit of a dip back for Wall Street. Today, S&P futures, Nasdaq leaning towards positive, a lot more than yesterday, I should say. Nasdaq up 0.7%. The S&P up 0.5%, and European markets also up a similar amount as global investors digest yesterday's Fed. They cut 25 basis points, signaled 2 more rate cuts for this year, but then perhaps a slower pace going into 26, 27. And one perhaps less hawkish surprise was the fact that there was only one 50 basis point dissenter, and that was Stephen Myron. So we're going to hear more about the impact this is going to have on FX with Ebury's Matthew Ryan. We'll talk about that shortly. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Risk management. U.S. equity futures gain after the Fed cut rates for the first time this year, with Chair Jerome Powell keeping policymakers largely united despite President Trump's pressure for a bigger cut. Bargaining chip. China bans its tech companies from using the AI chip Nvidia made just for them. The U.S. describing the move as counterproductive. And our big take today. In a broken Palestine, increased Israeli activity undermines the viability of a Palestinian state. We are live from the West Bank. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, picking up from yesterday's big Fed decision. So they went along with market expectations, cut interest rates by 25 basis points, but did signal, the median dot signal, that we could be in store for another 2 rate cuts by the end of this year. Next year, though, less dovish, so only 1 cut priced in, and 2027 also only 1 cut priced in. So sort of a mixed bag in terms of how the market reacted to this. By the end of the day, we saw a small, moderate pullback for S&P and the Nasdaq, though Nasdaq, of course, being driven by that Nvidia story we've just been covering on the show, and the fact that China have banned some of those Nvidia chips for use in the country. So that's a tech story that we were focused on yesterday. This morning, though, things are flipping up to the green. We've got S&P up 0.5%, Nasdaq up 0.7%, futures looking like they're going to open in buoyant territory later on. And then 10-year yields, we broke through 4% briefly to the downside yesterday, right after the decision. But by the end of the day, we actually ended up 4 basis points higher than where the day started. Tells you a lot about all of the volatility that went on once that decision came out. But 10-year yields now sitting at 4.06, about 2 basis points lower throughout the course of the Asian session. The USD also caught a moderate bid, I would say, up 16 basis points. And so maybe a case of buy the rumor, sell the fact. We'll talk more about that with our FX guest in just a moment. And switching over, our terminal chart for today, also noticeable, the fact that EM currencies, too, have reacted negatively to the reaction to the news that came out of the Fed yesterday, and the fact that obviously you've seen a bid for the USD has not been so supportive for some of those EM currencies, even though into the Fed meeting you saw, as you see from that chart there, the beginning of September, a huge run-up in terms of EM currencies performance, but that dipped a little bit overnight. Now, Arab Gulf nations are also easing borrowing costs after the Fed's first rate cut of the year. The UAE, Saudi Arabia and others trimmed rates by 25 basis points, aiming to support credit demand and housing. The cost of money in Saudi, as measured by the 3-month SIBOR, has seen fluctuations since the start of the year, but is still hovering above 5%. And the gauge of the dollar has risen for a second day, with the Fed Chair Jerome Powell terming the central bank's move as risk management cuts. And now joining us now is Matthew Ryan, market strategy head at eBury. Matthew, a lot, I guess, of takeaways that we could extract from the Fed meeting yesterday. But essentially, if we could whittle it down into one description, it is a risk management cut. That's exactly what the Fed Chair Jerome Powell painted it as yesterday. So does that take out the possibility of a sequential path of rate cuts in the future?
Well, yes, and I think it was a very balanced approach from the Fed. They have a lot to balance at the moment. Of course, on the one hand, we have this significant cooling that we're seeing in the US jobs market, which we'd argued before the meeting had left the Fed well behind the curve. But inflation still remains well above target and is likely to trend higher as a result of the tariffs. So the Fed has had a lot to juggle. I think they struck a pretty balanced, appropriate tone, signalling a total of 3 cuts this year, 2 more beyond the September meeting, which was in line with our expectations going into the meeting. But Powell, during his communications, was slightly less dovish. He continued to stress that the focus is on controlling inflation, and that's still an important part of the mandate. And interestingly, I think probably the biggest takeaway for us from the meeting was that not only did we only see one dissenter in favour of a 50 basis point cut, but we only saw 1 cut priced in for 2026, when nowhere near fully endorses market pricing. I think that's an acknowledgement that the Fed is not only worried about inflation, but also worried about spooking the Treasury market, particularly given the inflation risks posed by the tariffs.
Yeah, and we were saying, bringing it back to FX, that it was going to be difficult for the Fed to validate some of the rate cuts that were priced in by end of 2026. There were 6 cumulative rate cuts priced in before the event. And that certainly does appear to be the case. Does that explain some of the price action we had in the greenback yesterday?
Yes, I think so. I mean, the dollar was initially lower in the knee-jerk reaction and following the release of the dot plot. I think as markets realised that the Fed was effectively confirming 3 cuts this year. But then if we look into 2026, as I said, still only 1 cut priced in or expected for next year. That's much less aggressive than priced in by markets. We'd expected a slightly a more narrower gap between the two. We thought that the Fed would more closely endorse the market than it did last night. Actually, it only suggested that one more cut between now and the end of next year relative to its June forecast, which isn't too much of a revision. So initial dollar sell-off, but actually it recovered a little bit of ground following Powell's slightly more hawkish communications and off the back of that 2026 dot, which wasn't quite as dovish as I think markets had anticipated.
Yeah, you're also seeing a pullback in the euro, which is, I guess, part and parcel of the strength in the USD. We're getting close to 118 again. Do you think that euro can continue its march higher? Do you have 120 as a target, like some of the other analysts that we speak to have?
Yes, long term, we still think that the euro dollar will grind a little bit higher from current levels. We're actually looking at around about the 120 level heading into the new year. I think that's a reasonable assumption. On the one hand, we think that we will see a convergence in economic performance across the Atlantic. The US, we think, will continue to slow, partly as a result of the tariffs. And of course, this slowdown we are witnessing in the jobs market. The Fed also has much more room to cut than its peers. We are yet to see the full impact of Fed cuts on the dollar. We think that means that risks to the greenback is skewed to the downside. And actually in Europe, the outlook is becoming increasingly rosy, particularly given Germany's stimulus program. And we do think a grind higher in euro dollar is on the way.
Yeah. Let's talk about the Bank of England. We also have a central bank decision coming up today. Poor Bank of England, no one's been giving it a lot of attention, but of course there is a meeting coming up. No one's expecting a rate cut. Yesterday we had inflation data still quite elevated, highest level since 2024. There could be a tapering announcement. What does all that do to the pound? Or is that to a certain degree all priced in at this point?
Yes, I think so. I think that today's meeting from the Bank of England will be slightly more of a non-event than we saw yesterday from the Fed. There's practically no chance of any change in rates, nor do we actually expect there to be any more cuts between now and the end of the year. Granted, we could see a couple of dissenters in favour of a cut today, and the does will no doubt cite the concerns over the state of Britain's jobs market, which I think are warranted. But, as you said, inflation is still running very high, almost double the 2% target. And I think the officials, are similar to the Fed, are wary about triggering another jump in long-dated gilt yields. All that means we think the prolonged pause is probably on the way. And actually, I think there's a decent chance that we do see the MPC hinting at that today, either by ditching or tweaking its gradual and careful guidance, which I think probably would rule out another cut at least until February next year.
Okay, Matthew Ryan, market strategy head at Avery. Thank you so much for joining us nice and early in London. Thank you so much. Well, we just had some breaking news come through. This is per FT reporting saying that China has dropped the Google antitrust probe during U.S. trade talks. So remember, these were trade talks that were taking place at the beginning of the week in Madrid. We spent a lot of time talking about that TikTok framework deal, but FT are now reporting that China have now also dropped the probe into Google. So that could be a very positive signal for Alphabet. Remember, earlier on this week, Alphabet did actually break through $3 trillion market cap on a positive momentum out of the U.S. antitrust probe. So this is coming through from the FT now, suggesting that China may also be looking to drop their own antitrust probe. So that's some breaking news. All right, Britain's King Charles has urged the defense of Ukraine and the environment at a lavish state dinner at Windsor Castle. The King spoke up while offering a toast, welcoming President Trump and top tech and finance executives. US and UK officials expect to roll out economic deals worth billions of dollars to coincide with the visit. For more, let's bring in Bloomberg's Lizzie Burden, who is still in Windsor. You've been there the last couple of days. Lizzie, what do we know about last night's state banquet, the King's speech? Anything new come out of it?
Well, they dined, Jemima, on organic Norfolk chicken. They washed it down with a transatlantic whiskey sour, this new cocktail designed specifically for the event. And round the table, as you say, you had the biggest names of Wall Street and Silicon Valley as well, the likes of Jane Fraser, who you just had on the programme recently, of Citigroup, Nvidia's Jensen Huang, Steve Schwarzman of Blackstone. And in terms of that speech, from what we know from the readout of it, the King said that we are kin to the President. He noted the President's fondness for British soil when it comes to making golf courses. But the serious point he made was that they need to share an urge to defend Ukraine and defend the environment. So notably, hitting on two of the fault lines between the UK and the US at the moment, a dinner that really was designed to curry favour with the President. But notable as well because usually the monarch traditionally would have restraint in delving into these controversial issues. But as we know, the King is not the Queen, Queen Elizabeth II, and here he was making a real statement to the President on his visit.
Yeah, most definitely. What about today, and what exactly should we be watching out for in terms of potential announcements and also a meeting between President Trump and the Prime Minister?
Exactly. Well, if yesterday was all about pageantry, today is all about getting down to business. And the President is going to head from Windsor Castle to the Prime Minister's country estate at Chequers. The tech bosses will be there as well. We're expecting tens of billions of dollars of investment in tech to be announced for Britain. £150 billion of spending on infrastructure, or total investment, I should say, in the UK. Starmer's team saying will be unveiled. Starmer hoping to press Trump on trade terms, on Ukraine as well, though we're not expecting any major breakthroughs, and we're not expecting him to try to raise the Middle East. The Times of London reporting late last night that, in fact, Starmer is going to wait until the weekend to recognise Palestine as a state. So avoiding, hopefully, a diplomatic incident by waiting until after Trump's departure, after the state visit, but doing it before that UN General Assembly meeting in New York next week. Now, the President has previously said that doing so would reward Hamas, but the previously outlined plan from Keir Starmer would be to say that this will happen if Israel does not agree to a ceasefire, does not commit to a two-state solution, and does not make plans, make clear that it would not annex the occupied West Bank. So it looks like this is going to happen at the weekend, but it really could dominate the press conference.
Well, teeing up our next segment, well, Lizzie, thank you so much, Lizzie Burden. Because also coming up on the show, we are going to be talking about France saying it will recognize a Palestinian state at the annual United Nations General Assembly, the UNGA, in New York next week. But how viable is the two-state solution? Our big take next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Israeli troops have been pushing deeper into Gaza City as more people flee the devastated area. Palestinians say the strikes have cut off phone and internet services, making it harder for people to call ambulances during the new Israeli offensive. Local health officials say the Palestinian death toll has now surpassed 65,000 people, and Israel says it's launched what it calls an intensive military operation towards the heart of Gaza City to confront Hamas. The European Union has proposed suspending Israel's preferential trade benefits as part of a new package of sanctions in response to the humanitarian crisis in Gaza. The move means Israel will be charged the same tariff rate as other nations that don't have a trade accord with the bloc. The move would require a qualified majority amongst the 27 member states, and countries, including Germany, have opposed punishing Israel.
The aim is not to punish Israel. The aim is to improve the humanitarian situation in Gaza. All member states agree that the situation in Gaza is untenable. The war needs to end. The suffering must stop, and all hostages must be released.
And France says it will use the annual United Nations General Assembly in New York on Monday as a platform to become the first member of an advanced economy to recognize an independent Palestine alongside Israel. Several Asian countries, as well as the UK and Canada, may also do the same. But the reality on the ground in Palestinian territories is different, and for many, the flurry of diplomacy probably comes too late. Let's go to Bethlehem now and speak to Bloomberg's Fadwa Hodali. This is the subject of today's big take up on the terminal. Essentially, you've had a big move out of countries, advanced economies, including the likes of France, towards recognizing a Palestinian state. But the question is, what would a Palestinian state actually look like today?
Well, actually, good morning. The Palestinian state will these days look fragmented. West Bank under Palestinian control, Gaza devastated and destruction of the ongoing war, and the East Jerusalem that Palestinians hope as a capital is annexed by Israel. So the reality on the ground is completely what would Palestinians hope for, meaning by fragmented, the settlement expansion, the roadblocks, the settler attacks, the daily life, the restriction of movement. This is all affecting any future state that the Palestinians will hope for.
The Israeli government has categorically rejected the prospect of a two-state solution. Is a two-state solution, therefore, still viable?
Well, it depends of how you look at it, actually. If you look at it from a diplomatic way, it's an intent by the international community to revive the two-state solution after what took place in Gaza. But if you look at it on the ground, the reality on the ground is completely different. After October 7th, the international community has realized that ending the conflict is a must for Palestine and Israel, and they need to take tangible steps. Now, is recognizing the state of Palestine is a step. It's a pressure by the international community on Israel, but you need the political will in order to achieve that. And if there is no political will, then you won't be able to achieve anything on the ground, actually, because the facts on the ground is completely what the international community hopes for. You know, the West Bank has witnessed a silent expansion of settlement, a silent expansion of attacks on settlers, by settlers on Palestinians, roadblocks, restriction of movement. This is all are creating huge obstacles to create a Palestinian state. The international community for years have kept silent and have not recognized the state of Palestine, and now they're trying to raise the time in order to achieve that, but without a political will, again, this is going to be very, very, very difficult to achieve.
Bloomberg's Fadwa Hodali joining us from Bethlehem. Thank you so much for your time today, and a reminder that the Big Take alongside graphics is on the Bloomberg terminal this morning, NI Big Take Go. Now, Saudi Arabia and Pakistan have elevated their long-standing security partnership by signing a mutual defense pact. The two countries stated any aggression against either one shall be considered an aggression against both. The pact comes after an Israeli strike targeting Hamas leaders in Doha strained relations between the U.S. and key Middle East allies. And coming up, we speak to Alex Okozie, Managing Director for Africa at Google, about the company's new subsea connectivity hubs connecting the continent to the world. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, Google is investing billions of dollars to improve digital connectivity across Africa, including subsea cable hubs as part of its Africa Connect program. The investment aims to provide broader access to the internet and emerging technologies like AI, helping to accelerate the continent's economic growth. Bloomberg TV's Jennifer Zabazaja spoke to Google's managing director for Africa, Alex Okosi, about the plans.
How they're different is that they really do now enable us to actually land the cables within the continent in a much more effective way. As you know, being able to build a subsea cable still requires that you land them in different markets. And that's what we've been working hard to do. When you have these connectivity hubs, they then really maximize your opportunity to be able to partner with the telecommunication companies on the ground to again, reduce the cost for the average user in terms of being able to access the internet. For us, it's foundational to be able to create more connectivity, being able to kind of have that foundation for us to really leverage this new AI opportunity that we have for Africa is really critical. So the connectivity hubs are quite a significant investment, but it's important for us as we see it to be able to really maximize the opportunity to ensure that the bandwidth that we are creating with the subsea cables are effectively utilized by our partners on the ground.
What went into actually landing the cables? I know you can't tell us specifically where the connectivity hubs are, but maybe you can talk about regionally what they're going to do and how you're able to get this over the line.
Look, I think regionally what they're going to do, we're going to land 4 of them, right? So North, East, West, and Southern Africa. And the idea is going to be really how do we then enable, telco players, last mile players on the ground to be able to again leverage it, to again start reducing the cost for our consumers and our communities to get online. To be able to sort of get it over the line is really being able to, again, continue what we have been doing as Google, which is investing in making sure that we are part of Africa's digital transformation. So for us, is a clear focus. The foundation for our strategy is about connectivity, and we continue to invest in that.
That was Google's managing director for Africa, Alex Okosi, speaking to Jennifer Zabazaja. Well, this is how equity futures are reacting to that Fed interest rate cut yesterday. Quite buoyant this morning. S&P futures up 0.5%, NASDAQ up 0.75%. But I will say, keep an eye out on some of the tech stories, especially the latest story that this dropped throughout the course of our show. FT saying that China have now dropped the Google antitrust probe. So Alphabet, one of the stocks to watch later on in the U.S. session today. European markets also seen opening up in the green. We will continue to bring you analysis of the Fed and the later shows. That's it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe.
News when you want it with Bloomberg News Now. I'm Nathan Hager. It is a crucial conversation in the nation's capital. President Donald Trump has been on the phone for much of the morning with Chinese President Xi Jinping, and the future of TikTok is high on the agenda. Bloomberg's Tyler Kendall has more from the White House.
People familiar do tell us that the likely structure of a deal is going to look like this consortium of outside U.S. investors, including Oracle, existing U.S. investors, and then ByteDance leaving with a less than 20% stake in the company in a bid potentially to satisfy that national security law passed by Congress. But still, a lot of big questions on whether it will and whether or not the deal will get finalized. But at the moment, TikTok feels like the potential for the most tangible deliverable to come out of today's call.
Bloomberg's Tyler Kendall reports another deliverable could be if the call sets up a face-to-face meeting next month between Presidents Trump and Xi in South Korea. President Trump is taking his battles with the media to a new level. He now says the FCC should revoke the licenses of broadcast networks that criticize him too much.
I read someplace that the networks were 97% against me. I got 97% negative, and yet I won in easily. It won all 7 swing states, popular, but won everything.
That was the president on Air Force One last night. He spoke after ABC pulled late-night host Jimmy Kimmel off the air this week under pressure from FCC Chair Brendan Carr. More from Bloomberg Intelligence media litigation analyst Matthew Schettenhelm.
Carr first went on a podcast that said, we can do this the easy way or we can do this the hard way. And he recommended that broadcasters take Jimmy Kimmel off the air, Disney take Jimmy Kimmel off the air. That could be viewed as a threat, and Disney, in theory, could bring a First Amendment challenge to go after the government there.
Matthew Schettenhelm with Bloomberg Intelligence. The Supreme Court is not acting right away on President Trump's request to let him fire Fed Governor Lisa Cook. Chief Justice John Roberts is asking for a response from Cook by this coming Thursday. The president has been pushing to oust her over alleged mortgage fraud. She denies it. Cook has been allowed to stay at the Fed while the legal process plays out. The Centers for Disease Control's Vaccine Advisory Committee has delayed a vote to push back the first dose of hepatitis B vaccine for newborns. The panel, handpicked by Health Secretary Robert F. Kennedy Jr., says it wants more time to consider the evidence. Hep B shots have been recommended to newborns for decades. Experts have warned delaying the dose could lead to further spread of a dangerous disease. The European Union is proposing a complete ban on Russian liquefied natural gas imports starting in 2027, a full year earlier than originally planned. The move comes days after President Trump called on the EU to do more about its energy trade with Russia. We get more from Bloomberg's Anne-Marie Hordern in London.
You still have Russian LNG going to places like Spain, Belgium, France, and then, of course, there still are other fossil fuel supplies coming via a Turkish pipeline. When you look at the biggest importers of Russian fossil fuels, it's China, India, Turkey, the European Union, and South Korea. So this has been something the president has been putting pressure on Europe for.
Bloomberg's Anne-Marie Hordern in London. The EU is also proposing full transaction bans on more Russian banks, as well as trade restrictions on entities in China and India, all to pressure Russia's Vladimir Putin to end the war in Ukraine. On Wall Street, investors are ending the big Federal Reserve week with stocks at all-time highs. Right now, the S&P 500 and the Dow Jones Industrial Average are up 0.2%. The Nasdaq Composite is higher by 0.4%, and the 10-year Treasury yield is at 4.12%. Former St. Louis Fed President James Bullard says he supported this week's decision by the Federal Reserve to cut interest rates against a weaker labor market.
Now you've got markets pricing probably 75 by the end of the year. That would be a significant move by the end of the year, and they have a little bit of optionality if the data goes the other way. So it was a pretty good decision from the point of view of how this works.
Former St. Louis Fed Chief Jim Bullard is in the running to succeed Chair Jay Powell when his term expires in May. Bullard tells Bloomberg Surveillance he would not have voted for a 0.5% rate cut this week. Securities and Exchange Commission Chair Paul Atkins says he's moving forward with plans to overhaul the disclosure rules for publicly traded companies. Atkins confirmed that on CNBC this morning after President Trump posted on social media this week that he'd like to see companies move from quarterly earnings reports to doing them every 6 months. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
points of a rate cut at that meeting. And we just think that the market, if they're looking for any justification that this is a Fed that's going to be cutting quickly, won't really get that through the mix of communications today. Now, the market may look through that. It may know that, look, the Fed is not going to tell us that they're cutting in October, and it may be more focused on the dissents, the size of those dissents, and then what the market thinks that means for how the dissenting officials will vote in the future. The Myron dissent is key for the market. He's new. We don't know much about him and how he thinks about monetary policy today. So if it's a 75 basis point dissent or a 100 basis point dissent, the market will be taking some cue from that, we expect.
Do you think he would go as far as dissenting for a 100 basis point reduction at this meeting?
It is a low probability, but I wouldn't rule it out.
Jerry, this goes to the question of what people do with that in allocation. Does that mean just keep going into risk assets and sell long bonds? Or does this mean everything could be bid up because suddenly we're looking at unconventional policies that will lift all asset prices in the United States?
It's a great question, Lisa, because I think the moment of truth is coming for a lot of investors. Think about all the people who've been content, even thrilled, to have spare cash sitting in higher yielding accounts, money market accounts, earning 4%, 4.5%. As Mark and our economists and everyone thinks ahead to the future and we forecast a terminal rate next year of 3.25%, suddenly those higher yielding cash accounts start to look a lot less attractive, especially if inflation remains sticky. You've got a big decision to make at that point. And to your point at the top, Lisa, actually, the tension now isn't just between the soft data and the hard data, which we've been writing about all year, the surveys that are negative, and the economic data, which is holding up pretty well. It's now almost a fight between the hard data and the hard data on the labor side, and retail sales being strong. So investors have to decide, if the Fed's behind the curve, if the economy is actually getting weaker, then maybe that cash isn't looking attractive, but longer-term bonds might be good for a trade. If the economy holds up, if the airline executives and the bank executives and the retail sales data all confirm economy that's really strong, there's lots of places to go in equities that are going to be more attractive than cash. It's hard to overstate. This isn't cash on the sidelines. This is cash on the sidelines, in the bleachers, up to the press box. Amount of cash with almost $20 trillion in cash and cash equivalents today.
Well, these are diametrically opposed outcomes. This is the problem right now. You either have a completely risk-on environment where potentially you see greater inflation, or you see a risk-off environment where you want the long bond to lock in that 4% yield. You want to be in the bleachers. You want to be in the nosebleeds, right? Because ultimately it's going to be a difficult moment. What's going to be the tell? How will we know exactly which scenario it is? Is there an economic data point, or does it really hinge on the Fed's reaction function?
I think it's labor markets and credit spreads are the most important things to watch. I can tell you from speaking to a lot of investors this summer around the world and in the United States that the expectation remains that if you get economic weakness, the Fed stands ready and willing, and at this level of interest rates has some credible firepower to address that quickly. Given the discussion on fiscal policy and broader policy environment, there's an understanding, even an assumption among a lot of investors of every type, that the Fed will engage and can fix what may or may not be broken in the U.S. economy if it comes to that. And so even if you get a great moment for a long bond trade, it may just be a moment if the Fed is aggressive as they seem to be willing to be, in which case, for a longer-term investor, equity income starts to look really attractive.
Let's unpack some of that. So you said focus on two things, labor and credit spreads. So as we know, we can look at credit spreads right now, investment grade spreads, multi-decade tights. The labor market's a little bit more complex. It depends how you measure it. Unemployment's been really steady through the summer. And then you've got this massive step down in payrolls. Mark, for you and the team, do you think the step down in payrolls overstates the weakness, the broad-based weakness that you might be seeing elsewhere?
We do. And this is because we're seeing as Powell describes, a curious condition where labor supply is coming down at the same time as labor demand. Labor supply is naturally falling due to immigration policies, deportations, et cetera. And so you have to be careful in how you read the headline employment numbers in that context, we think. And it's useful to focus on labor market ratios, unemployment rate, hiring rate, quits rate, things of that nature. And many of these labor market ratios tell you that the labor market remains very healthy and actually hasn't moderated at all, at least some of them. Now, the unemployment rate has ticked up a little bit. We're going to hear from the Fed later today that they're increasingly worried about the labor market, at least in relation to inflation. They're going to overweight the labor data versus the inflation data, or at least that's what those are some of the sounds we think we will hear and see in the summary of economic projections. But generally speaking, it is an environment where if the Fed is more focused on the labor market, as we think they will be, then rates are going to probably continue to decline even more than what is currently priced. Now, we think investors should be long the belly of the curve, receive the 5-year part of the curve, due to the fact that the market is only pricing a Fed that's cutting to a little under 3%. And we think, as we've discussed before, the market is underappreciating the range of outcomes that can exist below the neutral rate where the Fed says they will cut to. The Fed's independence does come into question when you think about these things, but we see risks, at least in the fixed income world, that this is a Fed that will be increasingly dismissive of inflation, focused on the labor market, use that to justify a string of rate cuts. And if that's right, and I tell Jared that, it sounds like risk assets are going to do really well, or at least that would be my expectation.
Mark is asking a really provocative question. Why would they stop at 3? I think it's the right question to ask out into 26 because this could be a very, very different Federal Reserve. Why would they stop at 3? And how hot are they willing to run this thing into next year?
It's difficult to make predictions, especially about the future and the mindset people will be in with economic data that will also be difficult to predict. I think the point about the opacity on the labor market is incredibly important here. Where the Fed might stop and why they might, I think, depends on the data. And the message that I get from investors pretty clearly is we care about total returns that we can take home now and risk that we don't have to think too hard about. And if you suggest an asset allocation or an investment policy that requires a lot of contingent planning for the path of policy, the path of the economy, it starts to look pretty difficult. We know that there's yields available in the market today on assets that are giving you reliable cash flows. You don't have to reach out for speculative growth into the future. You don't have to reach out for speculative duration in the bond market that requires a lot of planning around these contingent policy decisions. So more and more conversations with investors that we have are focused on where can I get reliable cash flows from a business that I can understand, where I don't have to make all these grand macroeconomic assumptions about policy or the economy.
And if I can just add to that, one of the things that we have seen in the bond market, and certainly you all have noticed, is that there's been a bit of a bull flattening in the rates market right now, which means that rates are going down, but it's led by the very long end. Really dismissive of fiscal concerns, which were so prominent a few months ago. And what we think is happening, at least in the Treasury space, is that investors are reducing some of the steepening positions that worked very well. But to Jared's point, they're also reaching out and they're trying to lock in duration and coupon where they can. They're just trying to get those interest rates before they go down even further. And the market may not like the fact that it has to extend right now, but it's really trying to lock in where it can because it does sense there's a big turn in the rate cycle. And later this afternoon, we're going to see evidence of that.
Jared, I just want to ask whether the prospect of yield curve control or the suspicion that that could be deployed has killed bond vigilantes.
It may be the prospect of yield curve control. It may be expectations around fiscal policy and the widespread adoption of industrial policy that might be more productive if we can try a bullish scenario on for size, for once. Whatever the range of catalysts and scenarios, I think it's pretty clear that the kinds of fears that we've heard about, some of us our entire career, haven't still been realized. Think about 6-7% budget deficits in peacetime, in an economic, in strong bull market, and the 10 years is so quiet. It's amazing for anyone who's been afraid their whole career about the bond vigilantes. When will they come? Maybe they're a much further distance off than. Well, maybe it's yield curve control that finally wakes them up. But if it's not that, it's always something else, isn't it?
If I can add on to that just briefly, there's been a lot of focus in the market, at least yesterday, due to some Bloomberg reporting, highlighting the fact that Stephen Myron, in his prepared remarks for his Senate confirmation, did talk about the Fed's third mandate, which doesn't get a lot of focus. But if you read the Federal Reserve Act, it is true there's a 3-part mandate: maximum employment, stable prices, and moderate long-term interest rates. Now, many in the market believe that you don't need to focus on that third mandate because if you take care of the first two on labor and inflation, then interest rates will be moderate. But the fact that that was mentioned has, let's say, awakened some to the notion that, oh, wow, maybe this is actually a precursor to the Fed using its balance sheet in very non-traditional ways. Now, that's definitely reading between the lines. There's not any elaboration on that. But certainly the market, I think, has been a little bit more open to that. And that may be on the margin contributing to some of the increased bullish sentiment at the long end of the U.S. rates curve.
This was a great way to start the programme. Gents, appreciate your time.
Thanks so much for being here.
Thank you.
For being here.
Looking forward to it. Plenty more still to come on this programme as we count you down to that Fed decision. Big question. How's the coffee?
Well, the coffee is great.
Yeah,
and honestly,
good.
It sounds like a
You'd come
video
back?
game. I love being on the trading floor because it always sounds like...
The sound of the Bloomberg.
Yeah. It's
music, right? It's a beautiful thing. It's a beautiful thing.
I love it.
Let's get you an update on news elsewhere with your top stories in your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thanks. House Republicans unveiled a stopgap spending bill to keep the government open past an October 1st deadline. The measure would keep agencies operating through November 21st and provide new funding for security. Democrats oppose the bill, increasing the chances of a shutdown. President Donald Trump announced a deal to keep TikTok running in the United States. According to the agreement, which has yet to be finalized, U.S. companies including Oracle, Silver Lake and Andreessen Horowitz would take an 80% stake in the social media app. China's ByteDance would own less than 20%, satisfying a 2024 U.S. law that required the Beijing-based company to divest. A close encounter for Air Force One on its way to the UK. A New York-based air traffic controller noticed a Spirit Airlines passenger jet flying at a similar altitude and on a converging flight path with the president's plane. The controller alerted the Spirit pilots to change course immediately. The planes were never in danger of exceeding safety thresholds. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the programme, the Bank of America senior semiconductors analyst, Vivek Arya. He joins us next, live from New York City, here at the headquarters of Bank of America, right here in the heart of Wall Street. This is Bloomberg.
For over 147 years, Bgrim has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
In the last few months, there has been a lot of uncertainty, both on the geopolitical and obviously for the economy with the tariff. There's been a silver lining, especially in this region, around these events. Currency and bonds have been attracting a lot of attention in terms of performance. In general, it's been a pretty good performance for equities. And going forward, I will definitely remain positive around the Asian assets.
The Federal Reserve opinion is 3% is neutral. My view is 4% is neutral.
If the takeaway is that we're not starting 25 basis points per meeting, I think the market sells off.
If the Fed wants to cut rates to stimulate an economy with no excess capacity, they're just going to create more inflation.
The risk is that at some point next year, the Fed says, look, we have to actually hike.
We're looking for 25 basis points later on this afternoon from the Federal Reserve. Some people looking for 50. Standard Chartered, SocGen. They're the outlier that's going into this meeting. The big question for a lot of you is the guidance. Show me the guidance for 25 and beyond into 26. Can those dots come down from 2 down to 3?
Yeah, and will Stephen Myron's guidance be actually available to it? Will his dot be included? You asked me yesterday, what does his dot look like? Unclear whether we'll see it, because they had to be submitted on Friday. Do they make an exception for him?
We're going to find out a little bit later this afternoon. That's the big tease for the decision later. Just where is Stephen Myron's dot going to be? Now, Governor Myron, of course. Your equity market shaping up as follows. Equity futures on the S&P 500 just about unchanged. We've been treading water over the last 24 hours. A little bit positive on the Russell 2000, up by around about 0.1%. If you turn to the bond market, 2-year, 10-year and 30-year bond yields shaping up as follows. Twos have settled down around 350. The surprise of the last 2 weeks coming into September was the bull flattener that Mark Cabana was talking about. The long end of the yield curve. Yields starting to come in. We've got 10s around 4.
Yeah, and Mark Cabana talking about how a lot of investors are trying to lock in lower yields, as it does seem like the Federal Reserve is dead set on lowering rates. And the question now is just what's the limit? The question that I have is, when do bond vigilantes come back, or are they a fiction? Are they going to be a novel, not some sort of nonfiction creative endeavor?
Will they be crushed by the Federal Reserve in 2026?
Are they going to be crushed by yield curve control? Have they been crushed by circumstances that seem to have moved against them?
Yields down by about a basis point so far this morning. Let's turn to tech. What a run. A 9-day winning streak on the Nasdaq 100 halted just briefly yesterday. On tech, Vivek Arya, the senior semiconductors analyst at Bank of America, writing the following. The cyclical framework still broadly favors semis, but market volatility could re-energize investor debates. Vivek joins us now for more. Vivek, good to see you.
Good morning.
Good morning. Thank you for having us. Let's just talk about your sector. It is like the only sector in financial markets right now. It's where all the focus is. Walk us through why it's having such a good run at the moment.
Sure. I think, semiconductors are participating in every aspect of the global economy, right? AI is the most prominent of them. But if you take the role of semiconductors in automotive, right, that's a multi-trillion-dollar industry that is transforming with the advent of more electrified cars, right? And semiconductors today are only 2% of the cost of making a car. So think about where that goes over time, right? Industrial, look at things like factory automation, cybersecurity, medical instrumentation, right? PCs, servers, cloud computing. So what's happening is that as the global economy is getting more automated and smarter, I think that naturally increases the role of semiconductors in the economy, and we think this continues.
At the same time, we seem to have introduced a lot of political risk into the industry. There is a clash right now between the United States and China. There was some news overnight about China pushing some companies to halt the use of certain Nvidia chips. How does that complicate things for the life of an analyst?
Sure. I think it is a concern. First, having friction between the largest designer of chips, which is the U.S., and one of the largest buyers of chips, which is China, is not a good thing for a global industry. The reason that semiconductors have become so profitable as an industry, right, and just to give some numbers, the average semiconductor company is 2 to 3 times more better in terms of free cash flow generation than an average S&P 500 company, right? So it's an extremely profitable industry. And the reason it has become so profitable is because it has developed these pools of excellence, right? There are certain companies who do manufacturing very well, certain who do materials very well, right? Certain who do GPUs very well, etc. So whenever you have friction in this well-balanced ecosystem, it creates a problem. But having said all that, we have to realize that, this tension between the U.S. and China has been going on for some time. The specific article from this morning, right, Nvidia and China. China is a very small part of their sales, at like less than 5% of their sales right now. So I think a lot of this is more noise rather than something that actually impacts their fundamentals.
There's a bigger question, though, which is in the race for chip excellence, how far behind is China from the United States? Can they stop buying U.S. chips and continue to develop at the same rate when it comes to the race for AI?
Sure. No, that's a good question. See, if I look over the last 10 years, and if I just go by, follow the money, right? If I look at global cloud capex, Chinese hyperscalers or Chinese cloud companies are less than 10% of the global spending. Right? That's the reality, right? They are less than 10% of the global spending. China doesn't have access to the latest in chip manufacturing equipment. What is the Chinese equivalent of Windows or Linux or Nvidia's CUDA ecosystem? It doesn't exist. So I think they are hampered because of a lot of reasons, right? But there are incredibly innovative software designers, right, in China. DeepSeek was a prime example of that. So I think somehow the industry will have to find the right balance where they are able to take advantage of a lot of the software innovations in China. But I think China as a whole, it is important to realize, is less than 10% of AI chip demand right now, which is why it is not as big a deal if you see this frequent noise about restrictions.
There's also this question about if we are going to see some sort of broadening out or an ongoing efficiency from the use of AI, shouldn't we see a shift from the enablers to the adopters, to the other companies, especially given some of the studies that have said that companies are struggling to monetize their AI investments?
Sure, absolutely. I think, so first of all, we are already starting to see that, right? Because if you look at the amount of tokens, right, consumed by Microsoft or OpenAI or Google or others, you see extremely strong growth. Every time Microsoft reports, they actually go out of the way to tell people this is how much incremental growth we got from AI. So I think we are already starting to see signs of those investments. But it's also important to realize that, infrastructure cycles can last a decade. 4G was the last big cycle. 4G deployment started in 2010, and people were deploying 4G capacity in 2020. But when you make money is actually in the first half of the cycle. So when did ChatGPT start? Late 22. So we are really only in the second or third year of what have historically been decade-long cycles. So I still think there is more room, I think, for investors to benefit from
it. Doesn't sound like you're worried about a massive misallocation of resources and a decade-long run of overinvestment that leads to a bust.
Right. See, that is very endemic to the infrastructure industry, that you're going to have invariably a period of digestion after every 3 to 4 years. What makes the AI cycle different is that it is not just these 3 or 4 large US companies that are investing. Look at the number of countries, regions, states, so-called sovereign AI. Right. This morning, there's a lot of news about Nscale in the UK deploying a lot of products. Earlier this year, all the announcements that Nvidia and AMD and others made in the Middle East, because every country wants to be self-sufficient in this new technology, right? And the third is enterprises. Enterprise adoption of generative AI is just getting going. So I think that's why we are not at even close to the middle stages of this build-up,
which is unbelievable to try and imagine. We appreciate your time, Vivek. It's good to see you. Thank you, sir. Vivek Kari there of Bank of America. Up next, we'll head to London. We'll catch up with Anne-Marie for the latest with the president, and we'll have a little look at retail.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Live from New York City this morning. Good morning to you all. Lucky to be at the Bank of America trading floor, anticipating that big Fed decision later on this afternoon. That decision at 2 p.m. Eastern Time. 3 hours away from the opening bell, equity futures shaping up like this so far this morning on the S&P 500. Really mild moves yesterday. Pretty mild follow through to this morning as well. Going nowhere on the S&P 500. Pretty much unchanged on the Nasdaq too. The Russell absolutely unchanged and dead flat after a really nice run through August and into September. Since the Fed last met, small caps up by more than 7%. Let's get you some single names. Let's get you some morning movers. Here's Danny Berger with more. Hey, Danny.
Hey, John. A rough morning for Nvidia after a story from the FT saying that China is banning, or at least telling the big companies, do not buy any more Nvidia chips. That's the likes of Alibaba, of ByteDance, the chips that are specifically tailor-made for China. Comes amid those discussions between the U.S. and China in Madrid, so those shares off 1.6%. Elsewhere in tech, the HR software maker Workday, that gets a boost of 6.4% after Elliott Management disclosed a stake in the company. In doing so, they praised the CEO, they praised the company and the turnaround efforts that they have been undertaking. So again, those shares rallying off the back of that. Finally, this morning, for your movers, you're looking at Eli Lilly, slightly down. They published a study on their obesity pill, and it showed enough effectiveness that it makes sense for a wider use. The problem with it is that the results weren't as convincing as the pill from Novo Nordisk or even their own shots or the shots from Novo Nordisk. So Novo Nordisk rises on that news, up 1.3%, and just adding insult to injury, Berenberg also upgrading Novo Nordisk, saying that it is its preferred choice for obesity pills instead of Eli Lilly. John?
Danny, thank you. Appreciate it. More from Danny in the next hour. I promised a trip to London. Let's do it. In the British capital, in the city of London, Anne-Marie joins us now for more. Tracking the president's state visit. Anne-Marie, not the first, but for the second time.
For the second time, it's an unprecedented state visit. The president talked about this as he departed the White House yesterday. He will be arriving at Windsor Castle just behind me in under 60 minutes time, so just under an hour. A lot of pomp and circumstance is going to be on display today. This is really the heart of the state visit. The president says he's mostly going primarily to see his friend. King Charles talked about their long-term relationship. And then on top of that, of course, there's going to be lots of chatter about economic deals, trade deals, and the likes. We should discuss, though, where we are right now, what the President of the United States is stepping into. Remember 7 months ago when Keir Starmer came to Washington, D.C., brought this unprecedented invitation from King Charles for a second state visit. Keir Starmer was looking quite up in the polls in the United Kingdom. It was viewed as a very clever diplomatic olive branch to the President of the United States. And at that moment, it did work. We did see the UK jump to the top of the queue. They had this fast-track trade agreement. It was announced in May. I was with the president when he was on the phone with Keir Starmer announcing that deal, and then it was signed along the sidelines of the G7. Well, right now, politically, the president is walking into a prime minister that is on thin ice with the British public, underwater in the polls. One recent YouGov poll said just 22% of British people have faith in this government, and the past 2 weeks have been incredibly difficult for him, where there's forced departures of his deputy prime minister, and most notably for this special relationship between Washington and the UK. The British ambassador to the United States was sacked after revelations in a Bloomberg News article given his close ties with Jeffrey Epstein. So it's going to be a challenging one, more so for the British prime minister than it is for President Donald Trump, who many say has the leverage right now walking in to this state visit.
Anne-Marie, the UK is not.
Satyaji, let me know where you sorted this position. At which level you sorted? किस लेवल पे सॉर्ट किया है सिल्वर को? आई होप MCX में किया होगा. कल आप ही ने पूछा था क्या क्वेश्चन? एक याद आ रहा मुझे, किसी ने पूछा तो था. पुट सॉर्ट किया था, मैंने बताया था आधा प्रॉफिट बुक करके ट्रेल कर सकते हो, एक सेकंड टारगेट मिल सकता है. वो आज मॉर्निंग पे अचीव हुआ था. अभी तो बुलिश ही लग रहा है. कल वाला ही ट्रेड चल रहा है क्या? कल वाला ही अगर पुट सॉर्ट करके बैठे हो और अगर अभी भी होल्ड है तो एक बार देख लेते हैं. तो ऑल टाइम हाई के आसपास दिख रहा है मुझे. अभी तो ये ऑल टाइम हाई के आसपास ही है. कोई रेजिस्टेंस तो नहीं है इसमें. MCX में, फॉरेक्स में देखना पड़ेगा कोई रेजिस्टेंस बनेगा तो. देयर इज नो सच रेजिस्टेंस राइट नाउ इन MCX इन 15 मिनट एटलीस्ट. एक सेकेंड, ये रीटेस्ट तो नहीं है. पर चार्ट ही जाएगा ही नहीं एक्चुअली में. हाँ, एक रीटेस्ट है शायद. रीटेस्ट पेंडिंग है. मार्केट इसका रीटेस्ट करने जाना चाहिए. रीटेस्ट भी पेंडिंग छोड़ के गया. ठीक है, ऊपर आपके पास 1,30,000 का एक रीटेस्ट पेंडिंग है. वहां पर निकाल दो. वहां से एक कॉल सॉर्ट करना चाहते हो, कॉल सॉर्ट कर लो 1,30,000 के अराउंड. देयर इज अ रेजिस्टेंस, नॉट रेजिस्टेंस बट अ सपोर्ट. सपोर्ट था, ब्रेकडाउन हो गया था एक्चुअली काफी देर के बाद. सो नाउ इट एक्ट लाइक एज अ रीटेस्ट. रीटेस्ट कर सकता है यहाँ पर. किया नहीं है इसने रीटेस्ट इन 15 मिनट टाइम फ्रेम. क्रूड ऑयल तो साइडवेज ही रह गया आज कंप्लीटली. कुछ हुआ ही नहीं इसमें. सुपर साइडवेज है. देखते हैं रेंज ब्रेक करता है या फिर नहीं.
We remain positive on off-price retailers and think price increases at other retailers could cause consumers to trade down. We expect this trend to continue in the coming months. Lorraine joins us now for more. Lorraine, good morning. Good to see you.
Thanks for coming to our place today.
Thanks for having us. Retail sales yesterday, really quite punchy, upside surprise. Are you seeing signs of the consumer re-engaging as we come out of summer?
Absolutely. I mean, just when you think you can count the consumer out, they do something surprising. And I think not just August, but July retail sales, the really important back-to-school selling season spans mid-July through mid-August. Those were phenomenal weeks, according to our BAC credit card data for clothing spend. And it's a surprise because we've seen about 3 years of declines in that category, and suddenly they're back.
Is it consolidated in the upper income sphere? The idea that people who can experience the wealth effect of stock markets, who do have some disposable cash, can go out and spend, but the others not so much. Do you feel like that's really the trend you're seeing break down?
I think it is. What we're seeing in our data is that the upper income consumer is spending a lot more than the lower income consumer, where we're seeing a little bit of signs of pressure. We're also seeing the upper income consumer trade down a bit. You know, and you referenced the off-price retailers. They're seeing much higher income consumers come in looking for deals. And I think that's, it's encouraging for them. It's showing you that the consumer really is very judicious about how they're spending, and they want to try to get the best value for their dollar. Not always the lowest price, the best value for their money.
How much is this that some of these off-price retailers are catering to higher income individuals simply because that is where the money has been? So they are sort of directing more of their product versus some sort of trading down or a signal on the economy that there really is fear that things are going to weaken.
They're absolutely doing that. They're seeing the opportunity to get a trade down customer, which they've been missing for the past few years. And you see, TJ Maxx always has a higher end consumer coming in to sort of peek at what brands they have. You're seeing Ross Stores and Burlington actually come in with much better branded product, and they're reaping the benefits of it.
They've had some massive gains over the last quarter. I think 10-15% for Ross Stores and TJX as well. Let's talk about tariffs. Mitigation strategies. Yep. What kind of mitigation strategies have these companies introduced, and how sustainable do you think they are?
I mean, the first thing you do is you negotiate with your vendors, right? Can you produce elsewhere? Can you produce more efficiently? We're hearing from our colleagues in Asia that the factories are providing some relief for the cost. The second thing is, can you be more efficient as a retailer, right? What costs can you cut? How can you do whatever you can internally to try to mitigate these? And then the last thing is pricing. And that is a very hot topic right now. They will all raise prices for holiday. Not all, but most. And I think the risk here and the uncertainty, and when I speak to these retail management teams, there is a ton of uncertainty, right? We had a great back to school, but what's coming is price increases because they can't take the brunt of the tariffs to their bottom line.
Let's just build on this a little bit more. So the tariffs go on. Either the exporters can drop prices. You suggested some of that is happening. Mm-hmm. The companies here domestically can take it on margin. Yep. We've seen some signs of them absorbing costs. And then the third piece of this is the pass-through to consumers that you've touched on. I think this is the most important piece of this, particularly for the Federal Reserve decision later on this afternoon. What is it about this moment that you see as inevitable that the pass-through will be coming in the coming months?
Yeah, so right now the product that is hitting the distribution centers for most retailers is carrying the full weight of the tariffs. So for back to school, it wasn't. They had some inventory already when the tariffs went into place, and then they bought the rest at 10% universal. Right now we're up to, for my company, is an average of 20% universal. That's a much bigger ticket for them. So for holiday, they will need to pass through some pricing. And they've all tested. They've done elasticity tests, but it's in a vacuum, right? Nothing else has been inflationary. So now everything will go up in price a little bit, and the consumer will decide what they want to buy.
What's a little bit? Just, do you have any sense of what we're talking about?
We are hearing low single-digit price increases for the most part, and that will do a decent job of offsetting some of it. Now we still saw most of my retailers cut guidance throughout the second quarter earnings period because they needed to take some of the hit themselves. And then over time, they hope to mitigate all of it, but that would require some pricing.
There's also a question about what costs they are cutting, and this is the other side of the Fed mandate, right, which is the jobs market and how much they are reducing some of their overhead by shrinking their workforce, adopting more technology that could potentially fill in the gaps. How much are you seeing this really play out in real time?
They're looking under no stone unturned on the cost structure. We haven't seen broad layoffs or anything like that. I think it's more just about efficiency and trying to make sure that they're getting, the best bang for their buck on what they are spending. But I think it will depend on the consumer's reaction to the price increases. If it goes through, we're fine, right? If the consumer decides, and remember, I cover a purely discretionary group. You don't really need anything that they sell. So you make the choice. You decide what the price is, right? If it's too expensive, you go somewhere else. And so the consumer has a lot of power right now, and that's what's causing the consternation from the companies.
Of the companies that fall under your coverage, just a final question. Which one is operating from a position of strength? Which one can be a little bit more aggressive going into year end?
I mean, I think it's the off-price retailers, as we discussed earlier. They have a lot of flexibility in what they buy, and they have the opportunity to gain a lot of trade-down customers with great brands. So I think they're in a real position of strength. And then the others that I would highlight are anybody with real brand heat at the higher end. It's easier for them to take price because the upper income consumer notices it less.
Lorraine, this was great. It's good to catch up and touch base.
Thank you.
Thanks for having us. Lorraine Hutchinson there of Bank of America. We've talked about this a few times on this programme. Tariffs. Don't think of it as an event. It's a process. And what you just heard there is that the next step in that process is potentially more pass-through.
Yeah, and the next step is whether consumers will accept that. The elasticity, this idea of whether they really will be concerned, consumers, about prices going up 5%, 4%, or whether they'll say, OK, we'll buy that, which means you have an economy that runs a little bit more robustly, but with a little bit hotter inflation versus some sort of deflationary slowdown in growth. This is the conundrum for the Federal Reserve.
We'll have more on the consumer in just a few moments' time. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Well, in the United Kingdom, more data to support the Bank of England holding rates steady at its meeting this week. Inflation held at the highest since early 2024 in August. Consumer prices rose 3.8% from a year ago, in line with estimates. The data may lead to an even longer pause in borrowing costs. President Donald Trump says he's spoken to Indian Prime Minister Narendra Modi. In a post on Truth Social, Trump said he had a wonderful call with Modi, complimented him on doing a tremendous job and thanked him for his support in helping end the war in Ukraine. Modi responded on Twitter saying he was committed to supporting the India-US relationship. President Trump has also been speaking with Israeli Prime Minister Benjamin Netanyahu. Speaking at a press conference Tuesday night, Netanyahu said he had a number of conversations with the president after Israel's strike on Hamas leaders in Doha, and that they were all, quote, very good. Netanyahu also announced he will meet with Trump at the White House September 29th. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Retail sales came in strong just yesterday, an upside surprise. Were you surprised? If you were tracking credit card data at Bank of America, you wouldn't have been. Up next on the show, we'll catch up with Liz Everett-Chrisberg of Bank of America Institute. From New York City, you're watching Bloomberg TV.
Connecting the dot between what's at stake and what is possible.
I think 25 basis points is pretty much a done deal at this point.
They should have gone 25 already. I think 50 should be on the table.
I don't think they're going to do 50. I think it is justified.
The risk is that the Fed ultimately won't deliver as much as they should, and that kind of reinforces the slowing that we've already seen.
This is a big question for later this afternoon. Can this Federal Reserve meet this market? The last time we got a news conference and forecast, which was earlier in the summer, they were looking for 2 rate cuts in 2025. This market is looking for 3, and it's looking for a whole lot more in 2026. The bar for this Federal Reserve is really quite high following these really disappointing payroll reports.
Yeah, especially given that they are still dealing with a dual mandate that is very much in conflict, and that they're dealing with a highly politicized environment where there clearly is an incentive, at least by the administration, to cut rates. My question is, how much will that actually increase the pace of lending at a time where financial conditions already are pretty loose?
Let's get to the small business world. Liz Everett-Chrisberg, the head of the Bank of America Institute, writes the following. Tariffs remain a hindrance to small business profitability and have continued to rise since the start of the year. Liz joins us now for more. Liz, good morning.
Good morning. Thank you guys for being here.
Thanks for having us.
Great to have you here.
Great for having us.
Oh, yeah. Great coffee.
She approves of the coffee.
Yes.
And you want to come back, right?
Well, I love the noises. It's great. This is great.
Okay, I'm pleased with that.
We can go.
Let's deal with this. Of course, the biggest small business lender in the country.
Yes.
17th consecutive quarter. Congratulations for that.
Yes.
What are you seeing in the small business world right now? Do they need lower interest rates?
So what we're seeing, and by the way, as you know, the largest small business lender for the 17th quarter in a row, we can see the activity because we're providing these small businesses with capital. But what we're seeing is that profitability is actually continuing to grow, and it's relatively stable. So it was up about 0.5% in August, same way that it was in July. But we are seeing that despite kind of the tariff pressures, and hiring is also a bit of a challenge. And we're starting to see hiring pull back. So one of the things that we see in our data from a spending perspective, what we measure is we measure the payments that small businesses are making to hiring firms. And that has been a pretty good indicator of what's going on with the labor market. And in August, we saw that drop by 6%. On an absolute basis, it was the lowest payment level of payments we've seen since we started this series back in 2023. So you're seeing small businesses kind of pull back on their hiring, particularly in retail and services firms, financial firms, insurance firms. But there is one area of small business where we're seeing hiring fees go up, and that's manufacturing and construction. Why is that? Very likely has to do with some of the changes in immigration policy. If you look at the percentage of construction workers who are not native born, it's relatively high.
Do you think that's the start of something bigger? We've talked about this low fire jobs market for a long time. We're trying to work out which way it breaks. Can it maintain the sort of status quo? Does it have to break one way or the other?
So here's one of the things. Let's go look at our consumer data and understand what that's showing us about the labor market. Surprisingly, given what we're seeing in the non-farm payroll numbers and whatnot, we're actually seeing wages continue to increase across all income groups. So higher, middle, and lower income groups, you're continuing to see their wages increase. Higher income wages increased 3.6%. That is the highest level we've seen since November 2021. But lower income consumers, lower income household, their wage growth is up less than 1%, the lowest level of absolute growth that we've seen since we started this series back in 2016. So you're seeing a bit of a difference in kind of a tale of two cities in terms of different levels of wage growth, of income growth, kind of across the spectrum.
When we talk about a tale of two cities, it seems to be divided into some of the large caps and the small caps, or it has so far this year. This idea that even as the likes of United see a reacceleration in consumer demand, are some of these smaller companies seeing the same? Is their optimism increasing heading into year end?
I do think that we are seeing payments away from hiring. They are continuing to spend. And really where we're seeing a big investment is in their technology spend. So technology spend for small businesses was up 10% last month. Now think about that. What does that mean? That means that these small businesses are investing. They're looking at AI as ways to kind of improve the productivity. But that may also impact their hiring plans, right? We've kind of, that's across the board, small businesses, large businesses, you're seeing that as well.
Well, I wonder then, if rates do go down, how much do you expect borrowing to increase? What kind of rate cuts would it take for a lot of these small firms to borrow more? And what would they invest in?
That's a good question. You know, one of the things that we do is we look at the data as it's happening. So what we could look at is what they have been investing in, and I think technology is probably where it's going to go.
So this actually goes to the question that John was asking, the low hire, low fire churn.
Yeah.
Is this the new normal in terms of invest in technology, see if you can do it with a bot, see if you can do it with an AI agent, and if you can't, then I guess you got to bring a body in?
Well, I think one of the bodies that we're seeing not come in is younger workers. So if you look at the unemployment rate for households, we're seeing the biggest growth in households getting unemployment being the younger consumers. So recent college grads, Gen Z, their unemployment, number of households with unemployment was up 11% in August, right? Now, it's still off of a relatively low base, but for those younger consumers, are they getting into the workforce? Low hire, low fire means that if you already have a job, you're continuing to get paid. But people getting into the workforce, that may be a bit of an issue. So something that we're paying attention to.
Have you got any thoughts on what's behind that? What's holding them back? What's holding back the hiring?
Well, I think it's companies are looking at where they can get efficiency, looking at, you know, where a little uncertainty. Do we need to bring on new people, or can we just continue with what we're doing, what we have right now? Is AI going to make that more efficient? So if you've got a job, continuing to see pay increases, but if you're trying to get into the market. Now, the other thing that's interesting is we're seeing many fewer people change jobs. That's one of the things that really drove the wage growth through the pandemic, because people could switch jobs and get a lot more money. At the peak, they were getting north of 20% to switch jobs. What our data is showing us now is actually we're down almost 25%, more than 25% in terms of the number of people who are changing jobs. So you don't have that benefit of pushing up your wages by changing jobs, fewer people changing jobs. And those who are are only getting about a 7% average pay bump. So you're not getting 20% to move jobs. You're only getting 7. Fewer people are doing it. That's kind of keeping people where they are.
This labour market's not as tight as it once was, maybe. No. Perhaps that's what that speaks to.
It's not as tight as it once was, but it's also not falling off of a cliff, right? Higher wage workers, 3.6%. That's growing more than their spending, which is also relatively strong.
Yeah.
But it's more than inflation, too.
Could we talk about bank balances?
Yeah.
What are you seeing at the moment? I always
Your
enjoy
favorite
going through the
statistic.
consumer checkpoint. Yeah.
Yeah. So the financial picture continues to be solid. If you cut the data by income, by generation, everybody has more money in their accounts, inflation adjusted, than before the pandemic, with one exception, and that's the traditionalists, which are the generation above boomers, and you would expect to see them kind of pulling down on their savings. But not only do people have more money in their accounts, you're also seeing pretty healthy credit card behavior, meaning fewer people are carrying a balance. And those that are carrying a balance, the ratio of their credit card debt to their income is actually coming down. And again, it's because of the labor market. Their wages are up.
Nothing is screaming cut interest rates 50 basis points based on that conversation.
Well, and if you do cut by 50 basis points, what it strikes me is, where is that investment going to go? Back into tech. So tech is the new economy, and any kind of additional investment, that's where it's headed.
Liz, it's good to see you.
Great. Thank you guys for being here.
Hey, thanks for having us. We appreciate it. Liz Everett-Chrisberg there of Bank of America Institute. Up next on the programme, we'll catch up with Savita Subramaniam, the Equity and Quantitative Strategy Head. We'll speak to Eric Schimpf and Lizzie Hunt of Merrill Wealth Management, and Wendy Stewart of the Global Commercial Banking Unit. From New York City, this is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
As long as the Fed is in motion towards lower rates, I don't think that there's a reason to sell.
It's hard to short a market in front of the Federal Reserve cutting interest rates.
The risk is that, at some point next year, the Fed says, look, we have to actually hike.
I do think that these Fed cuts are getting increasingly priced in.
The market's still trying to weigh, is something really breaking?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
We are live from number 1 Bryant Park, the home of Bank of America, right here in New York City. Good morning to you all. The second hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 pulling back by not even 0.1%. Just a little bit of softness this morning. Some mild moves yesterday. Treading water going into the big one later on this afternoon. The Federal Reserve decision at 2 p.m. Eastern Time. 30 minutes later, a news conference with Chairman Powell. We are all focused on one thing, not just the size of the cut, it's the amount of guidance this chairman can give.
Yeah, and potentially how many dissents there could be. The expectation is there could likely be 3 dissents from Stephen Myron. Of course, we also are expecting the other 2 dissenters from the previous meeting at a time. That would be the greatest number of dissents going back to 1988, just to give you a sense. So, yes, we're looking for guidance from Jay Powell, but looking forward, what does that mean in terms of his tenure and how much this is a fractured FOMC?
At some point, his guidance doesn't matter. His guidance matters up until May of next year. After May of next year, it's about someone else. And maybe the clue comes from someone else. Governor Myron stepping into this meeting at the very last minute is going to offer his views on where he thinks policy should be. That's going to be a massive focal point for a lot of people in this market.
Yeah, where's his DOT? Does he have a DOT, considering the fact that evidently you have to submit your DOT on Friday before the meeting? And he was nominated and actually confirmed just days ago. So we're looking at the potential for his DOT to not even get included. But if he does suggest that we do see something like a 100 basis point rate cut, that would be appropriate in his view. If he sees rates going down to 1%, do people take that as a guide, or is that the outlier? Does that mean he's a credible replacement for Jay Powell, or even for Lisa Cook, or even for some of the others? Or does this mean that really this is sort of something that's sort of pie in the sky?
Credible in the eyes of who? In the eyes of this market? Credible? Or in the eyes of the President of the United States? Isn't this the ultimate audition to stay on the Federal Reserve for a whole lot longer?
Well, this two go in hand, right? The person has to be credible for markets for the person to be tolerable to the president. And this goes to the question of what is the Fed's response function if inflation starts to pick up? And this goes to the conflict in the data that we've seen where the economy doesn't seem to be falling off a cliff, but it is still that low hire, low fire type of churn dynamic that's giving some people anxiety about the fragilities that are baked in.
We spent about 60 minutes so far with the team here at Bank of America on the trading floor and putting together a picture of the way they view the world right now. Yes, we've seen a step down in activity in certain places, particularly on hiring, but it might be a mistake to anchor your whole view of this economy just around one data point, which is headline payrolls, because there's a lot of things happening elsewhere that speak to an economy that's holding up okay.
Balances in terms of consumer bank accounts, just fine. Retail spending exceeded expectations. Yesterday, the United CEO came out and said that he sees an economy that is re-accelerating. How much can this continue? How much does this hinge on just how much retailers and other companies can pass along price increases? These are some of the questions that the Fed has to wrestle with. It is a difficult moment, but right now, bond traders just betting that rate cuts are coming and potentially more as well.
Equity traders too.
Yeah, exactly.
Equities close to all-time highs. Futures this morning down by around about 0.1%. Coming up this hour, big lineup over the next 60 minutes for you. We'll catch up with Amy Lizauer on the shifting balance of power between CEOs and investors. We'll speak to Eric Schimpf and Lindsay Hans on why this is neither a bull nor a bear market. Plus Wendy Stewart as investors navigate tariff uncertainty. We begin this hour with stocks hovering near record highs ahead of today's key Fed rate decision. Savita Subramaniam, the head of US equity and quantitative strategy, writing the following: it is difficult to be outright bearish on risk assets with signs of profits continuing to accelerate alongside a Fed that is more likely to ease than hold short rates. Savita plus Jill Carey-Hall, the head of US small and mid-cap strategy at Bank of America, joins us now for more. Guys, good to see you both.
Great to be here.
Thanks for being here. Savita, I want to start with you. A central message of your research for a long, long time: never underestimate the resilience of corporate America.
That's right.
Is that a mistake people have made it too many times this year so far?
Yeah, I think we even made it after Liberation Day in thinking that, we were going to see companies not being able to guide, not being able to navigate this really complicated environment. And what we saw was corporates handling this with aplomb. And essentially, they continued to guide on earnings. We saw no paucity of information. We heard a lot of companies talk about their tariff mitigation tactics, which I think was interesting because they've seen this before. They went through this in 2018. Obviously, this is a little bit more extreme, but companies know how to manage. They just need a plan. And I think that was what we were heartened to see.
It's hard to have this conversation about 25 or 50 from the Federal Reserve. At the same time, the equity market is close to all-time highs. And you and the team here at Bank of America are essentially forecasting an acceleration in earnings for 2026. Can you make that make sense to people at home listening to this?
Well, yeah, we're actually forecasting a slight deceleration, but a broadening out of earnings. And what I think is really noteworthy and what investors need to pay attention to is the idea that the 493 is actually back in the black. These are companies that are making money. So it's not just tech all the time, which has been the story for the last few years. I think what's also interesting is that tech companies are spending, and they're spending on everything. They're spending on power grid, which is actually positive for overall economic growth. It's positive for commodities. And I think that's the message we're giving investors today. What's really thwarted broadening this year, I think, is just this bomb of tariff uncertainty that was dropped on April 2nd. And we're at a point where clarity has improved vastly around that issue.
Not just the 493, the 2000. And I am wondering, Jill,
yes.
We have seen a complete outperformance from the Russell 2000 of late, and you actually increased your expectations for some of these companies after being pretty sour on them earlier this year, especially after Jackson Hole. How much is this entirely predicated on what the Fed does, rather than what Savita is talking about, which all sounds lovely, but it's been in effect for quite a while?
Right. Well, I think the Fed has certainly been one of the biggest drivers of the Russell 2000 over the last year or two. Some of the biggest rallies and sell-offs we've seen have been around Fed expectations or data that feeds into that. So I think, the expectation of cuts coming is certainly more positive for the Russell and should lead it to outperform near term. But I think also what investors have been focused on, perhaps more so than usual, has been the profits backdrop, because a year ago, everyone was expecting that by mid-2024, small caps would have come out of their profits recession, that earnings would have broadened out and been outpacing large caps, and that just kept getting kicked out. And we finally saw small caps come out of the profits recession this earnings season. We saw a big beat by these companies. We saw much better guidance. So that's been a positive sign. I mean, the sales data, the top line growth was a bit more lackluster relative to large caps. So that's something to pay attention to as we go into the next earnings season. But the fact that profitability is finally recovering and speaks to that broadening out of earnings is a positive.
Is the pop on the heels of a potential Fed rate cut because of just simply a valuation story, that lower benchmark rates make it more attractive on a relative basis? Or is it that actually they will borrow more, that they can do more that they aren't doing now, whether it's engage in M&A, whether it's engage in acquisitions, whether it's engaging in hiring plans?
Right. I think it's a bit of all of that. I think, but for small cap companies, they have a lot of debt, much more than large caps do. They have a lot of refinancing risk. They have a lot of debt that's coming due over the next 5 years. So there's a big focus on their interest costs at a time when their earnings have already been struggling for several years now in this profits recession. So, the Fed is likely a bigger driver than usual, given that focus, given their leverage profiles right now. So combine that with some of the positives we're seeing on the profits backdrop, and I think that's a positive near term. Now, the sustainability of the rally, I think, will depend on revisions, those top line trends, the manufacturing recovery. Small caps tend to be very sensitive to the ISM manufacturing indicator, which has struggled to get back above 50. So a lot of these factors will be what we're watching to see how sustainable this rally in small caps could be.
We had a guest that came on the program a few weeks ago that said to Lisa, "Can you name a company on the Russell 2000?" Very few people can. When they buy the Russell, what are they buying? What's the concentration risk around, say, small caps relative to Savita's World Large Caps and the S&P 500?
Right. Well, there's some sector skews, certainly, in terms of more biotech. There's a lot more non-profitable, non-earner type of companies within the index, whether it be in biotech, small cap software, regional banks, REITs. There are some of these areas that are bigger within the Russell. But I think what's important is that there are still risks to the index. There are a lot of, like I said, non-profitable companies that's elevated versus history. So I also think it's a very good environment to pick stocks within the index. Our analysts here cover over 900 small and mid-cap U.S. stocks. So, amid all of these uncertainties, whether it's tariffs, whether it's how sustainable is this profits recovery, if you can focus on companies that, have better earnings revisions, have stronger margins, there are a lot of beaten down stocks within the Russell, and small caps overall are trading at these big relative discounts to larger companies. So it is a good environment for stock selection. We've seen the interest there. We saw a big uptick in attendance at our recent mid-cap conference. We've seen investors buying small-cap stocks this year.
Well, when you broaden out, this sort of complicated backdrop goes to Savita, your recent change, or both of your recent change in the outlook ahead. You only see a 6% gain from here until 12 months out, until the same time next year, to about a 7,000. That's far below where a lot of other people are. Why not higher, especially given the expectation for earnings growth to truly reaccelerate?
Well, I mean, here's the problem. The ballast of the S&P 500 has been tech, and tech earnings are slated to decelerate. I mean, these companies are really big. It's harder to grow as fast. These are companies that are spending more money on CapEx, so they're returning a little bit less capital than they used to, doing less buybacks. So I think that's the other side of the story, is the theme around AI. And I think what we would need to see a much higher return and even a positive surprise in earnings at an index level is continued AI monetization big surprises akin to what we saw in the second quarter. And it's harder and harder to forecast that as we move forward and these companies get bigger and we're more deeper into the AI monetization cycle. So our analysts are bullish, but we are still seeing a deceleration in that area of the market. And then the other kind of simple fact that we all know is the market tends to anticipate earnings recoveries. We've seen some great returns this year. I think that's in anticipation of what's to come. And, typically in the best earnings years for the S&P 500, the market actually posts kind of, meh returns. So I don't know if we're going to see another blockbuster year of returns, but I do think that earnings are going to broaden out, and that's going to be an exciting story.
Given the focus today, anticipating the Federal Reserve decision, how relevant is that to your world?
Look, I know everyone is obsessed with the Fed, but I think that long rates are much more important for equities. And we've talked about this. So, short rates have actually done very little to stymie large cap company performance because their balance sheets are healthy. They have less floating rate risk. They learned their lessons during the financial crisis and really managed their debt risk. So I think the long end is more important. And here's where it gets complicated. If the Fed is cutting, but inflation has not been, sufficiently managed, I think that's the risk. If the long end, absent yield curve control, the long end, I think, is really, potentially more dramatic for the S&P. So that's what we're watching.
Is that something you're focused on, the risk of a repeat of what we saw last year when the Federal Reserve cut interest rates and the long end actually sold off and yields rose by, I think, about 100 basis points?
Yeah, we had a real steepening. I think that's good for certain sectors and bad for others. One reason we're overweight financials, energy, some of the more inflation positive sectors that are geared to inflation. Those are sectors that can do well in that environment as long as this is not a disorderly increase in the long end, which is what, we all worry about, especially on this desk.
The good news is, so far through September, long end rates have started to come back in. Yields are a little bit low. We've seen a bull flattening through the curve through September at least.
And part of it is because of what Savita just said. As long as we don't get yield curve control, well, that's actually kind of a big caveat.
It's a question into 26.
And it's a question of exactly how much this Federal Reserve is willing to push, particularly on that long end, especially because of the focus on the housing market.
Savita, Jill, you're two of the very best. We appreciate your time.
Thank you.
Thank you. Savita Subramaniam there and Jill Carey-Hall of Bank of America. If you are just joining us, welcome to the programme. Equity futures on the S&P just a touch softer. Let's give you an update on stories elsewhere. With your Bloomberg brief is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Republicans will hold a rare midterm convention ahead of next year's elections. President Donald Trump posting on Truth Social, the convention will, quote, show the great things we have done since the presidential election of 2024. Trump said details of when and where the convention will take place were to be determined. Shares of Nvidia trading lower in the pre-market. The Financial Times is reporting China's internet regulator has told the country's tech companies to stop buying all of Nvidia's AI chips that were destined for China and terminate existing orders. The move comes as Beijing steps up efforts to boost its homegrown semiconductor industry and compete with the US. Microsoft is investing $30 billion in the United Kingdom as it builds out the country's AI infrastructure. The tech giant plans to build the country's largest supercomputer. The plan extends through 2028 and marks the company's biggest financial commitment ever in the UK. And that's your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, we'll catch up with Amy Lissauer, the Bank of America head of global activism and rate defence. That conversation up next. Live from New York City this morning. Good morning.
It is the first week of September. Our clients are just back from the holidays, and we've gathered over 1,000 of them with us today, and we're going to help them piece together a strategy.
Clients are in the room and they're here to hear more about investment opportunities in Europe, possibly in Japan, in China. We're here to help, and we can help them find those opportunities. We can advise them on how to position their trades, and then we can facilitate and give them access.
We think the Fed at most is going to send a signal that they'll be cutting twice this year and only twice next year. So in relation to where the market is priced, we do think that that's going to come across as somewhat hawkish. We just think that the market, if they're looking for any justification that this is a Fed that's going to be cutting quickly, won't really get that through the mix of communications today.
Mark Abana of Bank of America, the head of US rate strategy, offering two interesting views here. One, the hawkish risk going into the decision later on this afternoon. And two, continues to ask a really provocative question about 2026. If this Federal Reserve is going to see a change of leadership after May, why would they stop at 3%? Would this Fed run it really hot and go beyond just 3%? Now, I don't think that's Mark's base case, but he's asking a really important question we need to consider going into next year.
Well, and actually, increasingly, it's the market's base case, because when you take a look at Fed funds projections going out to the end of next year, the rate is below 3%. So that is a very likely prospect. The idea here is we were always saying, well, what does that do to the long end if you get a pickup in inflation? But in reality, people are saying, wait a second, all that money that's in the nosebleed seats up there in cash accounts isn't going to be making the same kind of yield. Let's lock in something now. And that might be part of what we're seeing in terms of the rally at the long end.
Does Governor Myron offer us some insight into what you can expect from a changed Federal Reserve for the year ahead? Let's turn to markets. Equities very close to all-time highs, pulling back a touch yesterday, again this morning. We're down by not even 0.1% on the S&P 500. If you switch up the board and turn to the bond market, 2s, 10s and 30-year bond yields going into the Federal Reserve decision later on this afternoon. 2s settling down at around 350. This move at the long end through September has been a change, though. What we saw through August was a steepening of the curve led by the front end. What we've seen coming in September is a flattening of the curve led by the long end. We've gone from bull steepener to bull flattener in just a few weeks.
Has the idea of yield curve control and potentially an aggressively cutting Fed killed off all of the bond vigilantes? Are they dead? Let's bring back Ed Yardeni and find out where the bond vigilantes, where have they gone?
Crushed by central banks.
Yeah, exactly. That's where they have been for a long time. Maybe they still are.
Let's see if that changes over the next 10 years. Let's talk about a different kind of vigilante. Let's turn to Wall Street. Amy Lissauer, the head of global activism and rate defense at Bank of America, has this to say. M&A-related demands have spiked in Q3, with activists focused on sales, strategic reviews and divestitures. Amy joins us now for more. Amy, good morning.
Good morning.
It's good to see you. Clearly, deal activity has picked up through the last year or so. Can you walk us through how that's changed your world and whether we've seen a shift from the kind of operational pressure we might have had in years gone by to something different in 25 and to 26?
Yeah, for sure. So we absolutely have seen a significant shift in terms of what activist funds are pushing for. And so you're right. If we were having this conversation a year ago, I would have said it was all operational in nature. Activist funds were saying that they can run companies better than existing management teams could, and that was coinciding with the change in CEO campaigns that were getting a lot of media attention. Now where we are is the M&A market has come back, as you've mentioned, and we're seeing activists pivot very dramatically to some of those M&A related themes where they maybe a year ago didn't think that they could successfully implement. Now the mentality is we can get M&A deals done, and that's a broad spectrum of outright sales of the company, or whether it's a divestiture or just announcing a strategic review.
Are they the kind of campaigns that CEOs are more comfortable with? Leadership campaigns are super awkward. It's like, I want to get rid of you. The guy's like, I want to stay. I'm earning good money. I don't want to go anywhere. The other kind of campaigns are a little different.
Well, it's not as personal. I don't disagree with you there, but I don't think any of these campaigns are particularly very comfortable for whether it's the manager teams or the boards, because ultimately the ultimate risk is the proxy contest, which means changing members of the board, including potentially the CEO. So I think they're all uncomfortable. They're just uncomfortable in different ways.
I guess I wonder exactly what is spurring the increase that we've seen last year and this year with a record amount of shareholder activity. Why now? What sort of has changed?
So a few things I think are important as we think about the number of campaigns. And I agree with you. We've actually seen an increase year over year. And we thought last year was incredibly busy. So I think what's been interesting is if we go back starting the year, we saw a lot of activism campaigns in light of the expectation that we were going to see more M&A. Liberation Day happened. We saw activism campaigns significantly decline because market volatility is not a friend to the investor community. And we tend to see actually during periods of extreme volatility, shareholders tend to be more deferential to incumbent boards. So we saw activism campaigns decline, but activists are just deep value investors and they are opportunistic buyers. We know that they had taken a lot of positions during that period of extreme volatility, and we are now seeing many of those positions that were taken resulting in campaigns. So I think that's why we are seeing a significant increase, especially this time of year, which I would say is when we start to get busy, but still a little bit early compared to most companies who have annual meetings in the spring, when we tend to see the campaigns really get more aggressive year-end leading into Q1.
Yesterday, and it feels like a year ago, President Trump put out on Truth Social this idea of moving from a quarterly reporting system to a 6-month reporting system for public companies, something that he raised in his first term. I just wonder how much that would affect things for activists, whether that actually decreases their power and increases the power of the CEO.
You know, I'm not sure. I actually think companies view quarterly earnings updates as an opportunity to tell their story and to explain to their investors what they want them to hear. So whether they did that twice a year, 4 times a year, I think they might look for other opportunities to be able to do that, which companies naturally do anyway, by going and speaking at conferences and going and having roadshows with their investors to make sure that they are hearing directly from the company what their message really is.
Do you find that management teams are better prepared now compared to when you started doing this? Are they in a better position now, more educated about how to respond to some of this stuff, more timely, more agile?
So definitely much more educated. And I do think the mentality at many companies is that you need to prepare for this because in some respects it's an inevitability. At some point in time, you're going to have to deal with activism in some form. But I do think some of the tactics that are used by the activists have evolved in that it's less likely that you are going to be able to get away with having private engagement and getting to some sort of agreement before it ever becomes public, because more and more of our clients tend to be surprised, meaning the activists are really savvy at accumulating positions using various derivatives. And then they can show up at a company whenever they decide to show up at the company, not necessarily when it's dictated because of 13F filings or because of a 13D filing.
We can't address live campaigns right now. I don't expect you to. But where would you suggest we look for more campaigns in the future? What kind of industries are going to pop up as being the dominant targets?
Yeah, so TMT, technology, media, telecom, continues to be the area where we're seeing the most activity. But what's interesting is actually we've seen a resurgence in real estate, which we haven't seen a lot of activism in real estate for a few years, and we are seeing a lot of activity there. So we expect there to continue to be more. I think some of that's still M&A driven.
What do you think's behind that? What's that about?
I think there is an expectation that we're going to see more M&A in the real estate sector in general. And the other sector that's similar to real estate in terms of volume is consumer retail, which we have been seeing a lot of activity in consumer retail, and it continues to be the second most common sector for activism right now.
Amy, this was great. It's good to see you. Amy, listen out there of Bank of America on the kind of pressure the C-suite's getting at the moment as deal activity starts to pick up.
Yeah, telling you who you should buy, who you want to buy, who you ought to be buying, and then, by the way, maybe leave too. I mean, it is sort of an awkward campaign, but it is notable to see how much you have seen an acceleration this time around. And I wonder whether this actually does push any companies to want to remain private, whether private companies face this in just a different way with private equity. But it definitely is an interesting moment, especially if M&A does pick back up.
There was some paralysis around the turn of Q2.
Yeah.
There certainly isn't anymore.
Which goes to the question of, are we really heading into a downturn? I mean, is this really what we're hearing from all of these
25 or 50.
guests?
That's the debate for the Federal Reserve.
Exactly.
This afternoon. Coming up, we'll catch up with Eric Schimpf and Lindsay Hans of Merrill Wealth Management. Plus, we'll touch base with Anne-Marie in London as President Trump arrives at Windsor Castle.
This year's Global Markets Conference theme is mega, making Europe great again. But the conversation is broader. We're in Hong Kong to hear perspectives from the US, China, Japan, as well as Europe. What we're seeing is clients diversifying their counterparties. BNP Paribas is headquartered in Europe, but we've been in APAC for 160 years. We're optimistic about working with our clients to turn these global perspectives into real, actionable, and relevant strategies for growth.
Live from New York City this morning. Good morning to you all from number 1 Bryant Park, the home of Bank of America here in New York, the heart of finance and, of course, the home of Wall Street. Equity futures on the S&P 500 shaping up as follows so far this morning, just pulling back from all-time highs in yesterday's session. No drama. We've had quite a rally for stocks and bonds since the Fed last met off the back of 2 very weak payroll reports. In the bond market this morning, your 2-year around 350. That number was closer to 4%. After the last time the Fed last met.
There has been a shift in the reaction function of the Federal Reserve to prioritize the labor market that has been sluggish. A real question here is how much is the Fed underwriting risk, and can they meet the expectations that the market currently has? And that really is going to depend not only on Fed Chair Jay Powell, but also on Governor Stephen Myron. It is hard to get my head around that. Stephen Myron, who is governor today, he was not on Monday. How much does he really push back against whatever the committee decides?
Having spoken to Stephen, Governor Myron, a few times, he doesn't strike me the kind of person who walks into a room and starts taking swings at everybody. He doesn't strike me as that kind of guy.
In a recent interview, he said he doesn't view himself as the smartest person in the room. He thinks that there are other people who are smarter, but he's okay being the most annoying person in the room and raising potential points that other people might disagree with.
The perfect balance later would be a descent for 50 if the rest of the committee doesn't go there. I think that might be sort of the consensus view for the governor later on.
If Chris Waller, Mickey Bowman, and Stephen Myron all dissent and say that they would rather have a 50 basis point rate cut, that will be the greatest number of governors dissenting going back to 1988, and potentially at a time where that could be the real thrust of the committee heading into 2026.
After the biggest dissent since the 90s at the last meeting.
This is an unprecedented time.
2 Fed governors. That dissent is building. Let's get you some single names, some morning movers. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. The weakness in Nvidia shares continues this morning with a report from the FT that China is banning some of its biggest companies from buying and using Nvidia chips. This is different than what we had before. It was just a suggestion of not using them. This hits companies like Alibaba and ByteDance, and also suggests that maybe China is making enough strides that it doesn't need those chips from Nvidia. So those shares falling 1.5%, just thereabouts. Speaking of Alibaba, the ADR is also rallying this morning. They're getting a vote of confidence for their AI offering. Specifically, the Chinese tech giant Unicom will be now buying Alibaba AI chips. Again, it feeds into this whole story of maybe homegrown players succeeding more. So those shares, again, the U.S. listed ones up 2.3%. Also, about 30 minutes ago, we got General Mills earnings. It's been a volatile session for the share price in reaction. First, they were higher. Now they're lower, nearly by 1%. They did have a profit that beat estimates, and they said it's kind of because of a weaker consumer, that a value-oriented consumer is cooking more at home, so they're doing more grocery shopping. But it's part of that. The issue was flagged that more consumers are buying private label products and making smaller purchases because some of that stress, hence why you start to see some of that share price reaction reverse. John?
Danny, thank you. Appreciate the update. More from Danny in the following hour to get you some movers going into the opening bell. Let's head to London just briefly. I want to catch up with Anne-Marie. She's over in the UK at Windsor Castle as the President arrives for a state visit. Now, Anne-Marie, a lot of people enjoy the theatre, the pageantry. Is it anything more than that in the British capital this morning?
At the moment, it is pure pageantry happening just behind these fortress walls of this castle right now. The president being given a tour, really, of Windsor Estate by a carriage. We're waiting for a fly pass with Red Arrows and F-35 jets at some point soon. That will really show, fortified to the world, the defense posture of both these countries working together. Then this evening, there's a banquet. And then we slowly start to move into some more of the substance of this meeting outside the pageantry of the state visit with the royal family. This evening, the president is going to be flanked by the top American executives like Microsoft Satya Nadella, like Nvidia's Jensen Huang, like OpenAI CEO Sam Altman, like Apple's Tim Cook. Larry Fink is also here, and all the capital is being directed towards AI. We're talking about tens of billions of dollars. As the president was touching down overnight, we were looking at $30 billion commitment from Microsoft, with the Microsoft saying on their blog post is the biggest financial commitment in any country outside of the United States. So really a massive win for the United Kingdom when it comes to the tech sector, and something notoriously needed right now by this prime minister. It's a very different position than 7 months ago when he first extended an invitation for an unprecedented state visit for President Donald Trump.
Anne-Marie with the latest at Windsor Castle. Anne-Marie, thank you. We don't do a lot of things well. I'll be the first to say that. No one can compete with the way we do this.
With the pageantry?
It's just amazing.
You guys absolutely nail it. Although I can't say you guys. Aren't you American now?
Not yet.
Okay, but you're kind of
Bad
like getting there.
But,
So,
I'm a guest in this country.
I know. You still spell
American.
You still spell
Feel
labor
American.
L-A-B-O-U-R,
Very pro-American.
which is just ridiculous.
I make spelling mistakes now and again.
Absolutely ridiculous.
Okay, and I say things like aluminum
instead
of aluminium. That makes me American.
Fake
right?
speech.
Like I'm making a transition.
That's good.
Slowly.
Okay, slowly.
Get there. Okay, let's move on.
But this is good.
Good. I'm pleased we agree on that. OK, after that tangent, let's turn back to Wall Street. The team at Merrill Wealth Management writing the following. It's not a bull or bear market, but rather a bold phase where fundamentals are improving, expectations are low, and surprises are skewed to the upside. Joining us now for the discussion, Eric Schimpf and Lindsay Hans, the co-heads of Merrill Wealth Management. Guys, it's good to see you both. Thanks for being here.
It's great to be with you.
Yeah, good morning. Thank you.
Lindsay, let's start with you. $3.7 trillion, I think, in client balance sheets right now, client balances at Merrill. Where is that money going? How pro-risk is the appetite of your clients at the moment?
Yeah, our clients have a lot of different perspectives at any given time, John. But when we think about right now, I'd say the two things they're talking to their advisors the most about are how do the headlines impact me and my portfolio, and a bit maybe around our stock's a little rich. What about market valuations? Should I wait for a pullback? So when we think about things like valuations, it's a important checkpoint, but it's not an overall indicator of market health. We really think when we look at the market, we feel really good and we're very bullish. We look at a number of things. The amount of cash on the sidelines, as you said. It's a very solid profit cycle right now. We have an accommodative Fed. We have an equity market rotation where we're getting broader participation beyond tech. So all of that bodes really well for our clients, and we're quite bullish at this time.
We're looking for this rate cut later on this afternoon. Eric, could be 25, could be 50. We're looking for more than that going into 2026. What kind of activity changes do you expect to see off the back of these rate cuts in our future?
At the heart of our business, what we do is advisors have relationships that are personal, built on trust with clients. And the Fed might do something today, 25 basis points, or you've been discussing it all morning. But at the end, it comes down to those individual tailored discussions that clients have with their advisors. And if the Fed gets accommodative, some of the things that Lindsay talked about that could make the market continue to rise, I just would encourage clients to have those discussions, with their advisors.
Okay, well, let's talk about those discussions. Let's say the Fed cuts by 50. Yeah. Then do you go to your client and you say, with respect, what are you doing in cash, right? I mean, the idea of cash on the sidelines, like Lindsay was talking about, I mean, is that essentially the trigger? What is enough to trigger cash on the sidelines? It's actually earning income to move into other areas.
I think it's all built, on the work that's done prior to an announcement like this or prior to a change. Because, again, it's rooted in this idea of having a plan. And so Fed makes a cut, volatility in the market. It's a perfect opportunity just to talk to a client and say, hey, we've prepared for this. The time is now. Maybe the rates you're earning on your cash aren't as attractive as they used to be, and maybe it's time to put some risk back on. We've probably started to see that over the last few months.
Yeah, I would say two other things. When you think about the power of being in the market, if you look at the period of 2020 to 2025, had you been in the market on the best 10 days, that portfolio is up 33% on average. Had you missed those best 10 days, you're up 18%. So our advisors constantly, remind clients that. And the other thing about the accommodative Fed and, the cycle that we are probably entering into is our clients who are already borrowing from us, our high net worth and our ultra high net worth clients, despite the prior rate cycle we're borrowing, are only going to do that more. Clients want liquidity solutions. They want to protect their capital. They want to preserve it. They want to grow it. They want to pass it down. They want to transfer it. So they increasingly come to us for that. And that is a key asset and part of being Bank of America, because we have access to a balance sheet that allows us to provide very customized liquidity solutions. You may have seen we announced the Merrill Lending Solutions Group last week, which is really to accelerate that growth.
Lindsay, you point to something that's really important, which is the competitive landscape and sort of the pitch. And right now, the competitive landscape arguably has never been more robust on every front, given how lucrative this can be and how much money there is in wealth management. Where are the biggest opportunities for growth for your wealth platform, given that you already have a pretty big footprint and a certain reputation?
Yeah, I mean, we think about our clients, what we know they want. They want big when it matters, but they want it to feel small and very personalized to them. So big when it matters is they want open architecture, full suite of traditional investments, alternative investments. They want access to lending solutions, and they want personal banking delivered at scale. And they want that to feel unique. They want their advisors to be their quarterback. So that is on a client-by-client basis. That's our biggest opportunity of how we deliver that to more clients. And Eric, maybe on
I think if you take, one of the things Lindsay mentioned was alternative investing, right? It's a segment of assets that has really become popular. We've seen a shrinking of the number of companies that are going public, over the last 10 or 15 years. fewer companies going public. So a tremendous amount of private businesses and companies looking for investment and need in capital. As I was saying earlier, diversification works. Cash, equity, bonds. Well, we think across all risk tolerances, there's room for an alternatives portfolio as well. And so it could be a great place to see growth for our business, an opportunity for clients, cash on the sidelines, moving in. Our firm, proud of it, Merrill is probably the originator of sort of offering these things. And we probably bring anywhere from 50 to 60 new offerings on an annual basis. And just last week, we sort of announced a new offering for a really distinct, part of our population, niche, unique, institutional-like, but direct to sort of the retail client.
Just build on that a little bit. Use the word diversification. What kind of diversification or alternatives actually offering right now? When we've been talking about private markets with a lot of people, particularly private debt, they've been talking about exactly the same kind of thing we're talking about in public markets, which is AI, massive capex expenditure, and getting exposure to those kind of investments. How much diversification is there?
Well, in the alternative space, there's plenty. There's private equity, private credit, infrastructure. You see the introduction of sports teams. Professional sports. So a tremendous amount. I do think the artificial intelligence sleeve, very interesting for alternative investing. But I think also sort of interesting what can happen, in a wealth management business with the use of artificial intelligence.
Build on that, and I'd love, Lindsay, your thoughts. How much is AI changing the way you do things, or how many advisors there are, or how the advisors deal with clients?
I mentioned earlier around our clients valuing the high-touch aspect of our business, but access to big breadth of solutions. So when you think about AI in a full-service wealth business, you think about it primarily on how do you make our advisors and their teams more productive to be client-facing and serve clients in a more personalized way. So how we can save time on tasks that really help prepare for client meetings, think about the post-client meeting process. That just gives advisors more capacity to be able to be face-to-face with people and really solving increasingly complex needs.
Because if I'm a high net worth individual, I'm not, but if I was, I would not want to speak to a robot, would you?
Right. That's right.
It depends. If the robot's really nice to me and brings me treats,
that wouldn't do. I'd want to know that additional work was there and being carried out by a human being.
All right. No, I think that's right. But what if that robot were really attenuated to who you were?
Would not make a difference.
What if it really brought you things?
I'd want lower fees. Wouldn't you? No,
yeah, that's true. That's true. You automatically just assume that it's free. Do you know that they're now the digital employees or robot employees that are actually called employees in a lot of different
And they're
places?
in group chats and stuff?
Yeah.
Have you guys got any of this?
We
got
don't.
Any of the chat bots on group chats?
No, we don't. I don't think you'd be surprised that the heads of Merrill Lynch believe that advice is best delivered by humans.
There you go. Yeah. We'll leave it there. Guys, it's good to see you both. Thank you.
Great to see
Thanks
you.
for having us.
Thanks for being here.
Eric Schimther, Lindsay Hunt of Merrill Wealth Management. Equities at the moment still just about negative by 0.1% on the S&P 500 as we continue to count you down to that Federal Reserve decision. Let's get you some news elsewhere with your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Mortgage rates fell last week to the lowest level in nearly a year, spurring a surge of refinancing. According to the Mortgage Bankers Association's seasonally adjusted index, applications to refinance home loans jumped 58% last week and were 70% higher than the same week a year ago. Apple iPhone sales in China fell 6% year over year in the weeks leading up to the iPhone 17 launch. According to Counterpoint Research, sales of Chinese-based phone makers experienced a slow summer. The country's overall smartphone market shrank 2% in July and August, despite government subsidies to encourage consumption. Eli Lilly's experimental weight loss pill helped adults with obesity lose 11% of their body weight. While the pill didn't prompt as much weight loss as Lilly's Zepbound shot and rival Novo's Wegovy, doctors say it will be easier to produce and to use. Eli Lilly said it will file for regulatory approval by the end of the year. And that is your Bloomberg Brief. John.
Vonnie, appreciate it. Thank you. More from Vonnie in about 30 minutes' time. Up next, Wendy Stewart, the Bank of America president of Global Commercial Banking. That's next. You're watching Bloomberg TV.
As I reach a milestone in my life, I'm humbled by my good fortune. yet well aware that I still have much to learn. And if I stay true to myself and follow
If the Fed is cutting, but inflation has not been, sufficiently managed, I think that's the risk. Short rates have actually done very little to stymie large cap company performance. Absent yield curve control, the long end, I think, is really, potentially more dramatic for the S&P.
That was Savita Subramaniam, the head of equity strategy here at Bank of America. Speaking of Bank of America, great timing. Just got some breaking news for you. This headline right here, amazing to think about. We're talking about weakness in the labour market, the Federal Reserve cutting interest rates by anywhere between 25 to 50 basis points later this afternoon. And then the team, led by Brian Moynihan, does this, raises the minimum hourly wage to $25, increasing the starting salary to more than $50K. That's quite a hike from this team.
Especially at a time when this is so important for people, given the inflationary impact that a lot of people have been feeling and the lower income spheres, the more income people get, the better it is. We want to ask him, of course, about what the staffing looks like, about what this means in terms of the type of people that they're trying to hire, how they're accessing talent, and what they're seeing overall in the backdrop for the labor market.
Starting salary for full-time U.S. employees at the bank has gone up by more than 20K since 2017.
Yeah.
This has been pretty consistent. And I guess a couple of questions for Brian in about 10 minutes' time. Is this a reflection of the labour market or just a reflection of his effort that's gone a big push for the last something like 10, 15 years?
Yeah, how representative is this of corporations around the country versus a Bank of America specific push, given the type of people they want to attract and also the way that he's organizing the business?
Brian Moynihan, the chair and CEO of Bank of America, on this and a whole lot more in just a moment. Let's catch up with Wendy Stewart of Bank of America with this to say. Contrary to expectation, companies are still exploring international expansion. Companies are purchasing other companies to expand their geographic footprint. Wendy joins us now for more. Wendy, good morning. It's good to see you.
Good morning. It's great to see you all.
Thank you for having us. That line is going to be quite a surprise to a lot of people. After April 2nd, I would have thought everyone just sort of hands off, stepped back and didn't want to do a thing, particularly internationally. Why do you think that hasn't been the case?
Well, so this has been an interesting year. And, when we think about the volatility that our clients have faced, they're also looking at how to turn that into a strategic advantage. And in global commercial banking, we've talked about the volatility and the economic uncertainty, and we've called it the T's and the I's. Clients are facing tariffs, trade, taxes. If you think about interest rates, inflation, immigration policy, and yet through that, they still want to grow. And whether that's growing domestically, growing internationally, growing organically, or growing through acquisitions, our clients are focused on growth. And one way to do that is internationally. And, I'll give you two examples of companies that have done just that. We had a client that was based in the Midwestern United States, and they were looking at filling a geographical gap that they had. And they didn't have any exposure into South America. And so they acquired a company this year in Brazil, and they did it for a couple of reasons. It was a good way to close a strategic gap. They wanted that geographic footprint, and they were able to get closer to the clients. And so a lot of people would think, well, why would they do that this year? But again, they are looking at how to take the volatility that exists and turn that into a strategic advantage.
How are they financing some of this growth? More broadly, not just that example. What does loan growth actually look like at the moment? Have things picked up?
So loan growth has been a pretty good story for us. It has been for many years, and this year it has continued. And so in that example, clients going to use debt to finance some of it. They'll use cash to cover some of the cost of that acquisition. And we're there to provide that financing. And, we've seen, no surprise, but earlier in the year, we did see a spike in revolver utilization. So if you think about clients getting ahead of the tariffs at that time in the spring, they weren't exactly sure what would happen. And so, they were building inventory. We also have seen a lot of good lending opportunities for just regular corporate purposes. And some of that has been M&A.
How much easier has it been for you to compete given the reduction in some of the regulatory overhang? And we've heard about this from a policy perspective. Does that really increase your ability to expand the lending book?
So, for us, what has happened with the regulatory environment or not, frankly, hasn't really impacted our ability to lend or not. We have been following our responsible growth mantra for many years. And from a client selectivity perspective, with the type of company that we cover in commercial banking, the regulatory environment hasn't impacted that so much. These are strong companies. They've got strong cash flow. And so we just haven't really seen that impact our ability to help those clients.
How much would it take in terms of Fed rate cuts for the clients that you work with to really accelerate some of their lending?
So, it depends on the company. It depends on the industry. We have clients obviously very interested in what happens later today. But it's not only impacting lending, it's also really impacting our corporate treasury teams that work with clients. And so if you think about what they're having to contend with, one has been around interest rates, and not just in the United States, but around the world. And so when you think about what's happened, in many cases, rates have come down where central banks have cut. In some cases, central banks have held rates flat. In a couple of cases, central banks have actually increased rates. So how do you manage all of that? And what we're seeing is another way that clients are taking that kind of volatility globally with their cash flow and turning it into a strategic advantage by managing it very effectively. And we're helping them with that in a variety of ways.
FX risk has to be another consideration. We've seen a lot of dollar weakness in a year where I think a lot of people expected dollar strength. How have they pivoted to handle that situation?
So a couple things. We saw clients do a lot in terms of onshoring, reshoring, nearshoring, call it what you want, over the last couple of years. And they did that to reposition their supply chains. And so as a result of that, they have been able to manage through some of the challenges that supply chain gaps have created. But it has created volatility with interest rate and FX risk. And so for FX in particular, what companies have done is to say, OK, how am I going to manage that? And what we're helping them with is looking globally at all of that exposure and then putting a net hedging investment strategy in place so that they can manage that effectively.
This has been one of the surprises of 25 so far. We came into the new year and we were looking for certainly tariffs, and we got tariffs, that's for sure. But as a consequence, we were looking for some dollar strength, and it didn't come. Dollar weakness was the feature of this story that I think was widely anticipated coming into the new year.
And to your question, and I'm still sitting here thinking about it, how do companies deal with this? Well, how much do they buy, say, an outpost in another country and just have no currency differential? I wonder how much that accelerates international purchases, given the sort of extra risk that is potentially an easier hedge by just being there.
Based on what Wendy said, we've certainly seen a lot of that so far in 25. Wendy, it's good to see you.
Thank you very much.
Thanks for being here. Wendy Stewart of Bank of America. Just how much of a difference will a 25 basis point rate cut make later on this afternoon? How much of a difference will 50, 75, 100 make to some of these clients?
It depends on exactly what the trajectory is, but it sounds like maybe quite considerably, but it depends where on the curve this goes, right? If this does unleash a rally like we've seen over the past couple of weeks in the long end of the yield curve, well, it could be quite a bit. And I think that has also been the surprise, at least of late.
We've been here for 2 hours now.
Yes.
I haven't heard a really, really strong case for a reduction of 100 basis points of the Federal Reserve based on the economic activity that this company is tracking.
Put another way, everyone who's come on the show has talked about an incredible reacceleration going on and stability, as well as corporate flexibility in the face of a lot of uncertainty.
In just a moment, we'll catch up with the man himself, the chair and CEO of Bank of America, Brian Moynihan. Plus, we'll talk about the latest data with Aditya Bharve, and we'll catch up with the Bank of America co-president, Jim DeMar. From New York City, this is Bloomberg.
Continue to expect that we'll see the 25 basis point cut delivered this week.
The Federal Reserve opinion is 3% is neutral. My view is 4% is neutral.
The big debate there is, do they show one more cut after September, or do they show 2 more cuts? And I think it's going to be a very close call.
The risk is that the Fed ultimately won't deliver as much as they should.
I don't think anyone would be completely shocked by, a more dovish bias here.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is the third hour of Bloomberg Surveillance live at number 1 Bryant Park, the home of Bank of America here in New York, anticipating a decision that I feel like we've been anticipating for a long time from this Federal Reserve, ever since we got that jobs report in early August for the month of July that really started to spook not just the market, but the FOMC. There's been an expectation this Federal Reserve will cut interest rates. As we arrive here at the meeting for the second day in Washington, D.C., as that meeting concludes, the real question is not if, the question is just how big.
And what do they indicate, given the changed composition in the Federal Reserve? Even though, as we've just been talking with people at Bank of America, it doesn't seem like this economy is falling off a cliff by any means, right? So if that's the case, what exactly is the incentive? What's the trigger point? What's the understanding of neutral? And this is the reason why we also get a statement of economic projections today. It could be very interesting, not only what they say, but what the dispersion of views are on that committee.
Some real questions, just how much that SEP is actually going to change. Unemployment really hasn't shifted that much at all over the summer. And this is a Federal Reserve that doesn't forecast payrolls. It forecasts unemployment. The expectation for a lot of you, I know, is that the dot plot shows an additional rate cut. So the two that were already in the previous round of forecasts. But beyond that for 26, I'm not sure how much this Fed can offer this afternoon beyond just risk management, or whether this Fed wants to be that aggressive.
Mark Cabana earlier here at Bank of America was talking about how there's this third mandate that suddenly is taking more oxygen out of the room, which is the idea of rate stability or moderate long-term rates. How much does that become a new third mandate that requires some additional tools by the balance sheet on the Federal Reserve that gets recognition and discussion today? And that actually could be the reason why people are jumping into the long end before, I don't know, something like yield curve control.
It's a better behaved bond market so far. Yields are down on the session by about a basis point on a 10-year maturity. Let's get the next hour set up for you. Coming up, we'll catch up with the Bank of America Chair and CEO Brian Moynihan on the latest leadership shake-up and a whole lot more. We'll speak to Aditya Bave as we break down the latest economic data, and Bank of America's new co-president Jim DeMar as we count down to that Fed decision later on this afternoon. We begin this hour with a leadership shake-up at Bank of America. Brian Moynihan recently naming Dean Athanasia and Jim DeMar as co-presidents. The firm writing in a statement, quote, Athanasia and DeMar will drive company-wide initiatives focused on long-term growth and returns and oversee Bank of America's 8 lines of business. I'm very pleased to say that joining us now is the Bank of America Chair and CEO, Brian Moynihan. Brian, of course, in London, and we're here in New York. You're actually in our home and we're in yours, so thank you, sir, for making that happen. Brian, let's get to this leadership shake-up because we've got a lot to talk about. 8 lines of business. 2 very prominent individuals in this bank, at this institution. How do you and the team plan to split up responsibilities?
Well, it's good to talk to you both, and thank you for coming to our great corporate headquarters. Hopefully they're treating you nicely out there. This is a recognition of 3 teammates, Dean and Jim and Alistair, and the contributions they made to our company, and bringing Jim and Dean to help me leverage across the businesses. And there's a lot of initiatives we conduct across the company, our growth work streams, our operational excellence, our AI initiatives and things, and I've asked them to come help me. Meanwhile, it also frees up space for that talent group, and you're talking to a lot of them today, whether it's Lindsay or Eric or Wendy and others that continue to drive those 8 businesses for us and own the businesses, own the responsibility for P&L, and there's a lot of talent at that level. So the idea is to bring them to help leverage my time, leverage the company's time, leverage the company-wide initiatives, and then let that talent that drives those businesses keep making great progress.
Brian, there is an obvious, perhaps uncomfortable question. Some people might have responded to this and just thought, is Brian setting up for succession? Or is this just about changing how the company's run?
Well, long term, we have one of the duties that I and the whole management team owes the board of directors is a series of candidates that have the experience to run this company over time. I'm not going anywhere in the short term, but in the medium term, but it takes a while to set that up and get people used to the size and scale of this company. So you all report all those ins and outs of succession. But the reality is we're a team and we're driving for it. There's a lot of talented teammates, and the board will have to make a decision someday based on the facts and circumstances at the time.
Brian, you talk about some of the new initiatives and looking forward to the bank, the Dean and the Jim that will be of the future partnering together. I'm wondering what you're hoping they can accomplish, whether it's the AI initiatives or beyond. What kind of projects you're hoping that they will spearhead?
Well, we have a lot of things going. For the last year, we've been working on some work streams to help drive expense efficiency and implementation of new technologies, and at the same time drive growth, how we take risk and continue to look at our risk parameters. And so what I'm asking them is and they've helped drive those while they've been doing their old jobs, and I've said, come do this full time, and that'll give us more leverage across the platform. Our company has a great reach. We have, we're all over the globe, and Bernie Menz and the team here out of London run all the international businesses for us. We're in a lot of countries, a lot of teammates around the world. We just announced 1,000 more teammates that we're building out here in UK, and they could help the company drive that and put the key of the top big company like ours is to work the seams, work the business connections. And so Jimmy and his capabilities as he works with the wealth management group and Lindsay and Eric on the clients that we have, especially in the higher end clients that he has relationships with who are hedge fund operators and things like that. So there's a lot of initiatives, but it's really about revenue growth, organic revenue growth, and expense efficiency, and also thinking through how technology applies. And it just gives me more power at the top of the house to join us, and these teammates have done a great job.
I imagine it's going to be united front at the Investor Day in November, the first one in some 15 years. You mentioned the CFO, now Executive Vice President, Alistair Borthwick, said this: the most important thing from our perspective is we feel like we've got an opportunity to close a relative value gap. Brian, can we talk about that relative value gap? Where do you think that comes from? What is it that you think perhaps investors don't fully understand?
Well, as you look at the company, you have a great organic growth engine. So we'll do 1 million new checking households, and our average checking balances are 4 times the industry norm, and we're building that up. What we're trying to showcase is what Bank of America is an organic growth machine on a very steady compounding basis. So if you look at the projections for our earnings growth rates by the street, they're faster than the average company as the balance sheet reprices and things go on. But what we're really trying to showcase is to put on the table basically the metrics that we run this company by across the 8 lines of business and how they work together, and then the international piece, and then AI and some of the other things we work on, the payments business, which is embedded in the lines of business but is a separate business. It really showed 3 things. We have a competitive position that no one else has. We just announced yesterday the largest small business lender. We have a competitive growth rate in the organic growth that's there, and then because of our the dynamics of our NII lift, which it will be growing, as we've told people, 6 to 7% this year, you're going to see the EPS keep kicking in and the operating leverage come into the business, and the return on tangible common equity keeps moving up. And that's what we lay out. But it gears off that good core organic growth with the right risk that we drive this company by.
Brian, as John was just mentioning, this is the first in 15 years. Why now? What changed for you? And is this going to be a new annual thing?
I think we have 35 analysts that cover us. We spend time at all the conferences. We spend time individually. But think about it, putting on the table where the company stands right now as we see after the pandemic and after the interest rate changes and after inflation fights and all that stuff. We see that people putting on the table where we are in organic growth and how it works together is critical. And I think, you should expect us to do it more often. We have a lot of connectivity to the people who actually own our stock and talk to them all the time. But this is a chance to sort of lay it all out so everybody can see it together. And to look at some of these initiatives that are unique, like our employee banking investment initiative, our Continuum, our Merrill Edge through Merrill Lynch and the private bank, and the ability for us to take a customer literally from their first bank account their entire life, and no matter what happens to them on an individual side, or a small business forming today that becomes the largest company in the world, or an individual trader that builds up a capability and becomes a hedge fund manager. The idea of these continuums and things like that are really important. And so we hope to put that on the table and make sure people see it, and then we'd annually update it, but sort of put a baseline on the table.
So, Brian, it seems like you're moving toward a greater degree of transparency, or at least availability, at a time where the president is talking about potentially moving from a quarterly reporting system for public companies to a 6-month reporting season. Do you think that would be helpful for you as a business manager if you had to report less frequently in terms of filing?
In the end of the day, we run the company along the principles of responsible growth and how we run it. So it won't change how we run the company. It may change how often we have to talk about it. And inherently, if you do 2 times a year versus 4 times a year, you'd save some money and some effort. But my guess is our investors are going to demand from us more constant reporting. So we'll see it all play out. It's an initiative that was talked about over the last several years. If it's going to get done, it has to be done the right way, so it remains in place. And we look forward to what comes out of the SEC in the process. But on the other hand, we are very transparent in what we do. We put a lot of information out there, things like our digital capabilities that no one else reports on, quite frankly. And again, with the Investor Day, we'll be able to show that and really challenge people to say, look, if this is what's going on, if you've taken a company that had 300,000 people 15 years ago that has 212,000 people today and applied that technology, just think as we start to apply AI more fully. We already have Erica, 3 billion customer interactions, but as that applies more fully, you'll see the ability for us to continue to manage the headcount in the company well while the revenue keeps growing. And so I think we'll report on that more often than every 6 months is my guess based on the demand of our investors.
Lisa, I imagine some CEOs might welcome this.
Yes.
Even if some investors don't.
They might welcome this, but will they be allowed to actually follow it by their investors? And that, I think, is what Brian is alluding to.
I think investors will demand much more transparency. Brian, I want to talk about an initiative close to your heart. The news that we got about 25 minutes ago, that you're increasing the minimum wage to $25 per hour. I remember a very early conversation with you, and this is something you're very proud of. This has gone up from, say, 15 several years ago. Can you talk to us about why you've maintained this commitment to driving the minimum wage higher at Bank of America?
Sure. So let me set 2 things up. One, over the course of today and tomorrow and yesterday, we've announced a series of initiatives. One is to locate 1,000 new teammates in the UK that will work in our operations group, and that was announced by Bernie and Tom Scrivener. A second one is to recommit to our military hiring at Bank of America, 10,000 military veterans over the next 5 years. We've done this from time. We have about 20,000 working to increase that. Another is to increase 8,000 people from community colleges to present an opportunity at Bank of America to further their career and get into skills-based training. That's a doubling or tripling of what we do today. And then the 75 branches that we're deploying and the teammates there. And the third piece is the minimum wage. And so we started on a travel a number of years ago with the view that we want teammates to come to Bank of America with a career mindset. So join us. So today we're announcing $25 an hour, which is $50,000 for a starting salary across the country, and higher in some places where the prevailing wages are higher, obviously. But what that gives a teammate a chance to join our company, spend their whole career here, and support their families. So not only is it the $25 an hour minimum starting wage, it's the benefit structure, which is a full 401k match, a full benefit cost that for the teammates in the brackets of $25 an hour, we basically dropped their premium coverage in healthcare in 2012 from $500 a month to $250 a month for family. Have never raised it to provide great health care for them, and then our child care benefits. So it's a package. So where does that pay back for the investor? Where that pays back to the investor is the turnover rate when we started this program in the high volume operations groups and the branches was 20%. It's now down to basically 10% or so, and even below that. That stability and that career mindset allows us to do a much better job for our clients. And what you've seen is the attrition of teammates has gone down. You've seen the attrition of customers gone down, and you've seen our customer scores dramatically improve over the last 15 years due to this relentless pursuit to be a career employer. So yes, we're very proud of the $25 an hour, but there's an economic benefit for the shareholder, and there's a great positioning for the teammate at the same time.
Brian, I wonder also what it says about the situation, the current environment. It's very strange that we're going into this decision with the Federal Reserve talking about 25, 50 basis points of rate cuts and maybe more. Your team has talked consistently throughout this morning about the amount of resilience they see in the US economy. Pay hikes like this aren't the kind of things you would typically see in a recession. What's your sense of just how tight or weak, loose this labor market actually is right now?
Well, I think if you think of 23 summer, the Great Resignation, it was very tight. Then it loosened up, and it's more imbalanced now. So our turnover rate in our company is running about 8%. Even in places like tech programmers, of which we have 30, 40,000 of them. We're running in double digits is now in 3-4%. And what that shows you, the bid in the market's different, which then shows you people are being more careful at headcount. And you heard some of my colleagues talk to you about that. So I think the unemployment rate is still low, but I think businesses are being much more careful in managing their headcount for a number of reasons. One is to get by understanding how all the policies are coming at them fit together. I'm talking about U.S. businesses mainly. And then secondly, they're also making sure that they're careful, and I heard some of my colleagues talk to you about this earlier. As you think about this application of technology, we know what this does. We have half as many people working in the consumer business than we did a decade plus ago. We have half as many people working operations. We know that as these technologies can apply to our legal department, our finance department under Alistair, our risk department teammates, we know that if we manage the headcount carefully, we will do it. So we look at headcount very carefully and say, don't hire people unless you really need them. Not because we're trying to save money, because frankly, from a human management capabilities, we don't want to have people who won't be able to have a career here. So we just hired 2,000 plus kids from school. So we brought in all those new talent. We'll hire these 10,000 veterans. We'll hire these 8,000 people from community college. But each month we get the right to make a decision on whether we're going to hire about 1,300 to 1,500 people, and we're just managing that very carefully. So I think we're an example of what's going on in the broader labor market. You heard Wendy and my colleagues talk about it. All the companies are trying to manage this and make sure they get the headcount right, because that is a major expense for a lot of firms.
Brian, about a year ago, you were talking to us about the ramifications of AI and the explosion of efficiency. And you said that you think that headcount could remain about the same at the bank, even as the business continued to expand just in total size. I'm wondering if that's shifted, if you still see that as the natural progression of the relationship between the adoption of machine-based learning and the relationship to your headcount.
So there are two things. Now, one, I think the time we were talking, we were probably closer to 216, 17,000 people or 213,000. So I think we'll be managing this down. But remember, at the same time, we're managing out through operational excellence and efficiencies of applied technology. We are deploying. So we're adding, Wendy's added commercial bankers in all the markets, and Sharon and the team added business bankers in all the markets, and Katie and Lindsay and Eric adding financial advisors and private bankers. So we're adding front-end people, sales traders, et cetera, to keep building out our capabilities. And so there's a reinvestment going on. The key to that is really redeploying people and reskilling them. So when we bring these 2,000 plus teammates in who just joined us in the last month and a half, we have to be more mindful about training them along multiple dimensions than we might have been 2 or 3 years ago. So I think, yes, I think ultimately the human being content of our work product would probably come down. But if we manage it right, it'll be flat to the same amount of people, maybe down a little bit, but all paid more and all being applied to the highest value tasks where, frankly, the machines can't do the work. And that's the important thing. We know these. We know what this AI can do in today's world. Erica has been out there for 7 years, 3 billion customer interactions, 20 million customers using it all the time. We see what it could do. We took that and put it in our commercial business. We took that and put it in our internal process. We got other models to help in Jimmy DeMar's business in terms of a thing called Optimus and things like that. There's a lot out there, but what you're learning is it's still augmented intelligence, and that will be what's driving the near-term efficiency. So yes, I think the headcount management is one of the core tasks that managers have to take seriously.
I'm just wondering, Brian, as you train all of these new students, how do you make sure that they stay with you and don't go to some of your brethren across the way in the private asset sphere?
Well, we provide them a good opportunity, and look, they can go other places, but we've been able to retain enough that we're completely happy. And look, even for our clients, frankly, if they hire our teammates, it's not the worst thing that happens in all our businesses. But the reality is that we want these teammates to have a career mindset. In October, I'll celebrate our teammates have been with our company 50 years, 55 years, 60 years, et cetera. And you hear their stories, and their stories of I joined this company, I worked in a summer internship, I may even work part-time during college. I became a full-time employee, and I started doing this, and now I do that. And those are wonderful stories. And we have them tell those stories to our teammates to show you that you can have a long-term career at a company like ours, and that's what we want our teammates to come in with. They may not stay in trading or investment banking or corporate banking, but they'll have long-term capabilities here. And you've seen that even at the top of the house. Alistair was a capital markets head, and now he's the CFO, and so that goes on throughout the company.
they swear an oath of allegiance.
Yes, exactly.
Didn't you see them lining up this morning?
They came in.
Before they come in.
I promise on my cappuccino, which is very good, by the way.
Brian, I want to talk about the main event that takes place later on this afternoon. I'm not going to ask for your guess. I know how much you respect the team behind me and some of the official forecasts of the bank. I want to understand from your perspective, looking across the 8 lines of business, whether you see an economy, market activity that demands a rate cut from this Federal Reserve.
Well, you've had the benefit of all our experts, and we have the talented, extremely talented research team, and you also have some in line of business teammates talking about what they see out there. I think you have to back up. If you think about last year this time, the projected growth rates for our team was probably 100 basis points higher than it is today for 25. And so that deceleration of growth, the prediction that was largely based on a couple things. One, rates would stay higher because inflation was kicking in, the impact of the uncertainty in tariffs, et cetera, et cetera. All that's coming through the system now, so you're seeing some certainty fall into place on this. And I think also inflation was coming down. And I think so the tension the Fed has to deal with, and you've been picking at it all day, is the tension between a higher inflation rate and ultimately where Fed funds could settle in at. And so whether they do 25 basis points today or 50, people have to keep in mind the growth rate in the economy was brought down, and now it's starting to go back up. So next year is predicted to be better than this year, and the year after is better than that. So you hear our teammates talk about the economy growing back out. And that then means we're on the other side of it. And so the Fed has to adjust to the inflation picture as it got more in control. They can come down. They came down 100 basis points already. It can keep coming down, but they got to be very mindful of the inflation side. And so I think when the people get in the room and they see the data, they have to think it through. The big news since that you referenced earlier was the labor market's gotten softer, so that gave them concern. So I think the market believes and our teammates believe they'll cut rates. But I think the key for people is deceleration of growth, and will the growth reaccelerate? And you hear our teammates seeing that. We're seeing consumer spending strong and all those things, which would indicate we'd see the acceleration. Next year's better than this year. Unemployment is not expected to go up a lot, even though the employment picture may be softer. But the most important thing is the long-term interest rate scenario people projecting is a more normal rate environment that we saw before the financial crisis. Say 3% plus or minus on the Fed's fund rate, 4 to 4.5% or so on the 10-year rate, and a curve that's not inverted, that's normalized between that. The important thing is to get back to more of a normal environment, frankly, with maybe a little higher inflation, because the great debate about 2% is something you can get lots of experts talk about. A little higher inflation, a little faster growth, and then, frankly, that'll help with some of the debt carry and other things going on in the U.S. economy.
Brian, it sounds like next year you see the bigger risk as potentially a surprising bout of inflation and some sort of downturn. Is that correct?
Well, I think the question is how do you tolerate the inflation and the nature of it, what's come from. But, and I think that's the tension of all this, I think, is next year as you get to the second quarter, as these policies are now in place and are behind us, are you going to see the acceleration in growth and where our businesses start investing even faster? If you listen, I think if you asked Wendy about it, she would tell you her commercial customers that have lines of credit are still borrowing less as a percentage of their availability than they did in sort of the 17, 18, 19 timeframe, where rates have been moved up and the economy was growing. And so why is that? They're probably not seeing quite the opportunity. And so they're trying to sort this all out. And, I've got the benefit and the honor of leading a company that has this talented team behind us and all the talent and money we spend on research and everything. If I'm running a company that the three of us owned and it was a manufacturing company, I got to figure it out all myself. That tends to hold people back. So that would be the case for acceleration. And then the question is, if rates stay a little higher and the growth is higher, that's not a bad place for America to be.
Brian, just before you go, I wanted to sneak this in. One final question. Whose door do I need to knock for World Cup tickets? Who makes that happen here?
Well, you didn't bring David Tyree on, who's doing all our marketing and work. And so he's the guy that's got control of the tickets, but he does a great job for us. Look, our relationship with FIFA, we did the Club World Cup, which was sort of the warm-up, and next year, and you'll see us accelerate our efforts. We have great capabilities for our clients. But most importantly, this is a chance for America to showcase football, soccer as we call it. It's a case for these cities that are hosting to put on a great show. And I think I can see the enthusiasm building. And you're not the first person that's asked for tickets, John.
David Tyree. David Tyree?
Yeah. Okay. Come on down.
Brian, thank you, sir. Appreciate it, as always. It's good to see you. Enjoy London. Brian Moynihan there of Bank of America. Let's take a step back and just think about this economy right now and what we've heard from this team in the last 2 hours and 30 minutes. It's not an economy or a market that's screaming for an aggressive rate-cutting cycle. I think that's the message that we've received so far this morning.
And the question is, do you still have that reticence that's pulling back the inflationary potential, given the fact that companies haven't been investing as quickly? And that's why I'm actually really excited to speak with Jim DeMar about just the M&A cycle, just how much banking activity is continuing to accelerate as people get that confidence underfoot.
I imagine the phone's ringing for David Tari as we speak.
Yeah, exactly.
Right? Yeah, I think he's going to be busier today than maybe expected. OK, coming up, some housing data. We'll get the view on the economy and the latest economic data with Aditya Bale of Bank of America. From New York City, live from Bank of America, this is Bloomberg. Equities just a little bit softer on the S&P 500. The opening bell about 60 minutes away. Got a few things to do over the next 30 minutes. We've got to get you the latest economic data, but also a developing story in the nation's capital in Washington, D.C. Let's head down to Tyler Kendall for more. Hey, Tyler.
Yeah, hey, John, good morning. Well, mortgage documents reviewed by Bloomberg News and out this morning show that the Treasury Secretary Scott Bessent entered into a conflicting agreement obligating him to occupy two separate homes, one in Massachusetts and the other in New York, as his primary residences. This is from 2007. Both mortgages were signed on the same day and issued by the same lender, Bank of America. One property in Bedford Hills, New York, the other in Provincetown, Massachusetts. But evidence shows that the bank wasn't actually relying on these pledges, never actually thought that Bessent was going to occupy them both as his primary residence. And we did get a statement from one of Bessent's lawyers who actually had power of attorney and signed these documents for him, saying in part that Bank of America was fully aware the Massachusetts property was not a principal residence, going on to add there was, quote, absolutely nothing improper about Mr. Bessent's loan applications. And mortgage experts agree, telling us for this story there is no sign of wrongdoing on Bessent's part, but rather this could demonstrate how discrepancies on home loan applications aren't necessarily proof of fraud. And Fed Governor Lisa Cook's situation does appear at least partly similar, though not identical. Documents reviewed by Bloomberg News over the weekend show that on at least one of the properties, it was listed as a vacation home and that the lender in that instance did not expect her to occupy that residence as her primary residence. Of course, John, as you know, this is playing out in the courts. An appeals court on Monday had ruled that Lisa Cook could retain her seat while the broader questioning of her firing ultimately plays out. But that court found that President Trump very likely violated her due process rights to defend herself against these mortgage applications. John, we are preparing for the White House to ready their Supreme Court appeal to that decision.
Tyler Kendall, appreciate the update. Tyler Kendall there down in Washington, D.C. Going to keep it on housing, but the kind of data you might be more interested in, housing starts, building permits. With the latest, here's Mike McKee. Good morning, Mike.
Good morning, John. And it's not particularly good news for anyone in the home building industry. Housing starts dropped by 8.5% in the month of August. And the July 5.2% increase was revised down to 3.4%. So the housing industry weaker than we thought. The building permits forecast is even weaker than we thought, down 3.7% during the month. Instead of the 2.2% last month. It looks like at this point, builders are still on the sidelines and not moving, which has been something that President Trump has pounded on in terms of trying to get the Fed to lower interest rates. Mortgage rates have come down in the recent months to about 6.4%. But that's not where they need to be, according to builders. And if they get down into the fives, that might start people moving, and that might get the industry moving again. But that's going to take a little bit more than a quarter point cut from the Fed.
Mike, we've got a full